about Ethernet. GM. It's good. 2 weeks. There was a war that happened. We went to war, achieved world peace, all while I was gone. Yeah. Feels good. It feels good. It feels good to be back in New York, too. It is blisteringly hot. I think it's going to get up to 96 or 99. It feels like 102. My headband, no, but I did bring something that you have as well. The sun is out in New York City. It's summer in the city, brother. The market is also blistering. Sure, yeah. M-Team. I mean, what can you say? He came over to the tent a little bit earlier today. He is the youth in crypto, and I think as the space has matured a little bit, everyone has seemingly gotten older, but we have this new fresh crop of young talent, and M-Team is just the star of the young talent. Mm-hmm.
Infinex from is going to be a marathon.
It's a full marathon. We're going to stay hydrated. We're going to stay within ourselves. And we're going to talk to some brilliant people. I'm going to hope to sort of restart a fire inside of us, like something that we got back. And we were talking about this the other day. It's not coming out of nowhere.
Oh yeah.
Like, you remember 2020, 2021 when we started DeFi Slate, now the Rollup?
Oh yeah.
It was like we were learning something new every single day. Yeah. Fulfillment to not only learn ourselves, but also to pass along that information and sort of translate these very esoteric topics into things that people were not only absorbing and understanding, but also then making transactions and making financial decisions as a result of it. And it was a really strong sense of fulfillment to pass that knowledge on. Since then, it feels like we've gotten forks of forks. Everything is a copycat of one another.
Yeah.
And so there's no net new knowledge.
Yeah.
I'm hoping that today and this entire conference changes that. We start to release some of the true knowledge.
Yeah, I agree with you. Well, we're going to open this up talking about our select partner in just 1 sec.
Sure.
I will be back here with you in a sec, Rob.
Yeah.
For now, you got the timeline.
Let's hold it down. Let's. I think also, Permissionless Day 1 was an incredible experience. We had several speakers here inside. 𝘗�13 was inside doing a Q&A with 𝘗𝘳𝘺𝘱𝘵. Also, shout out 𝘗𝘳𝘺 for just putting on an incredible event. It's amazing to see Blockworks' success. They've been building in the space just as long as we have. They've tried to go as big as possible. There's been an incredible team behind us. Julie from the Blockworks team. There's so many people that go and put this show on behind the scenes that you really get an understanding of how deep this goes and how many people are instrumental to this process. This is all about bringing crypto and blockchain mainstream and crossing the chasm. And so, again, 𝘗𝘂𝘺 was here yesterday doing a Q&A with 𝘗𝘺𝘺. He was full in good spirits, doing what he does. AI is a strong presence. Some of the people is day one. AI is a strong presence here, not only in sponsors, but also in speakers and attendees. We also have strong crossovers. As you can imagine, coins are a presence here. It almost feels like this secular where there's advantages and progressions that are happening in pockets. So you don't see this broad landscape of expansionary monetary policy, everything going up at once. It's like now, and it almost again feels like you can sort of and outperform by an order of magnitude. And this is where the men really separate from the boys in a certain sense, that you are able to get this dispersion. I think this is happening in both the crypto market and the general stock market. What we're seeing is the ability to pick winners is more and more important, because again, when it's easy to make, everyone's getting the same time, that's when one and you're trying to outperform. This is when really start, and so I think we're going to see that market run that occurred in pockets. The pockets that we're seeing it now, we're seeing it in institutional adoption, and it's like, okay, well, we're all in it. We've been in it for years. Who's going to buy our bags? Well, you look around and you see bankers, you see institutions, you see law firms, you see social media companies launching stable coins, you see LLMs and generational AI platforms that are battling for market share. These are the companies that are going to come into the industry, and they're going to take what we've built, and that's going to continue to adopt this technology. And so we're going to continue to see this over and over and over again. We're just continuing to see things that make so much sense in the market. We're going to continue to see them become more and more adopted. One great example of this is AI. And so we've been talking with projects. There's chatbots and LLMs that are launching execution-driven LLMs, fully self-custodial. You can custody your own assets, and the AI can execute transactions with your permission, but on your behalf. They're doing this with 300 assets across several chains. This is something that's going to continue to proliferate. And what we're seeing is that some infrastructure providers, we were talking with an infrastructure provider yesterday that was very focused on orchestration, and they're going and they're launching their own app. And so again, they're launching things that are built upon their own infrastructure, but they're going and being the change that they want to see in the world. They're not relying on an outside company to come in and build the app on top of their tech. They're going to just build the app themselves because they know their tech the best. And so we're seeing this progression from labs companies and infrastructure providers. There was an onslaught of infrastructure. Why do we need another L2? Why do we need another piece of infrastructure? Where are the apps? Yeah. Well, it wasn't new builders that came in and built the apps. It was the teams that built the infrastructure that have a very intimate understanding of the infrastructure. They know how to harness the power of that infrastructure the best. They said, okay, we did it. Yeah. We don't need more infrastructure. We built the infra. Yeah. Now we're going to go and we're going to build the app on top of it.
I agree. And we have an infrastructure builder, application builder, first up, M-Team. Yeah. Before we get into that, we got to shout out EtherFi, the title sponsor of the Rollup TV Live at Permissionless. I'm a user of the EtherFi card on my. The physical cards are coming in 1 to 2 weeks live. It is the best crypto card I've used, non-custodial. I'm borrowing against my Ethereum, using that capital to spend on subways, on food here in the city. Thoroughly enjoying it. We have a special link at the bottom of our screen. You will get 5% back on your first $1,000 spent if you use our link. That is in the bottom of the stream, guys. Help us out. Help out EtherFi. Free $50. Yeah. It's an amazing product, and it's aligned with. Without further ado, let's get M-Team on and bring him up. M-Team is from Spire, a yapper of many descents. The man on Twitter with a Kaido score of 1 million. M-Team, how you doing, man?
I'm doing great, Andy. Thanks for having me.
How's the city treating you so far?
It's nice. It's nice. I just got here a couple hours ago. Took a train up from Maryland. Looks great. It's a little bit hot outside, but I like it. Enjoy the weather.
Yeah, man.
Absolutely.
So everybody wants to know when ETH's going to 10K.
So I never do price predictions, but I did call the bottom.
Okay.
It was pretty good. I said ETH under 2K was a discount. I'm not sure like how much of a discount it was, but when I look at the next like year, 2 years for ETH, what I see is on 𝘬𝘳𝘺, which is an Ethereum on a lot of Ethereum getting chain interest share doing to Ethereum, and at least in my experience, mindshare tends to either precede a price increase or come right after a price increase, and obviously we haven't had that for ETH yet, and so I'm definitely looking to the next year or so for some buying.
So, M-Team, I was at a dinner yesterday with quite a few VCs in the industry, and they sort of were discussing kind of like the early crop, which is when Andy and I came in, and has since matured. Now we've gotten older. You're part of kind of this fresh new crop, this crypto youth, if you will, and the notion approach from this generation is like, don't believe in anything. Like anything can go one which way or the other. And so you see this, and they were talking about it from a trader perspective. They sell 3x, 4x on these meme coins, when in reality sometimes it goes 50, 20, 50x. And so, but they've been trained, don't believe, because it could all come crashing down at any moment. You've taken a very fundamentally, a very different approach. You've chosen to believe in ETH. So I'm curious, what drew you to ETH, and why do you have so much conviction in Ethereum?
Yeah, so I mean, it's not even about the tech for me. For some people it is, I know it is. I think I've been more convinced by like 𝘮𝘪𝘴𝘬 or other people on Twitter than a lot of my companions in the ETH land. For me, it was the community. I met Justin Drake, who was like the first like big name person that I met in crypto, and he took me from 0 to 1. I got on research calls and I gave some presentations. I got hired, started a company, and so a person like that, Justin, who works at the Ethereum Foundation, a major representative of Ethereum, is really giving me a chance, right? That's what motivated me. That's what got that first kind of like into Ethereum. And then from there, I just met so many cool people. Bread, for example. Bread, he's at Mega ETH. He's sold on Ethereum. I'm sold on Bread.
Yeah. Facts.
It's just the community for me.
Mm-hmm. Yeah, dude. I mean, you guys have been going back and forth on Twitter for a while, and just kind of having
incredibly neutral base rollup based on the Tyco base. They raise 1,000. Hit their milestone yet, and they're good. But what it's telling me, based on that I saw, is that there's for like Katana, right? They have this kind of VM blending, they call it. Really great team. I think the pitch for them is that like general purpose, but with a major differentiator, which is that we have interoperability between multiple different VMs. And that narrative, I mean, it caught my attention. I think they've been doing a good job of getting application developers on board as well.
Nice.
We invested in Fluent as well, and so I think this is again part of this multi-dimensional vision, which is also aligned with the modular vision of all of these separate sort of blobs, if you will, of state, but expressive VMs, all of these different unique differentiators that make these different pieces of infrastructure special, so that ultimately there's purpose-built applications that can be built as a result of these, and I think app chains are an important part of that as well. And this is also on the path of Ethereum's future. You have a debate later today with Dan. You're going ahead.
It's me. He's
in the way here.
Yeah, no, I mean, I think I do agree.
Okay.
I love their line, which is like, if your auction doesn't happen on-chain, it's going to happen off-chain. Or excuse me, the other way around. If it doesn't happen off-chain, it's going to happen on-chain.
Yeah.
And I think that's what we see, right? Tons of spam. I will admit, I sent like 30,000 transaction on Blast a couple of weeks ago because I was testing some active address spammer bot.
On Blast?
On Blast.
Okay.
Because the transaction fees are super cheap.
Yeah.
It's a dead chain, that's why.
Yeah.
And I tell you, the amount of spam that I can see in the mempool when I'm doing something like that, or if I'm just searching through block explorers, it's crazy. It's crazy. And I think something that people often don't realize is that it's not just the TPS of like your centralized sequencer. It's also all of the infrastructure around it. I think MegaETH has done a great job talking about this, but like your RPCs, your indexers, all of these have to keep up with all these spam transactions. And so we can't just like cross out all the transactions that revert or do nothing. We have to keep track of these because they're going to get put in a dashboard or whatever. And so it slows everyone down. The hot path is not always the chain. Sometimes it's some of these other service providers as well.
I wanted to ask you about the solo stakers, because it seems that the EF and Ethereum community in general has been really, really fixated on keeping these node requirements for solo stakers very low in order to stake some ETH on a Raspberry Pi, right? And that is bottlenecking the performance, the block times, like so many things about the performance of ETH, which causes it to be slow and expensive, right?
Agreed.
And fundamentally, if we want ETH to be cheap and fast, we have to get rid of this obsession around node requirements being low so that everyone can be a home solo staker. Are you solo? I'll be honest, I'm not solo staking ETH, right? So I don't have a very strong connection to low node requirements. Are you solo staking? Do you think this is an important function for Ethereum?
I'm not solo staking at the moment. I attempted to set up a Rocket Pool node like a week ago, but got busy with something else. I'm going to finish it when I get home from the conference. My take on this, I think we got to back up and start from really first principles here.
Okay.
So 𝘗𝘠𝗦 will tell you your node requirements can be whatever you want, right? As long as you can put it in a data center and it's not more expensive than the revenue you'll get from running that validator, it's fine. Because asset issuers will be able to run those validators.
Yep.
Now, the place I think 𝘗𝘠𝗦's coming from is that a lot of on-chain applications that he's thinking about are tokens that have issuers, right? That have people who can do exchanges with on-chain versus off-chain representations of an asset. And so that thesis, I think, is demonstrated pretty well in Solana, right? They're looking at some of this real-world asset stuff. They're going big on stablecoins and trading. And for stablecoins, you have an issuer that is, probably Circle or Tether. It's very easy to get a hold of them. And it's easy to think about that mental model. On Ethereum, we have this idea that we don't want to have any dependence on anyone off-chain. That means there's no issuer. And if there's no issuer, then you need some notion of whoever is whoever this on-chain state is important to needs to be able to verify the network. That's called running a node. It's not a validator. The tricky thing here is if we have a light node set up like Celestia, then we can get a lot of the way down the line there on just getting, on your phone. I have a Celestia light node on my phone.
Yeah.
If we have a something that's a little more beefy, you can put it on a Raspberry Pi. That's a good step. But then we have to back up and say, what's really slowing us down here? Like what part of this is slowing us down? I think to a large part in Ethereum, it's not solo stakers, it's not solo validators, it's the proposing duties that those validators are doing. And so if you have a poor internet connection, or you have a lot of latency, or you just go down because your internet goes out or your electricity goes out, then you're slowing down Ethereum quite a bit. And I mean, I'll mention we have like 1 million validators on Ethereum. That's way too many for the kind of scale we want to achieve.
Yeah.
We have to hone that down. And so I say all this to kind of get at the point that the validator question is one of who is running the node and why do they need to run the node. If it's an issuer, they have billions of dollars on chain. They don't need to worry about these node costs. If there's no issuer and you need to make sure that you have your self-custodial tokens in your account, then maybe you do need to run node, and we have to balance that. The one thing that I absolutely have to mention, or Justin will kill me, is that anything I say about eliminating solo validators and solo proposers on Ethereum today is temporary, because we have a plan with the Beam chain for what Justin calls feather staking. So this is a Google Pixel smartwatch. In 5 years, I'm going to be able to run an Ethereum validator on this smartwatch.
Yeah.
Just a mobile data connection, and I'll be good.
Is that because the smartwatch hardware will get better and more performant, or is that because Ethereum will become lighter to run on a piece of hardware?
Lighter to verify, yeah. So we have
with
these,
ZK?
With ZK, exactly.
Okay.
So I'm looking at teams like SB1, this is Risk Zero. ZK Singh had this huge announcement the other day. I'm super excited about that. Airbender is awesome. And yeah, all these things combined, we can get into native rollups, we can get into snarkifying the layer 1.
Got it.
We can package all of Ethereum, all of the native rollups, all the base rollups into one tiny proof that takes a millisecond to verify. Put it right on here.
M-Team, thank you for joining us today. Quick segment, great. Good luck on your debate with Dan. Wishing you the best there. And we'll see you soon. Enjoy the city. And stay nice and dry out here today. Stay cool. Stay hydrated, all right?
Appreciate that. Thanks, guys.
Cheers, man. Thanks for coming.
What's your thoughts there, Rob?
Fresh. Don't forget your backpack, M-Team. Yeah, right here. It's all right. Everything's live. We're getting all of this. We'll see you. Good luck at the debate. Fresh young crop. I mean, just super smart.
Yep.
Absolutely. I mean, it makes me. I'm excited for the future, not only of Ethereum, but also this industry in general, that we have a young generation that's not obsessed with meme coins. This guy's building and we invested in M-Team, and he's doing phenomenal. He's high agency. That's what you want to see in a founder, right?
Yep.
And he's going and taking it upon himself to research, dig super deep, become more well-versed than someone who has a Harvard MBA in Dan Robinson and can go toe-to-toe.
Yeah, that's going to be an interesting debate. I kind of wish we were going to watch that one. But
I'm sure all of this is recorded, as is our show, right? So anyone who wants to check that out, come back and watch this. Check us out, come back and watch that, right? It's a great day out here. It's a great day to be in the industry.
Up next, we got Constantine from Blockdaemon. I think he's here in the building. Let's get him up here, get him on the show, and bring him up. Let's do it. So Constantine's building Blockdaemon. He's a CEO. They've been working quite a bit on the regulatory side. Genius Act, everything in between.
Hey guys.
Constantine, good to have you, man.
How's it going?
It's good.
Yeah.
Staying cool out here.
I mean, guys. Yeah, you got the whole model thing going, which I like.
With the shades.
Yeah.
Well, we'll take them off. For this one.
It's okay.
Shades
I like
and fans.
Yeah. You good?
Staying cool, staying hydrated.
Yeah, man. So you have a fireside today with Jan.
Yeah.
Are you ready for that?
Oh, I already had it.
Oh, you did?
Just before this.
What was the key takeaways there?
Basically, Janos, he said that we're the best and
Ever.
ever.
Yeah.
And no, I mean, we talked a lot about the challenge of crypto founders to navigate in crypto markets that are so volatile, because there's always the next juicy thing investors see. And so we were talking about our shared experience when everybody was like, hey, you need to build an L2, and oh, you need to launch a token, and oh, now it's like Circle IPO, it's like, you need to go public. Like, you know, like there's this constant sort of, which is by design in crypto. We have the tokenization and volatility to attract developers to build things, which people sometimes forget. Like, we need the tokenomics, because otherwise this doesn't work in open source networks. And so, but it does create more pressure to be a little, you know, off the shoot from the hip.
Of course.
And because specifically investors, traditionally, they like the traditional SaaS model, where you can do discounted cash flows with like, oh, 7% growth, bum, bum. You know, like that makes capital providers very comfortable. And in crypto, obviously, you're operating like this. And so I think there's this disconnect a little bit with how LPs and venture capital assign value projections and liquidity to crypto assets. And then the nervousness that very rightfully creates, right? Which is like, hey man, like, why is revenue down 60%? It's like, well, Ethereum fell 60% in a month, you know, like, and so it's just like trying to make them understand that, I mean, and they do understand it. It's just not fun to understand. You know what I mean?
And I mean, in addition to that, we've had this regulatory landscape in the States that has been really tough. And recently, you've been kind of writing some thoughts about that and just kind of commenting on it. I'm curious, like, now that the Genius bill has gone through the Senate, you know, how does that help 𝘗𝘗𝘓𝘗𝘓? How does this better regulatory environment help what you're doing? And I'm curious who you think outside of 𝘗𝘗𝘓𝘗 as well is like some of the larger beneficiaries of this positive regulation.
Yeah, for sure. I mean, first off, I think the Genius Act in itself, right? Like it's as a bill that is going to get turned into law around something that's inherently crypto related and native to some extent, is massive, right? And so because what it does for us is the stable coins and stable tokens, like you know, they're interesting. They're obviously the most going back to what I said, because they don't have volatility. They bring a financial side to the existing capital markets that they can understand, and so it's like crypto, but it's not as crazy.
More familiar.
That's right. And so I think, so to me, it's an on-ramp, really, for institutional investment. And what it means is that people get exposure to crypto-native assets. It means that lawmakers get comfortable with crypto-native assets, and then the idea is that, you know, ultimately more regulation gets built on top of it. That basically, you know, figures out how to borrow and lend against crypto assets in an open, decentralized, 24/7 way, right? And so it's basically the DeFi stuff, it's the earn and yield stuff around staking, and also network and transaction fees. And so clarity around licensing, where this revenue gets aggregated. One of the big things, you know, we've made, we try to tell the current administration is that, for example, the structure of architecture and understanding where money is made in crypto is really important for lawmakers, because most of the money gets made in transaction fees, network generated fees basically, as well as staking, you know. And so, but these fees were basically pushed into offshore entities that don't reside in the US, right? And so how do you actually get those back, right? Like, and that needs some market structure alignment, because there's no incentive to bring them back. And so we're always trying, and you know, the selfish case here is like, well, if you stake with a US native company, so at least the yield revenue rolls up into the US, right? And so now the reason why that's a little mischievous on our part is we're the only US domiciled staking company, because, I mean, not by, like, because we couldn't escape, but you know, we had to stop our consumer staking efforts in 23. All my competitors in the staking world are non-US entities at this point, but they sell heavily into the US market, right? And so you're kind of like, but for me as a US company, it's a lot more expensive to exist. I need audited financials. I need a lot of things to survive. I had to find lots of different banks because we got unbanked, and like, and so the cost of business is higher, and that has created a world where all this infrastructure and network fees were pushed out of the US, and it will need a lot more to bring that back in than guidance around how to enable a Robinhood or a Coinbase or whoever, PayPal, to sell you Bitcoin and earn yield. The lawmakers need to understand that underneath it is where a lot of the volume and revenue goes, and that needs to sit on nodes and infrastructure that is owned by US entities, so taxes roll up here basically, right? Like, and so that's an interesting challenge.
So given that Blockdaemon is a US domiciled staking company, I take it that you're in a position to capitalize on an opportunity that I think everyone's kind of like looking from the outside looking in, and that is staking the ETH in these ETFs, right? So we've gotten so much inflows through these ETFs, but right now none of that is deployed on chain. None of it is productive capital. It's all just sitting there.
It's actually a problem, by the way, but we'll talk about it. Yeah.
Well, and so I'm curious,
why is that a problem? Yeah.
how would you solve that problem, right?
Especially as like Cardano's going to go on ETF, Solana is, I think Avalanche is going to get approved, Sui might get approved.
Do you
all these proof of stake networks.
Do you anticipate that the capital sitting in these ETFs will become productive capital and will contribute to network security and therefore earn staking rewards? Is that a future you see for ETH in these ETFs?
Well, what I would say is it's a future I would like to see, first and foremost. I think what we've seen, actually, one of the reasons why I think actually a lot of metrics in crypto are actually not that great right now, ironically, is because most of the external capital flows into ETFs that remains off-chain. Right? And so basically there's this disconnect of like there's a lot of volume moving into ETH and Bitcoin, but it gets funneled into ETFs that basically sit side chains, right? Like they sit beside the chain. They don't really are active in the network. And so now we've created that reality in the US because there wasn't really any guidance. And so we want all that money to be on-chain, right?
Course,
and so
exactly,
and that's part of that actually legal framework that people need to understand and that lawmakers need to understand, so that we incentivize and provide mechanisms for those ETFs to actually also stake assets, for example. And so that happens. I think the question there is obviously, again, it goes down to law, right? Like, so the way the lawmakers think about reserve requirements of these ETFs, right? It's like often staking has an unbonding period. And so there's like, so they're going to be like, you can't stake at all.
And that's been the problem, right?
Right,
Yeah,
and so it's just
yeah.
like you can stake a certain percentage, and then how does that work? And so a lot of it is education, but it's obviously not a technical issue. It's a pure regulatory issue, and I think the other way to counter it is to also really work on launching and continuing to explain DeFi and self-custody to people, right? Which is actually another thing I guess I'm struggling with, right? Like as a company, we're all about self-custody and basically DeFi, and I can tell you why, but like but the reality is when you talk to investors, and I love Coinbase, but they're like, oh, we just put our stuff on Coinbase Prime, and that's it. Like, like it's safe there and we can do anything, and it might cost us 20% a year, but and so what I'm saying is like, if you have these basically off-chain custodians that are crypto native, but basically sort of take everything and lock it into an ecosystem of like, we run it on a staking provider that our investor might own and a wallet company that we own, but it stays sort of closed loop. We're moving away from every individual should control their own crypto, and it should go via networks and on-chain. And so there's this inherent conflict currently with the value generation. And so for us, like, we built these self-custody wallets, for example, for institutions right now, for private equity and family offices, so they can stake and do DeFi. And it's really hard to sell that, because they're like, we don't want to, like, we'd rather go to a centralized entity. But then you're kind of like, if you're playing that game, crypto is not winning, because the benefit of crypto obviously only becomes true in a self-custody decentralized way. Otherwise, existing systems will be better, right? And so there is this sort of push, and the way we do it is by building tools and making it a lot more easier and cheaper for people to have self-custody. So our institutional self-custody wallet, for example, that sits cloud hosted, costs probably 10% of any of the current big wallet provider solutions. So we're kind of trying to get it that way, to kind of show like you can have self-custody. It just needs to be a lot more cheaper and more efficient than sort of, using a large-scale integrated custodian.
Yeah,
but building that tech is actually really complicated.
Yeah, you're fighting this trend of like this verticalized stack of exchange, wallet, L2, etc., and just kind of like these Coinbase, Kraken. All these are trying to just like verticalize and just own everything from top to bottom.
Yeah, which they should. I mean, they should as companies.
Yeah.
Right. Like, so I don't want to I love both Coinbase and Kraken. They're both customers. We work with both of them.
Yeah.
I think they've done such an enormous good in the world of crypto. So it's not a dig at them. Like they're doing something because they're smart and they need to make money. Those are venture-backed entities. Venture-backed entities have a fiduciary responsibility to extract as much money as they can. And so that's what they're doing.
So maybe you could tell the story to help illustrate Blockdaemon. How do you work with Coinbase and Kraken? What is the service that you provide to them? And sort of tell that customer success story so that any other financial institutions that are looking from the outside, looking to get in, they can sort of recreate some similar success.
Yeah, I think, so Blockdaemon obviously started as a full node business, and so like Bitcoin and ETH nodes were the first thing we sold in 2017, really. And that's still a core of our business. I think we're pretty much the only existing full node service provider across protocols. So you have API companies, Alchemy and Fura and stuff like that work on ETH, for example. But selling actual full nodes is very difficult and not high margin. And so, but we sell those to those type of companies still. And so there's just certain infrastructure where they want secondary security. Sometimes also it's just a matter of cost for them because it is a little commodified, right? And so we've been at different stages, they were customers of different of our products. I always say that our stack basically allows every institution to become Kraken or Coinbase, right? And so basically we sell you the underlying technology to build and run wallets, to run transactions, to earn yield. And so that's basically what you can do with our products. And they do that partly as well. It's really I think, a commercial decision on their part is like how much of this do we want to fully own in terms of tech, right? And so I think a lot of the decisions that they've made is to do more of this over time themselves because they see that there's a lot of value there, right? And but it's actually a pretty complex thing to do at scale.
Yeah. And so given that you guys are doing essentially full nodes as a service,
right?
The equivalent in the TradFi world, if I'm wrong, is like the endpoint at which you can submit these transactions. And everyone knows the story that you pay in the Connecticut data center. If you're in the server rack closer to New York, you get lower latency, and so you can front run and algorithmically trade better than anyone else in the server room that's behind you. And is it similar in that sense that if you have this endpoint and you have essentially this endpoint as a service that you guys are providing, you're not trusting Alchemy, you're not trusting Infura, you don't have a public endpoint that gets bogged down, so you can offer lower latency. And there's a lot of variance too with MEV, you can protect against it, you can sort of loop in these different things.
That's correct. That's one use case. I think MEV is a really interesting subject as well in general, but like the
bullish on? What's something that you're
to get right, but it's really important, right? Like, so I think we need to be really honest with everyone, how these networks function, how they're monetizing, how I look at lifetime fee generation of 1 ETH. And how much can I get of that, right? Like, it's a very different way to think about it, but that's a way to conceptualize it, right? Like, so I'm not looking at what's the market price of ETH as a sort of indicator of success. What I'm trying to build is products that capture as much of the lifetime fee generation of that token, which is why we have transaction nodes, staking, wallets. Like, it's basically a little bucket under each different fee generation event. And so I kind of feel like that's been a driver of our strategy, and I really want that strategy to succeed, right? But we have to work hard for it. And so I think that's the risk, is that we're not smart enough and good enough in explaining the upside of thinking that way and protecting companies like us who are severely constrained again because we operate in the US. Like, I do have to run real SOC and ISO compliance and financial compliance and audit things. Like, I can't compete with 5 smart kids in a garage with an offshore entity when it comes to staking. Like, our staking needs to have insurance. We need 5 failovers. If I want to run a high-risk BIS, I'm offshore. I run one node. I don't have a backup. I tell people, if it goes wrong, sue me. I don't care, but I can offer really cheap rates, right? Like, and so it's really educating also the entities that own the US consumers to not just go for the cheapest option, but go for the one that actually protects the interests of the market the most.
Yeah, because the solution you mentioned with 5 kids in a garage, that only works for so long. Until the node goes down, something happens, all of a sudden you're suing who? Like, that becomes a reality for people. I wanted to dig into the wallet stack a little bit more, because you mentioned AI, and that was a question that I wanted to ask about. As you're bringing a little bit more light onto that subject, and it's becoming a bigger part of the business, we've seen AI come into the wallet stack. It's sort of intuitive. I'm going to type, and maybe not even have an idea of what I want to do. The AI will tell me what I should do, and then I'll say, okay, go and do it for me. How are you incorporating AI into your wallet stack?
Yeah, I mean, exactly. Kind of. Well, I don't want. I mean, I always like talking about stuff, also, but because I don't believe in ideas are one, dime a dozen. Like, it's building it is really hard. But I think one of the issues with wallets and the general user experience in crypto is that it's just still really poor, and I think AI can abstract a lot of that away. So for me, the biggest pro-crypto use case for AI, outside of like transaction fine-tuning, MEV stuff, and network architecture, like there's a lot of stuff there, and general coding stuff. It's actually, I think AI agents are going to revolutionize the user experience of crypto, because you can just basically use word prompts to do complicated things and have an AI system figure out, like, I don't need to do the, like, what's the, like, even if I go to Coinbase or Kraken and I want to send Bitcoin somewhere, I have to pick which chain. You want to do it on Lightning? You want to do it on this? You want to do it on this?
Right.
Like, how do I know? And specifically, how does my mom know? And so, but there's benefits to having that segmentation there for different transactions, so you need to provide it. And so, but ideally what people want is I want the most efficient way to get from A to B. Yeah. And I would like for you to tell me what that is, right? Yeah. And so I think that's a great AI tool, for example.
Yeah, I still think we're just several years off of that, though. Maybe a year or two.
I agree. I mean, that's
what
I struggle with. Is also I kind of feel I see it all really clearly, it's just like, how do
Well,
you
it's
get
just the
there?
AI is not good enough yet.
That's right,
It's
and
just
I
not
wouldn't
good enough
trust
yet.
it.
That's
And then
what I'm saying.
also,
It's not
I was
good enough
kind
yet,
of, you know, one of the things I was thinking about running as a fun experiment is, can we get an AI a money transmitter license? Meaning, like, you know, like, can an AI get licensed?
Yeah.
You know what I mean? Like, kind of, because that's the other thing then, you know, it's like what if it's an AI that's actually the owner of the transaction,
Yes.
right?
Yeah,
And so that's a fun game. Like, you know, can we just like, can an AI submit an application for a money transmitter license?
Yeah.
Right.
Huh.
Like, and so those are kind of fun games to play.
Yeah.
You know?
Yeah.
Yeah.
Konstantin, man, we appreciate your time today. What do you have on the rest of the schedule?
I'm going to talk at NASDAQ, talk about the same stuff. You know,
There you go.
Everybody wants to hear about Circle and IPOs, and so we'll talk about that. And you know, dinners with folks, and it's a very, very busy week. So
Beautiful.
yeah, it's been very active.
NASDAQ hit all-time highs today, so it's a good
I
day
know.
to speak.
It's
with
also
NASDAQ.
fun, like, because actually the irony is that now people are trying to get the alt tokens into stocks.
Yeah, I know,
Yeah.
right?
Like
Yeah.
it's a which is an interesting sort of
Yeah.
development, right? Yeah.
Beautiful. Well,
Thank
Yeah.
you so much. For
thank you, sir.
Great to see you
Pleasure
guys.
having you.
Yeah. Thank you.
And wish you the best.
Enjoy the rest of the
same.
conference.
You guys too, huh? Best of luck.
Thank you.
Awesome.
All right, man. Up next, we've got Austin from Relayer. We'll bring him up to talk about some of the latest DeFi work that he's doing, he's seeing, etc. But yeah, man. I mean, I think those staked ETH ETFs are coming sooner than we thought.
I think so too.
We got to take a quick moment to tell the audience that they need to sign up for the EtherFi
That's right.
cash card.
Yeah.
You need to sign up actually too, Rob.
I do. I'm still looking forward to getting my card and using it on this New York subway. As
I
I'm here.
have it right here
see what it looks
on my phone. It is the. I wish you guys could see it.
That is
the
that is a beautiful
EtherFi
card. And
cash
actually,
card.
It matches
Get
the
up here,
colors for
make it happen.
Permissionless.
Let's get Austin up here next.
Yeah, Austin's coming up now.
The man, the myth,
There he is,
behind
Relayer
the
Capital.
traffic of the city.
Welcome to
Traffic of the city, नुकतम girl good.
Oh,
He's
you
got the Rollup
Rollup
VIP band on.
wristband.
Yeah,
That'll
I
get
got
you
it
into
all
the-
now. I'm set
That'll
up.
get
This
that'll
guy's
get you.
been smiling today because syrup is up 20%.
Yeah,
64 cents this morning. Guys on fire.
Yeah, it's kind of surreal how the market is figuring it out all at once.
What is the market figuring out for anyone who's still
Revenue meta.
on the
Yeah,
sidelines?
so one, revenue meta, but obviously there's a lot of protocols generating
61
revenue.
cents now.
But yeah, it's so they had a very different protocol early on. They were an under collateralized lender.
Yeah.
They lend to market makers,
Scooting a little bit.
trading firms, and during 2021, 2022, they were lending to folks like Celsius and BlockFi and trading
Yeah.
firms, and that didn't go well, right?
Yeah.
So they rebuilt the protocol, focused on over-collateralized lending, still on KYC permission borrowers. But then what they built out is, instead of requiring KYC lenders, opening that up, creating a receipt token that's Syrup USDC that can be used in DeFi, used
Yep.
in Pendle, and their growth has just been exponential. So they went from essentially back from nothing to 2.5 billion of TVL now, like 20 million of revenue per year run rate. And
And I'm not going to make you say it, but I'll say it. $5 target 2026 and end of the year. Not financial advice.
Not
Austin and I
financial
had a
advice.
good call about this the other day.
yeah, these are, of course, all my opinions, not the opinions of the fund, and not financial advice. So I'll caveat with that. But I think
for
the
the roll, these are not
opportunity is-
opinions of the roll. These are
yeah, I think the opportunity is huge. I ran an analysis the other day that if you apply the same multiple that Aave is trading at, and just for context, Maple has grown 10x in the last year. Aave has had flat revenue over the last year. Syrup would be at 88 cents. So Syrup would be about 50% higher just if it was trading at the multiple of a slower growth protocol.
Yeah. So what's the next big winner then? What is the market sleeping on the liquid side right now?
Yeah,
Like,
so
what's the trend that you'll see that'll develop? Because obviously Hyperliquid's gone. It's a 30, 40, 50 bill now, right? Or sorry, I think it's around like 12 or something like that. Depends on circulating FTV. And then you got Euler and Syrup. So what's the next one?
So I think we're going to see a lot more activity around borrow lends, DEXs, and stablecoins like we've seen, but that to really start to accelerate as we're getting more stablecoin legislation, as we're seeing more traditional firms get more comfortable using on-chain products. So, Maple is a perfect example of that, of trading firms, hedge funds, market makers, but also miners, corporate treasuries, all of these traditional sorts of companies that have Bitcoin and other assets on their balance sheet to borrow against it and bring that yield on chain. So, one asset that I think has incredible distribution that the market isn't quite on top of is Aerodrome.
Interesting.
If you look at Base, it's pretty much, other than Hyperliquid and Solana, the main place where activity is happening on chain. And there's a couple other ecosystem. Avalanche has some interesting things that are happening there as well on the SocialFi side and otherwise. But if you look at Base, they have this incredible distribution through Coinbase, and now they're plugging in DeFi in the back end so that you can, as a Coinbase user, borrow from 𝘁𝘁 and use, essentially access on-chain capital and yields. And they're doing the same thing where now it's not like, well, when is it going to be a Coinbase listing? It's trade everything directly on chain, directly from your account. And the Aero team is killer. So I think they're really well positioned.
There's a bit of a conversation going around that a lot of these L1 tokens are forever topped. They're trying to cut down their staking rewards. Proof of stake in terms of economic security has been kind of it's getting a bit abandoned per se due to overinflation and just down-only charts. You look at things like Aptos, like Near, like Sui, some of these like larger L1s that have been around for a while. What do you think is the future of these L1 chains? Like, are these things investable at a fair market valuation? What's your thoughts on the more like infra chain landscape versus like the DeFi application landscape?
Yeah, so chains are really interesting, and just like execution layers broadly, because these are really like Series A to Series C companies that went live at multi-billion-dollar valuations and had lots of potential and were valued really highly because of that potential, and everyone comparing them to Ethereum and then comparing them to Solana. And there was interesting tech, but like no one was really using them in a major way. And things that people aren't using shouldn't be worth billions of dollars. And I think like the market is finally adjusting to that. But if you do have usage and you have a lot of activity happening on the chain, like I don't think there's any reason why we shouldn't see networks be worth hundreds of billions of dollars and more. I think Ethereum has proven that, and they're coming through an interesting transition because so much of the value capture has gone to L2s.
Yeah.
Data availability is not monetizing in quite the way they would have expected. They have some monetization from settlement. So while Ethereum still has the most TVL and a meaningful amount of trading volume, Solana's like surpassed that. It kind of has a little bit of a legacy valuation. It gets inflows from ETFs and other assets, but that's a trickier one where the valuation is probably ahead of the fundamentals, at least on a revenue basis. You don't subscribe to, store of value. Yeah. And I think, maybe a contrarian opinion, probably not anymore, but Bitcoin is probably the only store of value.
The monetary premium asset. Yeah.
So what metrics are you looking at, aside from store of value, but what metrics are you looking at on a fundamental basis to indicate revenue? You mentioned trading volume is an easier one to measure.
Yeah.
But what are some of those metrics that you're looking at to indicate, okay, this is a network that has staying power and it's probably either undervalued or overvalued according to the fundamentals? What are those fundamental metrics that you're looking at?
Yeah, so the kind of closest to the surface is just revenue. So how much revenue is going to token holders that are validating the network through like delegated proof of stake or whatever mechanism ends up driving value to those token holders. Then a layer below that is, what are the indicators of future revenue? So what is trading volume? What is, obviously you're looking at the growth of all these metrics. So trading volume and its growth, TVL, which I generally look at as a little bit more of a lagging indicator because it takes time for people to, unwind a collateralized borrow and move it to another chain. And that ends up being a little slower, but often stickier. Like, I think that's the perfect example with Ethereum. It's been really, really sticky, the TVL that they have. And then users for a long time had been a metric, but that's so gameable. I think it's more of more looking at applications that are solving real problems and have real users and usage over a sustained period of time. And that's something that I mean, you can measure it quantitatively, but I think that's worth measuring more, like not confusing the forest for the trees and seeing like, all right, well, people are using Jupyter a ton and it's an incredible application. What's the revenue? All right, maybe that's a little bit weighted towards a perps product that is harder to defend. You know, you can look at Hyperliquid and what sort of activity is being generated there, and that seems really, really sticky. You know, Camino seems to be running away with permissionless borrow lend on Solana. You know, I think you can look at, you know, stable coins in that same realm. Like Pendle right now has a decent amount of trading volume, not a ton of revenue, but it essentially owns the category of stripping yield and then incentivizing points to bootstrap TVL. So it's kind of like what are the, you know, S tier category 1 applications on a given execution environment.
So today's show and tomorrow's is powered by a good close friend of ours, EtherFi. We did one of their early rounds like a year and a half ago. They've launched their cash card. They're doing buybacks. I saw you retweet DCF God's post today.
Yeah.
What's the take there? Do you have a cash card yet?
Yeah, so I do have a cash card.
All right.
Also,
there we go.
I think I invested at the same time as you guys
Sweet.
because that was my very first venture investment in the fund.
Nice.
In EtherFi Series A.
Yeah.
I should have mentioned them before, so thanks for bringing it up. They are a top 5 team that I've ever worked with in terms of their ability to have a big vision and execute on it in crypto. They had been building for a really long time, saw the opportunity in liquid restaking, built out the best product in liquid restaking, quickly captured that market. But, you know, as we all know, restaking hasn't generated a ton of revenue. There hasn't yet been a ton of demand. So what have they done? They realized, like, all right, we have all of these users. We have $6 billion of TVL. Now that we've acquired all these customers, let's create more products for them that are useful and increase stickiness. So they built out their EtherFi liquid products, which is, you know, if you have ETH, what can you do with it on chain? How do you earn additional yields? And, you know, instead of just getting the 4% yield from staking or restaking ETH, can you get 16%? And what can you do and make that just one click? And then they're like, all right, well, if people have all of this ETH that's deployed in the protocol, instead of a debit card, which doesn't ever really work that well, what if we can plug into borrow lends, collateralize the position they have there, allow them to borrow against that position, and now actually have a credit card, not a debit card, and then the credit card have, you know, functionality like, you know, these are generally crypto users first, so free tickets to conferences, all these sort of really cool crypto perks, and now they're doing a couple $100,000 of volume a day.
Hockey stick growth numbers, it's insane.
Every product they launch has hockey stick growth.
I gotta take the chance, sign up for the cash card, link below. $50 back on your first $1,000 spent. Who else is giving you that cash back?
No one is. Yeah, it's
Austin knows,
it's an incredible product.
Austin knows.
It's an incredible product.
I'll quote Arthur Hayes, the Amex of crypto.
Yeah.
Yeah, we actually had Arthur and Mike on the pod some time ago. BTC was trading at 74. Arthur was
the bottom.
Arthur was like, fucking all in, man. Let's
That's
go.
awesome.
Yeah, it was good stuff.
Yeah, that's the very different thing about this market, where in prior cycles you'd see these really large drawdowns in Bitcoin, like with other alts.
Yeah.
And Bitcoin this time around has just been impervious. It has flows from ETFs, Sailor,
Anthony
these new
Pompilano
treasury
is aping like $350 million like over the last 3 days or something.
Yeah, it's like
he's got
Sailor's
another 300 to buy. Like,
Sailor's
it's crazy.
taking a break, Pomp is stepping in.
Yeah.
It's wild.
Yeah. I got to ask you, what's one thing that you are very, very bullish about that we haven't covered?
Yeah.
And what's one thing that you're fearful of or bearish on?
Yeah, so it went from contrarian to consensus to somewhat contrarian again. I'm incredibly bullish on Solana and the Solana ecosystem.
Yeah.
I think Hyperliquid has taken a lot of the attention and has definitely entered the competitive set for decentralized NASDAQ.
Yeah.
But as far as global, scalable execution layer and a composable smart contracting network, there's nothing in Solana's league right now. And obviously, I'm including Ethereum there because Ethereum has a lot of activity, but it's not scalable at that level.
Yep.
And Hyperliquid has pretty much everything left to prove for the Hyper VM. They've built an incredible product with perps, but as far as the broader execution layer, most of that activity is just farming right now.
Yeah.
So I think people are sleeping on Solana, and once we get an ETF that goes live, and we're seeing a lot of stablecoin activity happening there. Meme coins have been very resilient. People like to speculate in crypto. I don't think that's going anywhere.
Yeah,
so on that note, Pump Fund launches their token.
Yeah, are you going to do that ICO?
At a $4 billion valuation, right? It's
raising
like
a bill?
what they're raising at.
Yeah.
Maybe they do a full bill, maybe they do a little bit less. What's your take on Pump Fund? But also, how does Pump Fund's token launch affect Sol and Solana?
Yeah, and the ecosystem there, yeah.
Yeah, so
Is it going to be like a airdrop like wealth ad or more of like a constricting effect, right?
Yeah, so I think we can use the Trump and Melania token launches as parallels for what might happen, because those were really big events where liquidity was sucked out of the broader ecosystem to buy those assets. And at that time, most alts, and there was a lot of AI alts at the time on Solana, got absolutely crushed. Assets moved out, capital moved out of there, went into those meme coins. We saw some minor outflows from Solana, but really Solana benefited pretty tremendously at the time. Like if you remember, Solana was 170, pumped to 290 in the next couple of days.
Oh, I know.
Yeah, so people are like, all right, Trump is launching a token here. This means more activity. This is bullish. And also with Pump Fund, there's going to be this massive wealth generation event for all the people that were in the trenches for a long time and get airdropped this token. So if you look at that as a parallel, a lot of Solana DeFi, things like Radium, which is somewhat competitive to Pump Fund, Jupiter and others have seen capital outflows already, and I think that has been front run as people have looked to put capital aside to participate. Some of the fundamental assets that are trading at lower multiples have actually done pretty all right. So on the liquid staking side, Marinade and Cloud have done well. Jito has done well. A lot of that is also people looking forward to the ETF launch. Yeah. Camino has stabilized and done pretty well since the last couple weeks or so. So I think most of the liquidity moving out of alts has probably already happened, and I think it's beneficial for Solana as this wealth generation event, more attention.
Yep.
So I actually think it's a positive.
It's going to be huge. Yeah. Austin, thank you for joining us today, man. I'm glad that we got to do this in person rather than virtual. Have a great conference. It's hot here for sure.
I'm glad there's all the fans set up here and everything.
You can feel it. I live around here. We're
letting it flow. We're letting it flow.
Yeah, man. Cheers, man.
Yeah, it's great to be here.
Coming on, man.
And pleasure to meet you, man.
Likewise.
Pleasure. Cheers.
Thanks.
So, are you buying Pump or are you selling Pump?
No, I think the CT take is the wrong take. I think Pump is going to pump on the pump.
Okay.
Yeah.
Up next, we got our guy, Ellie.
Hey there.
Good to see you.
Good to see you.
Good to see you.
Thank you so much for coming
recovered from the dinner last night.
How was it?
It was fun. We were going back and forth with Hasib and Ken from a Bitcoin company building on Starkware. A bunch of good faces there.
𝘗𝘗𝘗𝘗𝘗, that was.
𝘗𝘗𝘗𝘗, right, of course. He's coming on tomorrow, I believe, so excited for that. Let's talk about the foray of Starkware into Bitcoin.
Yeah.
I mean, come on. I think you're getting a little bit of pushback from the Ethereum people, huh?
I'm not even sure about that. I would say that, part of the Ethereum community is happy with that. Part of it maybe is unhappy with that. But certainly I think, I'll start. It is very much in our vision to go there. I started my journey into crypto in 2013 at the Bitcoin conference. Yeah. And when I presented there, I basically said, look, guys, with the ZK stuff, we can do things better and scale Bitcoin and offer it privacy. That's how I, co-founded Zcash. That's why Starkware exists. It's for these things. So for me, it's been a 12-year-old dream to bring this stuff onto Bitcoin. So, and anyone who understands that must be a supporter. And those among Ethereum folks who understand it are supporters.
Yeah, man. And we're closer than ever, right? With the covenants coming. I mean, that core developer there last night, I'm blanking on his name.
Jeremy Rubin.
Jeremy Rubin, he mentioned that we're like almost a month away from covenants on Bitcoin, which has been the big thing for UpCat for all these upgrades.
So I'm not, it will be a weaker form of covenants because right now a lot of the excitement is about this upgrade called, or soft fork that is called CTV and CSFS, which together, first of all, help Lightning really greatly in all kinds of protocols similar to Lightning, which is really great because those are the best kinds of, privacy-preserving, cheap payments without overloading Bitcoin, and I'm a big supporter of them. So that's very exciting. I'm also very excited just to see that the core developers and protocol developers are amazing news. In terms
topic, maybe it shouldn't be. Why, in your view, is privacy so important, and why has it been such an integral part of your journey through Zcash, Ethereum, and now ultimately Bitcoin?
So, privacy for all of us is extremely important. Like I do almost all my consumption, day-to-day consumption using the metal card by Argent. I'll show it to you.
Okay.
Yeah, you guys should also get it. It's free for, everyone can get one now. So this beauty is like a credit card by Argent.
MasterCard.
Yeah, it's beauty.
Yeah.
Today's stream is sponsored by EtherFi. We are promoting their cash card. They're direct competitors.
Okay, they were competitors.
The key idea is non-custodial usage of crypto on chain.
Yeah.
Yes, we're not using centralized exchange cards.
Right. So in terms of privacy, I don't want everyone to see all my transactions, right?
Of
so you need that. The problem with privacy is really a matter of UX. The ZK technology to provide it exists there, but it's pretty hard in terms of the UX experience, and hopefully we'll solve that as well.
Got it.
So part of Starkware's new idea here is this unleashed vision. A bit. Let's get up to speed about the latest developments of where you guys are at with bringing native Bitcoin onto Starkware, integrations with different yield products, and really like what you're seeing the demand for Bitcoin Fi, if you will, is. Who's using it? What do they want to do? Let's just get all caught up here.
Yeah. So I would say that there are broadly, maybe two main use cases and one kind of funky use case. So the funky use case, there are all of these Bitcoin indexer-based assets like runes, BRC20s, all kinds of meme coins and stuff like that, Dog Go to the Moon and others. And there for that, we have a runes bridge that was built by Jeremy Rubin's team, Char, already exists, and people are just bridging over to Starknet, getting a better UX. We also use the bridge in the other direction. So we minted for the very first time. You can now have USDC in runes form, which you can access on, Odin.fun and on Magic Eden, and trade it with respect to the other runes. So a little bit of wild, more speculative degen kind of stuff. That's the funky, but less the institutional side. Then the big word is yield. People are, you have Bitcoin. It's this amazing asset, but most of its value is unleashed. It's leashed right now. And on Starknet, we want to help unleash that value, to put it into use. For instance, you want to borrow stables against your Bitcoin without leaving custody of that. You want to do it safely. That's one thing we're going to offer on Starknet. We would like to secure Starknet with Bitcoin, right? To have the set of operators include Bitcoiners. So you're going to have yield both for BTC staking on Starknet, and you will generate yield while you're doing DeFi, borrowing, participating in perps exchanges and stuff like that on Starknet.
And what are some of those ecosystem projects that you're particularly excited about that are helping to pioneer some of this movement?
So I'm very excited about, well, there are 3 different sectors that are thriving on StarkNet, and each one of them has probably the most innovative, kind of stuff on there. We don't have that much usage, but I think Bitcoin will help unlock that. Yeah. So one sector is, of course, DeFi. The very best AMM out there, hands down, is called 𝘐𝘯𝘵. It's now also on Ethereum, but its home base is on StarkNet.
Moody's great. Did a podcast with him, co-founder of Uniswap v3, and was the original inventor of concentrated liquidity, as far as I know. And
Moody,
And now, correct me if I'm wrong, there's a lot of cross-chain volume that's also happening through 𝘐𝘯𝘵, and 𝘐𝘯𝘵, of course, started on StarkNet.
So we have like amazing DeFi protocols like 𝘐𝘯𝘵. We have paymasters that abstract all the fees away. Then we have things like lending protocols like Vezu. Over the next 2 weeks, Extended, which is Revolut-backed and ex-Revolut folks. Perps Exchange is coming onto StarkNet. That's big news. It's going to be added to the existing Perps, including Layer Akira and Remus Dex. And then that's the DeFi sector. Yep. Another amazing sector is the consumer app sector, where we have things like Focus Tree, which is an app that kids and teenagers and university students use to focus. They don't even know that it's on StarkNet, but it already has an integrated wallet. 500,000 monthly active users on it, just amazing. And then you have, just yesterday, Argent, which was still is a wallet, rebranded into Ready, and is now opening a neobank, which again is based on StarkNet. So we have the consumer app sector. Finally, we have the gaming, which is centered here in Brooklyn with the amazing cartridge team, games like 𝘬𝘪𝘴𝘁, Loot's Realm, and all kinds of other fun stuff.
Awesome. I'm curious, from the consumer apps perspective, there's a thriving ecosystem here. Is there an app that you sort of have in the back of your mind, and maybe if you weren't so busy, you would build it yourself, but you'd like to see get built using all of the existing infrastructure that you've put forth through privacy, through Starkware and StarkNet? Is there an app that you'd like someone to come out and maybe if someone doesn't, you'd build it yourself?
Call to action here.
Well, first of all, I'm extremely bullish on the 2 existing consumer apps. So Ready, which is a neobank, but in which you truly own your assets. In a way, you don't get a call from your bank. You can just in 5 minutes on board, you have your checking and saving accounts. You're going to have wire transfers. You have an iBank. It's an amazing product, and you have your credit card. I just showed it, all of that stuff. That's amazing. I also really like these just consumer apps where you truly own your reputation. So Focus Tree is one example. Something we need people to own more of their reputation as opposed to rely on their credit ranking, agencies. And the way just bring more of your life onto the blockchain, and then you can attest. You're the only one attesting truly to your, reputation.
Yeah, interesting.
That's one powerful application of ZK proofs that I love to talk about because it's so intuitive. We go to a bar, we need to show our ID, prove that we're 21 years old here in the States. Well, why does my ID need my address and all of these other things? And especially when social security numbers are involved in all these things, when I can just do a ZK proof, I can prove that the thing is true without giving up the real information. I was filling out something with my social security number yesterday, and I still have that feeling when I input it in where there needs to be a better way, and there is a better way. And I think you've done a lot of work with ZK and Starkware and StarkNet as proponents of the privacy elements. We talk a lot about the succinctness of ZK proofs and the scalability that it does involve, and not so much about the privacy elements that are just as important.
Yep. Yeah, I agree.
Yeah.
So ZK can do a lot in terms of privacy and also scalability.
Yeah.
Coming back to the Bitcoin side, So there's this. So obviously there's these Bitcoin treasury companies, and we had the question last night about what people are bearish on, and several people said the blow up of these treasury companies. Ironically, Pete Rizzo, he's bullish on them. He's like, it's going to blow them up. Either way, though, what's been happening is that these companies have basically been like effectively harnessing retail with a price of this equity that's higher than the NAV of the holdings of Bitcoin, and then retail's been buying the stock and kind of been allowing them to refinance debt, buy more. But that's basically going to slow down over the next 6 months as that there's more and more of these, and people get a little bit more smarter and sophisticated. One thing that those companies are then going to try to do, and already trying to do, is returning to finding yield as a way to provide a differentiated offering to their investors and to maintain that kind of
yield on that Bitcoin.
Yes, exactly. So there's a lot of competition for who's going to be able to get that kind of Bitcoin. How is Starknet? How are you guys going to go and focus your institutional efforts with some of these companies to be the yield provider for some of those treasury companies?
Right. So of course, people will be able to stake Bitcoin and get yield. The main differentiator for Starknet there is that we are, the biggest in terms of the ecosystem, number of real applications that people are already using. Right. At the end of the day, right, you want the network to offer intrinsic value to users. Right. If it's just about farming some token with a promise that someday something will happen, it's okay, but it doesn't really cut it. And we've seen some of these schemes recently, and they don't do too well. Starknet has a thriving ecosystem of visionary builders building from games to consumer apps to DeFi, payment systems, things that people actually need. Doing something that is part of an ecosystem that value to end users. That's, I think, the biggest differentiator. We also pride ourselves for being I invented, co-invented Zcash, ZK Star technology. We have others are implementing. We invented them. Yeah. So it's just you don't go wrong with Starknet, and it's and safety matters a lot when you think about Bitcoin or your digital assets. So that's another differentiator for us.
Yeah. Are you speaking with, maybe it's not MicroStrategy or those sorts of Bitcoin treasury companies, but maybe it's miners, maybe it's centralized exchanges, these large pools of Bitcoin? What are some of the use cases that they're trying to do? Maybe generally it's yield, but what maybe more specifically are you hearing from these companies? Okay,
I'm hearing the yield word a lot, but I think they all understand that yield, just in the sense of farming or some points reward or something, is not what you want. Many of them are looking for, they understand, they look at the Ethereum ecosystem, right? It's amazing, the DeFi there. It is offering real use cases, borrowing against your assets, investing them, doing all kinds of things. They're saying, we should have something like that somewhere that it's more natively connected to Bitcoin. And I think there's a list of Bitcoin L2s. I think we're pretty well positioned to be, the best, the first, the safest. So I think those are some of the discussions we're having with, these, whales, mining pools, institutionals.
Yeah, and they don't want to sell either, right? They want to borrow against.
Yeah, they want to borrow against. They want to put it to use. They want to unleash Bitcoin's value.
They want to unleash the, yes.
That may answer the question from earlier about what is the potential application here? Well, it's like a Bitcoin-backed stablecoin.
Yep.
You see everything, all the movements happening. You're right that these institutions don't want to sell their Bitcoin, but they want to unleash the capital, and so therefore.
But they'll likely just want to use USDC or USDT.
But then they don't get Bitcoin exposure. And so if you already have Bitcoin exposure and you want to try to unroll from collateralizing Bitcoin, I've heard it called the best collateral in the world, and I think that's the case, it would make sense, a natural progression of that would be then collateralize the Bitcoin and unlock stablecoin off of it.
Yeah. But you just borrow USDC or USDT against it. That's what people would want to do more than anything. Yeah.
Right. Yeah. And whether that's done natively or intrinsically with the Bitcoin, you could do it in a money market. You can do it a variety of different ways.
Yeah.
I think we may see one of those maybe on Starknet here coming up soon as more Bitcoin liquidity comes into Starknet.
Yeah. What's on the horizon, Elliot? Covenants, some small changes, not the big one maybe that you guys had been pushing for. I know you've been a big advocate. What's the next 3 months look like for Starknet? Bitcoin looks like it could go to all-time highs here pretty shortly.
Yeah.
The mania could continue. How are you going to capitalize?
Okay, we're going to continue building this home for good applications. And, just yesterday, Ready announced their neobank, which is on Starknet. That's amazing news. Over the next 2 weeks, Extended, which is an ex-Revolut team, is launching their Perps exchange on Starknet. I think it has a chance of giving Hyperliquid decent...
run for its money, huh?
Yeah, run for its money and offering something that is going to be decentralized and hopefully also, better trading experience. That's like over the next 2 weeks. Later on through the summer, we are going to be starting, first of all, a lot of integrations with on and off ramps. Some big names, I don't want to announce them till they're ready, but like some of the, blue chip kind of stable providers and on and off ramps are going to be launching on Starknet, hopefully very soon. Then we're going to have BTC-Fi, which is basically getting extra STR for putting Bitcoin liquidity protocols, DeFi, that we mentioned. And then later on in the fall, we're going to have BTC staking. That's what roughly the 3 months ahead look.
Awesome. And looking a bit further out, what do you think about the sustainability of Bitcoin, the asset, the security budget? Is part of the vision of Starknet to generate some fees for the Bitcoin network?
I hope so, yeah.
Yeah?
Well, I mean, for that, well, it really depends on Bitcoin. And I don't want to decide for Bitcoin, right? There are those who argue strongly that you do not want to put any more activity, the filter boys. Don't put anything, don't give us any fees. Bitcoin should be for very little payments. And the fact that the mempool is often very empty, they're saying it's a feature, it's not a bug. Okay?
Small blockers.
Yeah, exactly. I think they're wrong, but I'll respect. Bitcoin is bigger than my own thoughts. In that case, value will accrue in other ways to the L2s like Starknet, which is fine. I think the better way is for Bitcoin actually to further unleash its value and allow things like L2s to also keep part of their state on Bitcoin, which requires things like CAT and so. I mean, there's also another interesting thing. There's a lot of discussion of post-quantum security.
Yes.
ZK Starks are post-quantum secure. You can have signature schemes. You can basically make all of Bitcoin very post-quantum secure if you use Starks. I had discussions with many important core developers about these things. I know that Adam Back, Luke Dash Jr., a bunch of others are actually very favorable for the use of, let's say, things like ZK Starks for post-quantum security, even if they don't necessarily want to see more bloating of the blocks. And we can live with that as well.
Kind of a completely separate question and thought here. If you were running the EF right now, what would you do with regards to the relationship between the L1 and the L2? And kind of how does that shape your view of Bitcoin and the Bitcoin L2s?
I would do something I suggested them a long time ago, but I don't think it's going to happen. I think they need to have more of a capitalist economic point of view, which basically says if folks are building infrastructure, that's actually great. They should benefit from it. They should also pay us, meaning we should enshrine payments, some sort of taxation on the L2s that will flow to the L1, so that everyone is happy, and enshrine that in a way that makes both of these things sustainable. This is a very common mean, time tested for, like this whole thing of just saying everything is just fully open source, kumbaya, and we don't care is not good. And we tried to convince, the EF many years ago that, to go down this route in which you think also about value accrual and incentives in both directions. But that's what I would advise.
Yeah, and I mean, that was somewhat attempted with like just using Ethereum L1 for data availability, but it was kind of not exactly, that didn't really pan out.
No, what do you mean? They went like with the blobs. The whole thing is, oh, we'll make this cheap.
Cheaper.
We'll just make it cheap. We're not going to charge anything for this.
Right.
We're going to make it much easier for you.
But due to competitive pressures, right?
What?
Due to just like other competitive pressures.
Not really, no. I don't know why. I don't think it was
like,
a good...
like Kumbaya thing.
I don't know. I don't think it was a good choice.
Yeah.
I think if I was them, I would say, oh, it's really great that actually the fees are going high. It's pushing things out to L2s, but it's also charging very hefty fees.
Right.
It's creating more efficiency and actually bringing in money to the L1, and they could even go a step further. Require that if you, in order to be an L2, you're sort of expected to, do some issuance towards Ethereum, and it could also work in the other way around. Yeah. They could send a portion of the fees accrued on the L1 to some of the L2s or the applications. I would think in those terms.
Yeah. So like very back and forth rather than this kind of like.
Yeah, and I want to say more than that. So on Starknet, we had, right now, we basically drove the fees to pretty much zero. So there's no fees really coming in because we wanted all the, as much traction to be on it. But we had it when the fees were high initially. We had a Devonomics program. The application developed
like consensus in Miami. Like,
Wait, consensus is in Miami?
yeah, next year, May 5th, 7th.
Dude, put me on a beach in south of France.
Yeah. Yes,
Token,
yes,
when we
yes.
saw Tristan Thompson walking, like the big NBA player walking in the hotel in the Marina Bay.
Yeah.
We were having a beer with Luke.
Yes. I remember. Yeah. In fact, the police officer when I got here was like, "How many times were you here?" Because you're like in Denver and then in New York again last year. Yeah, but come here often, and it's good to be back. But it's really hot. Like,
Man.
So that you can't think.
We just had to go down in the stream a little bit, guys. We had to switch computers.
Yeah, it's hot.
Get it while it's
95
hot.
degrees out here. Computer's overheated a little bit, but you know what? We're staying cool. We're staying hydrated.
We are.
Got fans left and right.
We got a lot of water here.
We're keeping up. It's summer in the city. What more could you ask for?
That's what I'm saying.
Yeah.
Jack, get us caught up to speed, man. Last October, November, we were, like I said, in Singapore. What's been going on with RouteScan? What have you guys been building? What's been the focus? And just kind of how are you seeing things?
So for the past 6, 8, 9 months, we were actually focused on trying to reduce the noise from the chaos.
Yeah.
Thing is, we found that like when we want to choose, because exposure chains, and so we were trying to understand like what are the possible clients for first state of the market report, and it's a 60 pages long PDF that tells the story of what developers are choosing on chain. And it's not about the TPS, it's not like A16Z, it's not about the TPS and the awareness, it's about not user awareness, about developer awareness, like which developers are choosing the OP stack, which ones are choosing the 𝘠𝘪𝘵 stack, and so on and so forth. And so we actually found that there's a lot of noise. For example, like 4,000 chains are live in some sense, but only around 2,000 are like with our live RPC or like a live Explorer. So you can already sense that like 50% of the chains like are just left over.
Chains,
yeah, no
yes.
shit. Yeah. Yes.
Yeah.
And then we have like a strong exposure from Polkadot, for example, and Cosmos. There's a lot of L1s from Polkadot and Cosmos, and also Avalanche is growing. And so we want to be able to have like a good business intelligence overview of what's happening across the ecosystem and in the industry. And so that's what we're doing. That's what we did, like with releasing the state of the market report every 3 months. Q1, Q2 is out until I don't know 1 month or something. And I'm just going around in conferences and talking about what we did for this, because we. So I cannot tell you much right now, but we have deep conversations with outside Ethereum and outside EVM, because there's a lot of things going on outside the EVM and the Ethereum consensus layer. Not everyone is building a classic consensus layer based on Ethereum, but they're maybe using EVM as an execution layer. For example, a lot of Cosmos chains, 18 Cosmos chains, are using EVM in some sort, but they're also using Cosmos SDK and Tendermint for their consensus. So you can see that there's a change in how, how some consensus protocols have different flexibility than Ethereum. And so that's what we're like a stealth launch that we made. We actually launched our first West End Explorer. Like, what is West End? West End is the testnet explorer of Polkadot for EVM. So we're branching there. We're also branching into Cosmos with more and more Explorer for Cosmos EVM chains, and hopefully something more. And so yeah, this is what we're doing.
Yeah.
But we're also every month we're also like asking ourselves, like, should we make RouteScan open source? How is the community going to benefit from RouteScan being open source? And I just had the conversation right now with OP, like 30 minutes ago. And because they were like, we want to subsidize and make sustainable funding for open source projects. So like, okay, when do we want to do this? Actually, we can't.
Why?
You know why we can't? Because it's not a favorable competition. EtherScan is not open source.
No.
With block explorers going forward, I think going to the URL of a block explorer, whether it's EtherScan, RouteScan, is probably a thing of the past. Like, in order to confirm I received a transaction, normally I'm sent a link, and then I go to the link and I see, okay, that's my address. I can see that I received the money, stables, ETH, whatever. And you mentioned AI, and I'm curious how this loops in, because I'm curious, how do you think we're going to incorporate AI? You're going to incorporate AI into RouteScan, and what do you think the future is? How do you think we will interface with block explorers into the future?
Yeah. So the first thing is the context. So we take for granted that everything that is on EtherScan is the truth. That is not true.
Right.
When we were actually only building EtherScan back 2-3 years ago, we actually had a whole Google Docs just of bugs that Snowtrace had. They have a lot of explorers have a lot of bugs because you need to process millions of data every hour, or billions, depending on the type of or the TPS you have on the chain. But for example, for Ethereum that has 22 transactions per second on average, 2022, means you have at least 10 times that information, because you need to, of course, to trace everything that is happening in the transaction, and so you need to update the state of the smart contract and then the other, and so on. And so it's a lot of documents. It's billions of documents every month. And so that is the first thing. Like on the contextual layer, like you don't know if that is the truth until you have another thing that you can look at. And that's what we do. Like if you go to EtherScan on Blast, on Avalanche, on any other chain that we also support, you can get a second opinion from us. And so if both of us say the same thing, then that is okay. And you cannot do that with the node. You cannot do that just by reading the node, because there's some things that are like abstracted away. Like how do you know, like you need to read in the lines to understand how much of the token is updated in the new contract state, and it's really hard. So you can just look at the Explorer, and then you need to compare the Explorers. A good amount is like 2-3 Explorers per chain, so that anyone has at least one more than one point of view.
Yeah, almost like a consensus mechanism.
Correct. It is a
Yeah.
consensus mechanism,
Yeah.
yes.
Yeah.
And so Etherscan just has one, because as much as we have an Ethereum Explorer, as much as Blockscan is offering Ethereum Explorer, Etherscan is the most used one. It has more
Yeah.
than 15 million users,
Yeah.
and it's not good.
Yeah.
And so, yes, so this is what we're doing. Like, we are trying to augment the functions of the block explorers in more ways than we actually thought it would.
Yeah.
Because we have made a partnership with 𝘬𝘪𝘴𝘬𝘴 on base, and we were like just thinking, like, we were just desperate to say, like, I'm honest, like, what do you guys want to set as the default? A default explorer for base? And we're like, we would like a unified view of what's happening on our dApp.
Right.
And but it's going to be simplified.
Yeah.
And so we built a special extension of route scan, meaning that now if you go swap some tokens on base on 𝘬𝘪𝘴𝘬𝘴, and you have the link for the explorer, that link will not bring you to an explorer. It will bring you to a special page that's called a receipt page. That page is literally what's happened. Like, you swapped 10 tokens for 15 tokens at this time, and you can just share that. And it's and we support any kind of action, like new liquidity, adding liquidity, removing liquidity, voting, government, whatever. We support everything, and it's just easier.
Yeah.
Know that this huge transaction details page.
I've noticed that trend as well. It's like same thing on MetaMask now. If you make a swap and you click you go to your activity in MetaMask, you'll notice that it brings you to a MetaMask block explorer. It doesn't bring you
You
to
use
Ethers.
MetaMask?
So it brings
It's
you to a
sparse.
MetaMask block explorer, right? And so I think what you're getting at is that there's purpose-built explorers now.
Yeah.
Applications are starting to own more of their stack.
Yes.
They don't want you to leave the application.
Yeah.
Yes, I do use MetaMask, by the way.
Really?
I haven't migrated yet.
Rabby's the end game for now.
And so this is the direction, right? And so I take it that 𝘬𝘬𝘀 is essentially building through you guys. They license your technology. Now they have their own in-house block explorer.
Correct.
Right?
Yes.
And so this is part of their application. And I think go ahead.
And then the AI is the next step.
Okay, so take us through the AI.
Yeah, so we're starting with Avalanche.
Okay.
We got funding from Avalanche to do this, and we actually have a lock-in for a few months to test the application before going to other chains. And the thing is, what can we do because we have a mission. Our mission is to stay in Etherscan feature set, like do what Etherscan does, because that's what the community wants. But also, we want to go further and like just spreading around as much as we can. And how can we do that? We can actually brand new pages and new features like extensions. So route scan extension is, for example, the receipt for 𝘬𝘬𝘀𝘬𝘴 or the AI agent for Snow Trace. What's an AI agent? Basically, it tells you, like, you have just a search bar and you can just ask him whatever you want about any chain that's on Avalanche.
Yep.
And it will tell you interesting facts about patterns related to, I don't know, addresses that are doing transactions on multiple chains. And this is something that nobody has, because everyone is kind of doing AI agents, but everyone is also doing AI agents for single chains. And then you need to compare the data at a second step.
Yeah.
We are aggregating in a single step. And so what we can do is now on Avalanche and later in other chains, you can actually ask the bot or the specific page that we will build. The alpha is going out in 2 weeks. So
There we go.
we have some alpha.
Breaking
and,
news.
Yes. And so, you will be able to simply ask it, and maybe you can try to learn how most airdrop farmers are doing, like what the foundation is doing, and a lot of stuff like that. They can help you make more informed decisions. Just you do not need to be a developer to learn all this stuff. You can just ask, and you will get answered.
Yeah. I'm curious how your experience has been working with like different RAS providers, 𝘐𝘯𝘷𝘦𝘴, Conduit, AltLayer, others. What's that experience been like?
So some RAS providers are harder than others, but we have, the contract is not yet signed, but we have a really, really good announcement to make for the first deep partnership with the RAS that we have.
Okay.
And it's going to include some tokens.
Okay.
So we're going to start to develop a long-term partnership with some RAS providers. And I cannot say anything because we have not yet announced it, but it's not yet finalized.
Yeah.
But we're starting to see more and more RAS providers that want to showcase all the chains that they're on,
Yeah.
and the chains that they build, because mainly I think the RAS providers are just like a first step. It's just
Right.
like, I don't know, just like pump fun of chains.
Yeah.
When you graduate your chain, you don't need the pump fund liquidity. Like for the token, you don't need the pump fund liquidity because you're going to Radium.
Yeah.
Like the chain, don't need the REST provider when it graduates on, I don't know, for a TVL that's beyond some point or something. You just do your own, but the REST provider has helped you with the testnet and the first mainnet months.
Yep.
So that's what we want to do. We want to actually do like an explorer of the pump fund chains. I don't know how to say that.
Yeah. One last one for you here. When you've been looking at this multi-chain landscape over the last couple of years, it's really grown, and then it feels like it's kind of coming and kind of like getting a bit more constricted into a couple winners or a set of winners.
Yeah.
What's your view from like the business side on this like multi-chain landscape, on this like amount of chains? Has your thesis or ideas shifted from your perspective?
So we actually got more requests for custom VMs than EVMs. Basically because the EVMs are basically only using Block Scout in many senses, in most cases, and also we have the other chains that are either using us with a little effort, like, okay, let's choose you and whatever, or we have just difficult conversations with like small chains that don't have money or don't want to be involved with like a more graduated, let's say, partner infra provider like us. So what I can say is, yes, there's more custom VMs coming on, especially around the ZK stuff. And there's also a lot of chains focused on stablecoins. So we have Plasma. That's the first Tether chain. We are the official explorer for Plasma. We are also going to be on another stablecoin focused Tether chain. And there's also going to be a couple of others, I believe, in the future. We're talking to Paolo with this because we actually want to do a token explorer. And this is the other thing. Okay. So if you have a lot of chains that just facilitate a specific token in different use cases or different markets or different technologies, then what prevents you to do a Tether scan?
Because it's essentially a ledger, right? And so if you have a ledger of all the accounts that hold Tether, really, ledger is just an account and a balance, right?
Yeah.
Yes.
And so you can have all these accounts that exist on a chain, or you can have all these accounts, if there's enough of them, you would do so one that just holds these tokens, right? I think Tether is one that reaches product market fit. I mean, look at Bitcoin, right? Bitcoin doesn't have any chains, but it has its own block explorer, and it's all one asset, right? So any Bitcoin block explorer is essentially what you're talking about.
Yes.
You could replicate that for Tether, and maybe for Circle and USDC, and maybe for other stuff.
And that could span across any of the chains that asset is on.
Correct.
Yeah.
Token explorers.
So how do you index all of the information when it's Tether, but it's occurring from a different chain? Do you tap into Tether? Is there an indexing problem?
No. Our indexers are already designed to do this. Okay. So our indexers are basically designed to segment everything in different ways. So it's not work. It's not work for us. We just need to, of course, we have some designs for Tether scan. We already did this. We're just waiting for the chains to come live to actually build a unified explorer for that. But we already have Tether scan. If you go to tether.routscan.io, we probably have a demo explorer live already.
There you go. Jack, man, we appreciate your time.
I think there's one more thing we have to ask.
And
it's something that you may not feel comfortable talking about, but you're one of the few pre-token companies. As a pre-token company, what is your approach to a token? Is it in your purview? How are you thinking about this?
It is. So you were talking about revenue meta.
Yeah.
And the thing is, revenue meta is the end game because this is the end game for businesses, in general. So the TVL was just a proxy, and all the other stuff was it was a proxy. We have more than 200,000 users when it comes to bear market, and more than 1 million users in the bull markets. We have 25 clients that pay for more than 100 chains on our platform, and we have more and more API users, and we're building extensions across many different products. And we're building a business intelligence division. We're building a forensics team that works with compliance units across the world.
Okay, enough said.
The token is just.
That's it.
The token is just the thing to say. This is all how it all works together.
Yeah.
If and yes, it is coming.
Okay.
Breaking
news.
If you use
Coming
Roughscan,
soon. TM.
you use Roughscan. Yes, it would be best for you.
Ooh, there you go. Use Roughscan. Absolute pleasure. Thank you for coming on. Very much looking forward to it.
Yes, I'll do
try to
it.
Stay
Thank
cool.
you.
Stay hydrated.
Thank
Take a water if you like.
Yeah,
There
thank
you
you. Thank
go.
you. It's okay.
Cheers. See you next time. Token announcement on the Rollup TV. Yep. We may see more. There may be more token announcements as we go throughout the week. I think we've got Patrick coming up. Cash back. That's basically like buy 10 Ubers in New York, get one free. 10 Ubers will cost you $1,000 around here.
I made that mistake coming here the last few days, actually. So, more than I'd like to share, but definitely in the couple hundred. Then I was like, oh, I'm not from here. I'm in California. So I was like, oh, it turns out there's a subway that I can take for $2, and so that was.
We may get an underground tunnel subway going from LA to New York here pretty soon.
I think it's going to be easier to build than anything in San Francisco is these days.
I'm not sure though, the city of New York was just elected socialist as of yesterday, so that's going to be a whole other conversation to have. On the Rollup TV.
Unfortunately, not related to Commonwear, but yeah.
Today, he is the co-founder of Commonwear. I don't even know what Commonwear is, but I'm excited to learn. I know it's technically
Very cool.
And I'm really excited about it. So jump back to the Ray. What is Commonwear? Welcome to Rollup TV.
Yeah, well, thank you for the invite. I've been a fan of the show. Love the interviews you guys do with different founders in the space, and have found it pretty interesting. Yeah, I mean, long and short of it, I'm on the internet all day long, just like you guys are, and I found that very, very rarely am I actually using crypto for the things that I frequently engage with. We believe that that's a systemic problem with how these stacks are constructed these days, and we think over the next decade, stacks are going to look a lot different. And so Commonwear is based on this idea that over the next decade, the best apps will verticalize. So they'll change much more than just what's going on the execution layer or like a tweak here or there. They're going to maniacally specialize what they're doing into every layer of the stack itself. And so right now, I mean, not a lot of stacks, if any, are really built for this sort of deeper customization. You hear people, you say customization and people think forks, and then you think people think reliability issues, and you think all sorts of crazy hell to deal with. And so we're building something from the ground up for this world. So
when you say stacks, like chain stacks, like roll-up stacks? Or
exactly.
Who are you targeting with verticalization?
Yeah, so right now, I mean, the focus is on what we think are like the best apps. So I think the best example would be like a Farcaster or like a Hyperliquid type, where you want to introduce something very unique for the customers that are actually using your product, but your hands are tied, right? Like, I mean, we work with a lot of great engineers, and if you told some engineer, like, yeah, you can optimize it up to this point, and then like, oh, we don't touch beneath that. It's like, that's just not a thing that great engineers will stop with. And so what they do is fork it. They make all these roundabout changes. And we just think that the era of that is coming to an end. And I mean, it's not to say that it wasn't a good idea when it was, right? When a lot of these original stacks came out, like all there was Bitcoin and Ethereum, like, and everyone had to build everything from scratch. And so the idea that like, oh, we could stay ahead of where most chains were with an operating system like abstraction to build stuff was probably good. And it kept everyone on the same direction to actually build products. But I think over the last 18 months, a lot of people would say we've started to run up against the edges of those stacks, and we need something more powerful. So
the alternative view here is probably modularity in some regard. It's like divide and conquer, sort of split up all these parts, and then specialize. And it's kind of the idea of trade. You do what you do best. You know, Patrick, you do what you do best. I'll do what I do best. We all trade with one another. I'll use your piece. I'll use, and we kind of combine all the best pieces to put together the best stack. But so what is what part of that is not true, and how is an integrated stack better than sort of this Frankenstein conglomerate of all the best pieces? It's not fluid, it's not seamless, it's not integrated.
I mean, I think the way we think about it is there's like an X and a Y axis where one side is just like, how much does it cost for the average person to interact, and how many people can you support at that price?
Okay.
I think that's really the guiding metric for most applications outside of what we'll just call customization. We believe that like a verticalized stack, as long as it has sufficient security, which ends up being the challenge, can win on both of those metrics. You'll just hit a different frontier. The question is like, how many people actually need that today? And I think if you're starting a company from scratch, like you shouldn't be targeting like competing in the next 6 months, because you just need more time to try and build an advantage somehow. So we think we're still probably 12 months away from what we think is going to become like a pretty common pattern for people. But the biggest counterpoint, in my opinion, is more that like some of the stuff, I was on a panel yesterday with Alex from Fastlane, and like a lot of the stuff they're doing to make a general purpose execution feel more app specific. The question to me is, if that gets so good that you don't really need to go customize so deep. And so I think in the short term, a lot of teams will prefer that just because it's so much less complicated. But we think there's this inevitable maturation and evolution where we know what we're doing is a longer term approach to the problem, and we're preparing for what we think are going to be this next era of apps that really don't feel like crypto apps, but they're secured and verifiable in the way we'd all want.
And so there's been like a natural evolution of like these of these stacks. Right? We have Bitcoin, eventually we have these L1s, and kind of what happened from like the inception of RAS, if you will, to like where we are now and where we're going. Like, who is like what? Like, tell us the story from your perspective as to like, why you wanted to do what you are.
Yeah, so I think it makes sense to share a little context too. So like basically when I first came into crypto, I worked at Coinbase on the crypto engineering team there, working on integrating new chains to Coinbase. So I got to talk to a bunch of great teams long time ago when we're all still figuring things out. So like I led the integration for Polkadot, for Cosmos, like oversaw the integration for Solana, like had a lot of fun talking to all these different teams, understanding how we could get it to work on Coinbase. Worked on an interface there called Rosetta, which was this open standard for reading and writing to blockchains and trying to abstract the problem away. After that, I was the head of engineering at Avalanche for the last 3.5 years before I started Commonwealth. And what became clear to me is like the EVM is a great enabler. Same with the Cosmos SDK. It helps you get from off the ground so fast these days, whether it's a RAS or whatever. The problem is, as soon as you're off the ground, now what? You're completely undifferentiated from anybody else. And the problem, and you see this on the execution layer too, if you have a great DeFi protocol, you introduce something new, it's no more than 6 months until everyone has the same idea.
Right.
So how can you build compounding innovation, like compounding advantage to actually have a lasting business if everyone's competing on the exact same plane? It's great for users, I guess, in that you get your product that you're using gets the same features as everyone else within some period of time. But from actually like continuing to sustain development and paid community and keep it all aligned, very difficult to do. And so I think the way I equate it to is like, what if the only business you could make was a white labeled version of what everyone else had?
Right.
Like, what great businesses do you know that like got their win or like their lead based on that? I don't know any, at least in modern internet. And so I think it's just it's like early on, it's like you saw this with a lot of the early tech stuff. It was like basically a very thin shell over an Oracle database. That's how like the early internet worked. Then I can assure you now, as few people as possible want to have a thin shell Oracle database. And it's just this process of competition. You need to be able to have enough differentiation to have a compounding advantage, and if you don't, it's just this constant cycle of creative destruction. So we think that there's just going to be this next phase of our growth, and there's not a lot of tools for that next phase of growth other than like ripping apart what currently exists, which we just don't think is going to be the right path.
But then wouldn't like any of these other current stack providers, like especially like the ones that are coming up that are more focused on like high throughput or customizations, or even just like the current RASs, couldn't they just implement what you've already built open source into their own set of distribution of customers, et cetera, and just like you would just be doing them a favor for bringing all this cool tech onto the market in an open source fashion. There you have all the distribution, all the brand, and then like, wouldn't that render your business strategy like a bit?
So what I'll
screwed?
Respond to you is like, that's exactly the goal, actually.
Okay.
So the goal for Commonwear and the name Commonwear is to commoditize performance.
Okay.
I think what became really frustrating to me and the motivation for a lot of what Commonwear is about was, in the space, we have a lot of people that really love to claim ideas as their own, and like as soon as you even touch someone else's idea, it's like, what the hell are you, like, it's my...
I invented that, man.
Like, it's crazy. But like, I mean, most users are like, I don't understand what this is. And
yeah.
So, but if you're an app developer, you end up having to pick a community before you even get into the technology these days.
Yeah.
And to me, that's just a real reason why the space is being held back on like a lot of the innovation I think that actually matters to users. And so what if you had a bunch of state-of-the-art stuff that was just completely open? No licenses, no ecosystem, it just was MIT, Apache 2, you can use it however you want to. That's Commonwear. The business of Commonwear is on building infrastructure that augments what's available in the open source.
Yeah.
So the way that the business works is it's co-design. So it's infrastructure co-design with open source software. So it's not like running Commonwear for you. It is adding pieces and features that you can't really do in a decentralized way, that you need to cross the chasm between having a decentralized protocol and then what an application is. So the question is, like, could other providers like try to compete with us on the infrastructure side? Yeah, we totally. Our bet though is that they're going to be focused on EVM. They're going to be focused on the stuff their customers actively want. Yeah. And it will give us enough time to build out more of that infrastructure and then start offering it at a price that they just can't compete with.
Yeah, and couldn't you also just build your own, like, dog food your own stack and build something sick with it and like use that as the example for the market?
So this is a big conversation we've had like early on was like, does it make sense for us to be like the first one that uses it? Because you have to be careful there, right?
Right.
Otherwise you can run this like Apple problem where it's like, if people start to think that we're going to pick off like any ideas that are good and then build it on our own, kind of undermines a lot of what we're doing.
A lot of the point, right.
And so I think you can really do that as long as you're one of the first handful that are live.
Yeah.
Fortunately, though, we found a lot of great partners that are using Commonwear to launch their own applications and networks where we don't feel like it's necessary for us to do that anymore. So we're focused fully on getting Commonwear library rock solid and then getting the infrastructure stood up.
So you mentioned kind of at the top of this that when you're using the internet, and we all are, you know, on a daily basis, you don't see crypto as a significant piece of that.
Yep.
And now bringing this into kind of what you just mentioned about, you know, some of these ideas that anyone could build, you know, you could build them yourself, but almost inspiring others to do this with Commonwear. Where do you see gaps right now in the internet where crypto could and blockchain could be implemented and could really improve a lot of that performance? And also, you know, what are those things, and could you describe them in such a way that would inspire anyone, you know, to go build them, give people a head start before you guys start building them yourself?
Yeah, I mean, I think someone actually brought this analogy up to me a few weeks ago. That was incredible. His name's 𝘗𝘳𝘃 at 𝘬𝘪i Ventures, who they're not investors in us, but it was an interesting conversation. And his idea, or basically claim, was like, the problem right now is like read and write to Web3 is like 1,000x more expensive than read and write to a traditional backend that an application would use. Over time, that's going to compress. And at some point, it's going to get so close to the cost of reading and writing to a traditional backend that the advantage of having like a unified state is going to outweigh whatever that additional cost is. Our view is that, no shit, people are not building on crypto. It's way more expensive.
Right.
Like you have to pay gas
like
for every time you write state.
So until we get that price down to something where it's even tolerable, like, I'm not shocked. And so I think stablecoins are starting to really push that because the traditional alternative is actually more expensive now than like the Web3 alternative.
Yes, finally, like
and
one thing.
I mean, you can see the excitement is so tangible.
Yes.
So the closer we can get more things to the price of Web2, but with way better trade-offs, we expect the same sort of excitement to happen.
This feels like the Ethereum world computer vision. Like, not just stablecoins being more efficiently put on chain versus traditional financial infrastructure, but any data that you're pushing to a database, right? You're going to write it to this database, Well, if the marginal cost of writing that to a blockchain becomes so compressed and you get all the benefits of it being on a unified piece of state, you would just push it to the blockchain. Anything that you would write to a database. Do you think blockchains will replace database?
I'm not sure it gets to the same price. Like, there's so many tricks you can take with databases that if you want to replicate state globally, it's tough. I think ZK may get us really close, actually, because like you just need one real or a handful of big computers, and it gets really close. Especially if you don't have to replicate all the data and use like kind of a DA plus ZK scheme. I think it gets close enough for sure, though, that it makes more sense with the trade-offs of crypto for many different types of businesses, where you can return a lot more to users and just be global day one. And so we believe in that world, and we believe the trade-offs of blockchain on their own are well worth an additional cost. We just think that additional cost right now is way too high to be practical for many different applications. And once we have more interactions on chain, I think that opens the door to a lot more really cool stuff on the internet. And I'm more of an internet nerd than I am like a libertarian, I guess. And I just think that we can build really crazy internet systems if they're more blockchain based.
Tell us your craziest internet
story,
idea.
or like some shit you were doing on the forums back in the day or something.
So I saw this. This isn't my craziest, but I did see this the other day, and I think no one sees this stuff, and I think it's just crazy. So there's this app that's trending right now on the App Store, which is basically a social network, but you're the only real person. Everyone else is an AI. It's your own world.
Dude.
So that's it. Social network app. And you basically can just become famous
in your little network
on your own like AI-enabled like social internet world. Now, what I think is going to happen as the world gets more and more competitive is that fulfillment for people is going to become a lot tougher for a lot of people that just didn't go to great schools, don't have the resources to like compete on like some of these bases that people, you know, if you grew up in Silicon Valley and you're a son of some of these like tech oligarchs, right? You have no wants. You have the best education you could possibly have, and like from day one you're born to like the day you go to first job, like you're trained for this. A lot of people that are like working a 9 to 5 and they're like, this kind of sucks. Like you work 9 to 5, you go home, what do you do? There's not a lot going on. I think that we're gonna see this like stratification of just thousands of virtual worlds tuned to basically your level of difficulty of like how much fun versus challenge you want to have in like a virtual world. And then you can have any job, like you can do anything, and like you can train and get better where there's still fulfillment. Like if I jumped in an F1 car, I'd be wrecked. Like
for sure.
Close.
But if you could, like,
but if I was like in a virtual world where like it wasn't just the driving simulator, but like
train.
the whole world of becoming an F1 driver, that would be so addictive.
Wow.
What is this app called?
So this is not the whole
right. No,
but that app is, I think, a turn into what it will become. And that app, I don't remember. I think it's called like social. I don't know. If you
like
search
the social network video game, you're in your own world.
So I think it goes a lot further.
Yeah.
So crypto, I don't know how it fits into any of that, but like that's in terms of the internet and what I think will happen. I think you may have virtual worlds where people are at similar difficulties where they can interact. But who knows?
Yeah, I mean, we can imagine a world that's so immersive that you're going through the entire process of becoming an F1 driver. You have 2K, play my 2K. You go to high school. Go to college.
Same thing. Yeah, exactly.
And there is, I mean, in-game currencies. But it almost becomes more than a game.
It is.
It becomes more life. Real for your life.
It becomes your life.
It's kind of like Ready Player One.
Virtual currency.
But instead of like a shared world, there's
like your
infinite worlds up and down based on the difficulty you want to play at.
That's crazy.
Patrick,
man, what's coming up for you guys at Commonwear? What teams are you working with? Who's been helping you out? What's on the roadmap?
Yeah, so we raised $9 million from Han and Dragonfly a few months ago, and so actually I guess it's 6 months ago or so. It's more than that. We now have we're bandwidth constrained, so we have signed partners more than we can handle at the moment, which is really exciting. Can't share any of that yet. That'll come. But yesterday we did have a big release, which was I didn't time it for this, but it ended up coming out that way.
Let's hear it.
Called Minimit. And it's a new type of consensus that we think achieves as fast of blocks as you can have in a 20% Byzantine tolerance setting. what that means is that we can have on a globally distributed network block times around like 120 to 130 milliseconds. On a region-biased network, you could have sub 50 millisecond block times. Now, why that's cool? Imagine you have like a Rollup network or something like that, and you wanted, instead of having to run on like a couple hundred millisecond or even a second block time, you could. It's all about getting closer to what that user feeling of interaction is.
Which is about 200 milliseconds.
Yeah, so anytime we can break that, it's like crazy. And so it's open, totally open source, available for anyone to use, and we're really excited about pushing that forward into more hands of application developers and how they can use that to make experiences that feel just like Web 2 that people are used to. Yeah.
So just to reiterate, this is part of the open library that you were talking about.
Yep.
That is core to Commonware. It's not part of the business infrastructure as a service development that you guys offer.
And it's a great question because the nuance there is if there's something that makes sense to run in a decentralized way, we always push it open.
Yeah.
Nice.
It's only stuff where, like, let's say, for example, Cloudflare open sourced their CDN. Most people would have no idea what to do with that. They don't have a CDN where they can do anything with it. So we think about it the same way, where it's like if we should not be running it, it's totally open for anyone to use however they want to. If it's something where we think it's better served centralized and then maybe using cryptography to provide some sort of safety assurances, that's when it goes into more of the XOR side. Yeah.
Makes a ton of sense. I used to be a decentralization maxi. Decentralize everything. But then you see that's not feasible, it's not practical, and so it takes some more balance.
We think like consensus-driven security and pushing that to all your interactions is a really important thing, and right now no one does that. So like if you go to Infura, right, it's like Infura is your source of truth.
Yeah.
And there's been some great work in the Ethereum community around like Helios that A16Z has worked on, and some of the ZK teams are working on consensus-like client proofs that would make that much better. But we think that'll be non-negotiable in like 12 to 18 months, which is great for all users because like you have to trust no infrastructure provider anymore. It's just about what the chain finalizes, and that's your source of truth. The problem is if that finalization is slow, your balances are going to be out of date. It's going to be difficult to interact with that level of security, and so having chains that can move that quick and finalize that fast is going to be really important to actually having a safe and fast user experience. So, we'll see. It's early on. It's a big bet. Definitely a startup. So that's the goal.
Well, congrats on the raise and on the announcement yesterday. Appreciate your time.
Yeah.
And looking forward to syncing up 6 months from now, seeing where you guys are at.
Yeah, it'll be. I think we'll have some stuff people can really play with by then from us or our partners. So it should be fun. Thanks for having me.
Beautiful. Thanks, Patrick, man.
Thanks, guys.
Cheers, man.
Yeah. Thanks for coming on.
All right, Rob, we got 12:45. We're a little hungry over here. We got our next set of speakers coming in 1 hour or so.
Just after the break.
We have got, looks like William from Botanics, SY, Story, Guy, Jeff.
Jeff from Hemi.
Jeff Garzik and Tarun looking at getting them up. So I think we'll take a break now.
Yeah.
And come back for lunch.
All right, let's hit it. Stand by. We'll be right back.
Stand by.
A little bit, bro. You got a little hold on when you lift up and you shake hands. So.
Oh boy.
Yeah.
Okay.
That's classic. All right, boys. better retweet everything, bro.
Yes, 100%.
Fucking idiot.
Of course. Right now? Here.
It is an upper oven.
Yeah,
Man.
didn't expect that in New York.
So Peak, tell us a little bit about Peak. How did you get started? And what is your story?
Yeah, so the story goes back all the way to 2017 already. Back then was early Ethereum days in Berlin, lots of meetups, and there was also IOTA around. I don't know if you guys are familiar, like long time
DAG.
ago. Yeah, it's the DAG,
The
exactly.
acyclic
Directed
graph.
DAG,
acyclic
dude.
graph.
Who needs blockchains? We have DAGs.
Exactly. Distributed ledger technology.
Right.
That's right.
Yeah,
Enterprise chains.
Why use a two-dimensional blockchain? We can have a three-dimensional DAG.
Web,
Exactly.
brother.
So the tech didn't work as promised, yet the vision of the machine economy was something that really captivated us. And I mean, back then there was just Ethereum, so you couldn't really build anything scalable on Ethereum, right? Way too expensive and slow. So we then went on to see, okay, what are real problems and business cases we can build when we apply IoT to blockchain? And then went on to work with the likes of Audi and the Volkswagen Group on things like a decentralized charging platform. That was in 2019.
Yeah,
And
and charging for like
electric vehicles.
cars. Yeah,
Yes. And that was the first kind of deepen concept we worked on, because one of the Audi managers said, there must be a way how my car is paying the charging station of my father-in-law peer-to-peer in crypto, because he always gave him cash after charging at his house. And that was the first time we thought about, okay, we could crowdsource private infrastructure like charging stations and make them accessible and share them with people.
So what the grandfather uses cash and he pays the grandson to charge his car? What could you just
No, that was the Audi manager.
Okay.
Whenever with his wife visiting her dad, basically paid his father-in-law in cash whenever he charged at his home. Like a very German thing
Right,
to do. Like
yeah,
you charge at your relative's home,
Yeah,
you
yeah.
just give them cash for
Okay.
the €5.
Okay.
And he thought there must be a way how this happens in a digital way, right? Where
Okay.
like the car is paying the charging station in crypto,
Yeah.
for example.
Okay.
And
Yeah.
that's where he thought, like, can we not just use blockchain so my car can pay the charging station peer-to-peer?
Okay. So there's no need for a credit card swipe. My car is going to pay
Exactly.
the charger.
Exactly.
Okay.
And that was the first deepen concept we worked on, kind of. And in 2021, we realized charging is one use case. If you think about the smart city of the future, you have drones, you have cars, you have humanoids, you have sensors, we have all our AI agents. They all need to be able to offer goods and services and transact with each other seamlessly.
Yeah.
So you need that open economic infrastructure, if you want so, like an open economic free market for machines. And that's where the vision for Peak came from, where we said, okay, we're going to build a dedicated layer 1 blockchain for the machine economy, where standards for the machine, such as identity, time, access control, trust, and accountability, are part of the runtime of the blockchain itself. So they are part of the blockchain, and they're not on the smart contract level.
Okay.
And that makes it more standardized and secure and trustworthy. And yeah, that's kind of where we're coming from. And then 2022, the Deepin was coined, which was amazing because we've been building a layer 1 for Deepin all the time with a bigger vision of the machine economy. But it really helped us, of course, to like gain a lot of traction, getting a lot of Deepins on chain.
Yeah.
And yeah, but working.
So maybe you could sort of connect some of the dots, because IoT, the Internet of Things, was sort of a big concept, maybe 2017, 2018.
Yeah.
It was like, I'm going to connect my air conditioning to my garage sensor so that when my garage goes up, the AC turns on, I walk into my house, right? All these things are sort of synchronous and aware of one another. And then IoT maybe got overshadowed by blockchain for a little bit. So what has been is that still the vision? What has been the progression of IoT since 2017, 2018? Chargers and cars and these things are becoming a lot more prolific, but you can use a credit card. Like, why is it so important that the machines themselves talk to one another.
Yeah. So I think this is really where the first generation of IoT was very basic. A sensor that records data and sends it to some centralized server, which then says, okay, open the garage or do something. So it's really about data collection and like very basic IoT. And what we're heading to now is with AI and robotics really taking off, that machines like are not just dumb IoT devices which send and transmit data, but become actual economic agents as well. Tesla just started robotaxi services as well in Austin 2 days ago. So we have now real revenue generating autonomous machines.
Right.
And that Tesla is doing a right, like picking someone up.
Like Waymo.
Like Waymo, exactly, and then can pay a charging station peer-to-peer. You have a lot of 𝘸𝘪𝘵𝗏s that generate, like crowdsource data, which is then going to be used by humanoids to navigate through the real world, kind of knowing what's going on in which part of the city. And that's something where, and now all this IoT data becomes open, accessible, tradable. Data is one thing, energy is another thing, connectivity, and really thinking about it as an infrastructure, an open economic infrastructure, where machines can openly transact, because on Web 2 a machine is just existing in one closed system.
Right.
Like in Web 2 machines are not free economic agents because they are behind that closed wall basically.
Okay. And so my understanding, I haven't been in one of these robo-taxis. I'm curious, maybe they launch them in New York, we'll take them sometime soon. The experience right now is not one of blockchain-based economic system. But I can imagine where a humanoid goes into a store and has some spending capabilities. So what is the consumer-facing change in perception from a Waymo or a robo-taxi or a humanoid that is an economic agent, it's generating some revenue? What's the change from going to from the current system to one that enables peak, open, decentralized economic systems between these machines? What is the change viewable to the consumer?
I think actually on the consumer side, it's going to be very much abstracted away. So I think all of us we're gonna have our own agents, and we just tell the agent, hey, I wanna go to this place, and I want to pick up a coffee on the way. And then the agent goes and finds the cheapest or the best coffee, finds the best ride to get there, and is going to do the booking in the background. And a lot of that is going to be in peer-to-peer transactions, because even though the robo cafe or like the coffee shop or the car is owned maybe by a big centralized company, the economic transaction will happen more and more peer-to-peer, because they will be independent of one big platform, right? Like everyone will be offering their goods and services, no matter if the machines are owned by a big company or by an individual. And then you have that peer-to-peer transaction, and you also need to make sure that you can trust the actors that are transacting and acting, right? You need reputation on chain, you need accountability, and this is kind of the infrastructure we're building.
Yeah, so I'm curious, like outside of Peak, but within this broader, kind of area of work, who are some of the teams that you think are most compelling to look at for investors and for people who want to be inspired by new ideas? Like, which teams are tackling what challenges that are like interesting in this category outside of Peak? Obviously, what you guys are doing is great. Who else is doing great work?
So we have a lot of projects building the ecosystem, right? 𝘸𝘪𝘵𝗏𝗏, some of them, but there are also, of course, projects outside of the ecosystem we're collaborating with. I think GeoDNet is always a great example where they really created a better service with 𝘸𝘸𝗏 than existing in a centralized way. So they outperformed their centralized competitors, and that location data is also crucial for robotics being able to navigate the real world. 375 AI, building a network of really mapping the real world in real time, so that you know what is happening in New York, for example, in every corner, and that just enables also autonomous cars, machines, and so many other things to take place, because you need an accurate representation of the real world in real time. Those are like some examples. Yeah, like another interesting concept now emerging is machine tokenization, where like one is the building the infrastructure side of things, and the other part is owning those revenue generating machines and owning a small share in it. So you have a new asset class coming on chain, and you can build, for example, you have a new form of collateral, and like really make revenue generating machines liquid.
Revenue generating machines liquid. And so, one announcement that I think is going to tie in here, and I'm curious about your perspective on it, is Uber recently announced that they were considering launching a stable coin. And I think this was mostly to bring down their cost of settlement for financial transactions as they're paying their drivers, right? Because they're essentially a money transmitter. The riders pay Uber, and then Uber pays the driver. And so theoretically, making those transactions peer-to-peer is a lot more efficient. Yeah. What's your perspective first on the way that Uber could incorporate a more direct economic transfer of value?
Yes, I mean, Uber has built the dominant platform for booking car rides, and what I think will happen is that they eventually open up that, for example, your agent will be able to book an Uber ride without you having to have an Uber account. So like they still have the fleet, they make sure it's secure, they make sure you can like trust the drivers and there's some rating, but like the booking process will also be possible to be done in a more peer-to-peer way. And of course, like if we manage to solve trust on scale, there's even a world where you can have car sharing without needing Uber in the middle as a company facilitating that.
Right.
But that requires a lot of trust, a very well thought out trust system that can make sure that nothing happens, and like you can really trust the car you go in and go for the ride.
So when you're building out this business, where are you in your stage of development? Do you have a proof of concept and a prototype? And generally, are you starting to see adoption? Where are you guys in the cycle now?
So the layer 1 is launched. There are more than 60 teams building on chain. There are more than 5 million machines, devices, sensors already on chain with their on-chain identity. And just 2 weeks ago, we announced the first machine economy free zone in the world in the United Arab Emirates, where we're going to do like large-scale smart city deployments of that deep in infrastructure, working on regulatory frameworks such as machine tokenization. So yeah, it sounds futuristic, but it's happening actually already.
Yeah, these guys are building entirely new cities, and they've got the funding to do it. You mentioned machine tokenization earlier, and I'm curious, for anyone who may not realize what that means, what is machine tokenization?
Yeah, so imagine a robo-cafe. You see them at some airports now, for example, San Francisco, there's one. So you have an autonomous machine that is generating revenue by itself by making coffee and selling that coffee. And those cost around 100, 200K. And now
the robot itself to make the coffee. Yeah, there was a conference, I think it might have been East Denver. They had again this coffee machine. It was a robot arm, and it would pump the syrup and it would drop the beans. It was all entirely autonomous.
Exactly.
And it would make you your coffee.
Exactly.
Okay, so one of those machines costs about 200,000 or so.
Exactly, and now you can crowdfund the capital, so people can invest into it. Like you can crowdfund it in a community.
Fractional ownership of it.
Fractional ownership. And then the revenue or profits are streamed on chain, they're programmable, and you can actually, for the first time, own a share in a revenue generating machine, which is a new asset class basically, and an innovation in capital formation as well.
I can see this in Waymo and some of these autonomous robo-taxis too, where what if there was a company that would produce the hardware, but then basically offer like a franchise model. Maybe it costs $50,000, $100,000 to put one of these driverless taxis on the road. we crowdfund it, right? We each put in, 25K, we split it, and then you're saying that the payments get automatically streamed to both of us, whether it's coffee, whether it's rides. All of this would occur on chain.
Exactly, and then you have an asset which has a earning history on chain, which you can use as collateral then as well. So you go to borrowing and lending protocol, you put your fractional ownership, and then the loan could even repay itself from the yield that the asset is generating. So you create like a hyper efficient liquid on-chain market around those assets.
It's incredible. It's incredible. And would that require us to put up the capital, or for the people buying coffee, would that require them to pay in crypto, or no? You would just have some off ramp or on ramp that would take that into a stable coin?
Yeah.
Fascinating.
Yeah.
Leonard, thank you so much for joining, man.
Thank you so much.
It's been a pleasure. I think the machine economy is still sort of theoretical to a lot of people, but with driverless cars, with more of these coffee machines coming online, we're only going to see more and more of these machines participating in the machine economy. So
it's happening.
Great job building the network.
Thanks a lot for having me.
Let's catch up again soon.
Sounds great. Thank you.
See you next time.
See you next time.
Cheers.
Cheers.
Yeah, see you next time. It's fascinating. We keep it rolling out here. The machine economy, it doesn't die, it just lives on. I think waving to our friends. What's up? What's up? I think we're good. Let's get Willem up here. We're going to talk about spider chains and botanics. Yeah, it is live stream. Yeah, we're live right now. Enjoying the furnace, New York.
It's quite hot here.
Yeah,
Crazy.
We got a heat wave.
Yeah.
Yeah. When where are you from originally?
Belgium, but I live in right here.
Here in New York.
Yeah,
oh, in Manhattan. Awesome. Man.
We didn't have any spring this year.
No, we went straight from winter to summer.
Yeah.
Yeah, man. Bad. Well, you are another builder in the Bitcoin ecosystem. Man, I mean, welcome to the show. First off. This permissionless is sort of at like the top layer of a lot of these ecosystems. It's not a traditionally ETH conference. It's got a Bitcoin track in here. And so there's sort of a melting pot of a lot of different groups. When you're approaching kind of like the modern state of crypto and blockchain, and you kind of look at all of these ecosystems, why do you choose to continue to build on Bitcoin? Like the first one that was ever here, you haven't gotten strayed or distracted by any of the other ecosystems or shiny new toys. You've continued to stay and build on Bitcoin. Why is that?
Yeah, absolutely. That's the camera panel?
Yeah, we've got.
Make sure I look into the camera.
Yep.
I think that's a really good question. And I actually see these two worlds, the TradFi world, getting very popular these days. ETFs, Bitcoin treasury companies, and then you see the on-chain world, typically on Ethereum, on Solana, on Ethereum layer 2s. And Bitcoin as the big asset sits right there in the middle, and so you can see the two worlds, and they're slowly converging. And I've always been a big believer in Bitcoin, just because I believe the world needs a decentralized currency. It is so important. So I ideologically want Bitcoin as fast as possible to become the next world reserve currency. But then again, you have all these applications. You have a huge amount of product market fit, so much value being created in the on-chain economy. But a lot of Bitcoiners don't want to do that ideologically. And so what I see is basically in the TradFi world, all these Bitcoiners are doing the TradFi stuff because they can't do it on Bitcoin, but they want to do it on Bitcoin.
Yeah.
One big example that I keep using is borrowing dollars against your Bitcoin.
Yeah.
Right?
Yeah.
You can do it with centralized companies. There's a bunch of centralized companies. The interest rate you pay with Aladdin, and now you have Strike and others coming there, is 12%.
Right.
These are tens of billions of dollars of volume.
Yeah.
Right? And they pay 12% interest rate. Do exactly the same thing, same loan to value ratio. Do it on Aave, and you pay 3%.
Right.
That's a 4x difference.
Yeah.
But the only reason a lot of those Bitcoiners do that is because they wanna make Bitcoin ideologically the next world reserve currency. And so they always feel a little bit icky doing that on Ethereum, right? Even though I know a lot of Bitcoin maxis that borrow stablecoins on Aave because they want to buy a house, right? But if they could do it on Bitcoin, that is a game changer. Yeah. And so that's why I believe Bitcoin Layer 2s solve this massive gap in the middle between this on-chain world in Ethereum and Solana and the TradFi world. So I've never believed in the story that a lot of more crypto people say is Bitcoiners don't want to do anything except for hodl. Right. I think that's the biggest misconception in the world. All the Bitcoiners want to do is make more Bitcoin, and they are as degen as anyone else, but they want to do it on Bitcoin. Yeah. And that's the game changer here. And so you can ask yourself, like, we've been building now for 2 years. Actually, I was at the forefront. I think we were the first Bitcoin L2 when I was first fundraising. There was no one else. We've been building on Bitcoin for 2 years. It's really hard to actually build on Bitcoin if you're not launching an optimistic roll-up on Ethereum. Actually building on Bitcoin is hard. And we've been able to convince Chainlink, GMX, and a few others, and that's exactly what they see. If you are an Ethereum application, what you're looking for is net new users, right? Like, it's the same user base in the world of crypto that turns around. Where are the net new users? They're in Bitcoin, right? They want to do this stuff. They want to have self-custody on chain, but they kind of don't want to do it on Ethereum. And so they see that. And so any application in Ethereum is like, damn, that actually might be the case. And so they're all coming over.
And so I think your point about Bitcoiners not just wanting to hold, but they believe in Bitcoin as a store of value. And I think a lot of times they almost shoot themselves in the foot by just holding, when in reality, the mindset that you describe is stack sats. Make your Bitcoin productive so that you earn more, and do that through interest, generate some yield, make it a productive asset so that you can earn more Bitcoin without giving up any of the security benefits that a stable, secure Bitcoin gives you. And so I think the pushback has been, look, we don't want to use Bitcoin in Aave because it's wrapped. We want native Bitcoin. We want intrinsic Bitcoin on the Bitcoin network. And so when you're building a Bitcoin L2 and you're thinking, okay, the people that own Bitcoin, they believe in it, they think it's a store of value, let's earn them more Bitcoin, give them Bitcoin yield. How do you make sure that you're giving the Bitcoiners real Bitcoin? How do you make sure that you're giving them real Bitcoin yield so that they don't have to worry about the security or stability of the mechanism? They can hold and earn exactly what they know and love, and that's Bitcoin as they know it.
Absolutely. I think that's a great question. And as always, we as Botanics do something different.
Okay.
A lot of people have been thinking about Bitcoin yield. Let's offer Bitcoin yield and let's do that in a token that, of course, always goes down in price.
Right. So like you hold Bitcoin, but we're going to pay you some Fugazi meme coin in yield, right? So you think you're earning 150% on your Bitcoin, but it's not like your Bitcoin is earning you more Bitcoin. Your Bitcoin's earning you some Fugazi coin.
Absolutely.
Okay.
So we don't do that.
Okay.
So we offer Bitcoin yield, but it's in Bitcoin. It's actually in Bitcoin.
Okay.
And that's a game changer. And how we do that, and it's very interesting because I see this paradigm where all Ethereum layer 2s just get 100% of the gas fees. Why is that the case? I think that's very weird. No, and nobody seemed to have challenged that.
You're saying Ethereum L2s get 100% of the gas fees. They don't give any back to Ethereum L1?
Yeah, they pay for the data, right?
Right. Yeah. But Ethereum DA, they've made it so abundant that it's so affordable for L2s. They hardly pay anything back to the Ethereum L1.
Exactly. So we as Botanics, how we fund the Bitcoin yield is 50% of all the gas fees in Bitcoin, of course, actually accrue back to the stakers.
Oh, so the native gas token
is Bitcoin.
Okay, and so for like as an L2, it's usually the sequencer, right? If it's the L1, it's the proposers, but you have this network that's accruing gas fees, and it's all of the stakers on Botanics accrue Bitcoin, and there's a revenue sharing model that redistributes the Bitcoin gas fees back to the Bitcoin holders in the network?
Exactly.
Okay.
So in essence, it's a mechanism that it's up only in Bitcoin. Okay, the yields might not be 150%, but if it's 5%, that is sustainable. It's Bitcoin only, and you know it's gonna be there, right?
Yeah.
And so that's a game changer.
Yeah.
And I actually think having Bitcoin as the gas fee is way more important than you think. Like earlier, you said like, oh, a Bitcoiner might not want to use Aave because it's wrapped Bitcoin. I think the biggest issue that the Bitcoiners would have is that it's on Ethereum and they have to pay Ethereum gas fees, and they're typically more against that. But for them seeing, and it's a psychology thing, right? For them seeing Bitcoin on their phone, on their computer screen, and they're paying in Bitcoin, they absolutely love that.
Yeah.
Like the Lightning Network is actually massively increasing in adoption, even though the user experience is really bad, but these Bitcoiners, they just want to use Bitcoin. And it's actually mostly in the emerging markets where there's a lot of circular economies being built. Like if you go to El Salvador, there's a huge amount of communities in Africa where people are starting to pay to each other with Bitcoin. They are educating themselves of Bitcoin, but it's typically Bitcoin only, which is very interesting.
And there's another thing that's happening in those regional demographics that is very fascinating, and it's the adoption of stable coins. And this is intuitively tied to Bitcoin, the asset. I tend to think that we will see a Bitcoin-backed stable coin that takes charge and takes hold in some of these regional demographics. And so right now, most of the US dollar stable coins are denominated with US dollar reserves. But I think as Bitcoin continues to proliferate, we're going to end up seeing a Bitcoin-backed stable coin that, again, has the same regional foothold in some of those areas that you talk about. And this is a massive market because Bitcoin is, correct me if I'm wrong here, but Bitcoin is the most pristine collateral.
Yeah.
And so I'm curious, from your perspective, Bitcoin, the asset. Go ahead if you.
Yeah, I actually want to touch up on that about a Bitcoin-backed stablecoin. Going back to our yield model, so now you have a token, we call it STBTC, that is yield accruing in Bitcoin automatically with the gas fees.
Staked Bitcoin.
Yeah, exactly. Right. What if you actually can stake your Bitcoin and you have a Bitcoin-backed stablecoin where actually it's staked Bitcoin, increasing yields, right? This is a new DeFi paradigm that we've not seen. So people have always asked me, like, how in the world would ever Bitcoin DeFi pick up if you have exactly the same things on Ethereum? But this is a new paradigm, and this is definitely for the DeFi power users here. This tokenism representation of inherently yielding Bitcoin opens so many different possibilities, right? You can start leveraging that, you can start using that in different vault programs, and I'm a protocol guy, but I see the teams building on us, like their wires are like immediately like, holy shit, now I have Bitcoin yield in a token form that I can immediately redeem back to Bitcoin instantly, and it's just that Bitcoin, so there's no other mechanics. That opens a lot of DeFi possibilities.
Yeah, I think we see a lot of inflows through ETFs. We were having this conversation earlier. I think we're going to see all of the Bitcoin in those ETFs, or a good chunk of it, become productive and become yield bearing. And soon, potentially, we will even have structured products in traditional markets that will bear yield. And we will have a yield bearing Bitcoin in one of these structured products that also has an on-ramp to the traditional financial world. So I'm curious, from your perspective, Bitcoin, the asset, right? Where do you think we go from here? Like, I was at dinner with a few VCs last night, and it's like, there's sort of the sentiment, maybe it's on Twitter and it's kind of in the community, that like there's really no one else left to buy. Everyone who knows about Bitcoin has already bought Bitcoin. Who is left? But we see these Bitcoin treasury companies. We see more corporate treasuries become Bitcoin. We see more institutional adoption. Nation states, El Salvador, maybe there's a Bitcoin reserve. Maybe it comes from different states in the US or abroad. Who do you think is the next net new buyer of Bitcoin?
Yeah, I mean, you can break it down in different demographics, right? I think when you say a lot of users who have wanted to buy Bitcoin they've already done that. I don't think that's true. It's still a growing base. Every new cycle, there's new entrants, and either they buy Bitcoin, they buy tokens, but it keeps increasing because every new cycle, Bitcoin keeps increasing. So you have the customer user base, but then of course you have the governments, right? The governments have been thinking about this for a long time. Initially, they were like, "Oh, we can launch our own token, right? Or we can launch a digital euro, as Europe is doing right now." And those governments are looking at it. Like more and more governments in the world and countries get banned from the financial system, get banned from SWIFT. I'm quite sure those countries are now trading either over stable coins, but they probably see the value of Bitcoin already. So for governments, it makes a lot of sense. There's a lot of research papers coming out that all the countries that have gold, you might want to get a piece in Bitcoin.
Yeah.
And that is playing out as we speak. They're slow moving, but they'll dip their toes.
Yeah.
Besides that, I think a lot of the companies, I think that makes so much sense. And actually I think a lot of retail today is coming into the cycle with these Bitcoin treasury companies. Unfortunately, they're not on chain. I see a lot of retail buying these companies. These prices, if you look at the charts of the Bitcoin treasury companies, are insane. They're
trading
wild.
At multiples over net asset value. It's incredible.
So I think those people are net new retail users, and unfortunately, they're buying stocks of Bitcoin treasury companies this cycle. But is this where then? Absolutely not. In my world vision, 30 years from now, I actually see Bitcoin as money. Now it's a store of value. With these Bitcoin layer 2s on chain, that can become a medium of exchange. That is slowly starting to happen. And then 30 years from now, it's money.
And so as we sort of extend out one halving, two halvings from now, there's a couple of challenges that Bitcoin may face. One of them is post-quantum security. Maybe you have some thoughts on that. I'm more curious, especially from the perspective of someone building a Bitcoin L2, how will we continue to incentivize security in the network once the block reward has having came down to an extent where it's almost negligible?
Yeah, that's an interesting one because, I'll touch on the quantum later.
Okay.
On the block reward, because that's been a talking point, I think, not in Bitcoin. It's not a talking point in Bitcoin because I don't think any Bitcoiner is worried about that, actually. But it's a very big talking point outside of Bitcoin. And personally, I'm not too worried about the block reward either. Like all these mining companies, they know exactly, they have modeled out, very detailed in those spreadsheets. Okay, what if there's no block reward? And it's built in the protocol. They know 4 years from now it's gonna halve, right? And then you have a lot of free energy in the world. 60% of all the energy is wasted. And so even with a very small block reward, if you have free energy, it still makes a lot of sense to mine. And once you've bought the hardware, it's all about your cost of energy. So I don't think that's a problem in the next 10 years. Maybe by the year 2100, but that's like really, really far away.
Okay.
Now that said, I do see the transaction fees massively increasing. The more Bitcoin layer 2s come online, the more those transaction fees will increase. And we've seen the ordinals that was creating transaction fees for a while, but those things will keep on happening. So I'm not too worried about the block reward actually, because all these mining companies know exactly that the fees are low. They're not betting their company that 4 years from now suddenly in fees are massively going to increase.
Right.
They know exactly where we are.
The network is self-correcting. The difficulty will come down. It will become easier to mine blocks. Yeah. There will be a higher probability of mining. Even if it is a smaller reward, you have a higher probability of earning that reward, plus the transaction fees. And if it's zero, then maybe the transaction fees are more important. But like you said, maybe for the next 75 years, we should be okay.
That's my opinion. And I think we can figure out adoption on the base layer in the next 30 years, so to speak. And if not, there's already proposals within the Bitcoin ecosystem of things you could do to basically solve that. But it's way too early for that. It's not an issue.
As far as covenants or is there? No,
there's things, even with quantum, there's a heavy debate going on. Should we actually let the quantum people eventually steal the Bitcoin that can be accessible, or are we actually going to lock them and set a date, like maybe 4 years from now, everyone who hasn't moved their old Bitcoin will be unspendable. Right? And so that is at this moment, I think, the winning camp. And you could use that maybe to fund the block rewards further, or like there's a bunch of different options there. It's just not really a big issue at the moment because it's so far away.
So inside of these Bitcoin circles, what are some of the more pressing conversations around today? You mentioned quantum's far off, block reward far off. What are some of the more pressing conversations inside of the Bitcoin community today?
I would say quantum is definitely a hot topic.
Oh, it's right now. It's not far enough away.
Yeah, there are definitely more and more people researching it because it is, or it might be, an issue at some point. Now, people always think it will come faster than it actually is because quantum has been talked about for 40 years. Now, AI was being talked about for 60 years, and then it goes very fast suddenly, right? So that's definitely a hot topic. I mean, lately in Bitcoin over the last 3-4 weeks was a very contentious change they did. Bitcoin Core basically changed some of the mempool rules, and a lot of Bitcoiners didn't like that. And so a new competing Bitcoin Core has gained quite a lot of adoption. It's called 𝘠𝘬𝗦𝘬𝘴. They have like 13% of the visible nodes in the network. So that's probably the biggest talking point at the moment, is this contentious upgrade of the mempool only, not of the consensus, that has led to a lot of Bitcoiners disagreeing with Bitcoin Core.
And could you unpack, maybe break that down? Like, what are some of these changes, and how do they affect the end result of Bitcoin?
So it's not consensus changes. It's a mempool only. And in the mempool, your node would typically reject any up return data, it's called, that is larger than 80 bytes. Now there's a way you could actually, besides the mempool, directly ask a miner to mine a block with a bigger data string, right? So you could go around it. And so now they removed that 80 byte limit from the mempool policy. And that has created a lot of pushback because a lot of Bitcoiners are against spamming Bitcoin with data and ordinals, etc. And so now they're running a separate version that still has that mempool policy.
I'm curious, as we kind of wrap up, there's a whole list of Bitcoin L2s these days. Several. Some of them are really Ethereum L2s. They say that they're Bitcoin L2s. When you're looking at all the Bitcoin L2s or claim they're L2s out there, what are some of the ones that you think are doing something well? And then what are the ones that aren't doing so well? Maybe you could say something nice about some of them, and which ones do you think won't be here in a year or two?
Well, I love that question because actually over the last 2 years, because I was one of the first ones, and actually my pre-seed deck, I got on calls with David from Babylon and Alexei from Bob, actually, who was then Interlay. And so he started a few weeks later, so he started Bob. Babylon came out with their Bitcoin staking. After that, I saw a bunch of hundreds of Bitcoin layer 2s raising money. And so at this point, I've kind of seen it all. What I find the most interesting that in Bitcoin land, most people haven't heard of any of the names that are more popular in Ethereum, so to speak. And so it's a very different world, I would say. That said, I think we've seen a lot of Bitcoin layer 2s that are not Bitcoin layer 2s last year come out because they could just ship an Optimism rollup in a week.
Right, with RAS.
The companies that are actually building on Bitcoin, like for example, we, Botanics, like we're only connected to Bitcoin. Bitcoin is a difficult beast to build on, right? Like you cannot, for example, build a native rollup on Bitcoin because you cannot verify the proofs because you don't have those covenants, right? And so that takes a long time building something that new. And I think over the next few months, those teams are going to come online. They've been building for a year, for 2 years. Those are legit Bitcoin layer 2s, and they're doing the right things. And you can actually follow the bets of the Ethereum applications. Like Chainlink is deploying on us. We've got GMX deploying on us. Those are high signals, I would say.
Yeah, absolutely. Awesome. Well, thank you so much for coming on. It's a pleasure to chat Bitcoin. It's one of the few, we're calling this a secular bull run. The bull run's happening in pockets. It's not everything going up at once. Bitcoin's doing well, stablecoin's doing well. There's sort of pockets. So thank you so much for coming on.
One last thing I would say,
please.
if you want to bet on altcoins, knowing what's happening in a broader market, you might want to look at altcoins and tokens that are connected to Bitcoin, that are slowly coming up. That might have some value. Might give some alpha out there.
Oh man, come on! So you gotta drop some names.
Well, we have a bunch of native teams building on top of us that will do their token airdrops very soon.
Okay.
When I say very soon, I say very soon.
So what are some of these native applications in the ecosystem?
Yeah, we've got some Bitcoin-backed stablecoins, actually interest-free Bitcoin-backed stablecoin, where you can borrow against yielding Bitcoin. We've got some two DEXs, so that was Palladium, the Bitcoin-backed stablecoin. We've got Arch and Bitsy, which are two native DEXs following very interesting models. And we've got Artura, which is a perp DEX. Yeah.
Awesome.
Very interesting.
Great. Well, good shout out. Pleasure for coming on.
Absolutely.
Thank you so much. And we'll see you next time. By this time next year, Bitcoin price prediction? You want to give a price prediction?
What are we?
We're 107 today.
Probably 100K.
100?
Yeah, I
so
think
we're going to go down?
No, I think we'll peak between now and next year.
We'll
and we'll be on the road down.
And we'll be back on the road down.
Yeah.
Okay. We'll see. This time next year, we'll see you again soon.
This time in 5 years?
Yeah.
500,000.
500,000 in 5 years.
Yeah.
Okay.
That's good.
That's good. That'll work.
Thank you, sir.
We'll see you next time. Thank you. See ya. Love it. Bitcoin is continuing to fly. It's one of the things that is holding up. So many Bitcoin L2s today. We had 𝘗𝘂𝘏𝘂𝘐𝑒𝑚, the inventor of ZK Snarks, come on earlier. Obviously affiliated with Starknet, doing a great job. That's one of the the few Bitcoin L2s that is sticking around. They're doing 2 years. They'll be online very soon. We will see more and more Bitcoin L2s as well. Hemi, everyone around here is walking around. They have Hemi on their lanyards, and it's because Hemi is really making a strong push into the ecosystem. They're going to be launching very soon, and so it's very exciting to see all of these companies make a very strong push into the Bitcoin L2 ecosystem. There's plenty of Bitcoin value to go around. I think when Ethereum launched, it was so much capital that had to be unleashed. And I think Bitcoin is now in its era where it is going to start, we're going to see Bitcoin rehypothecated to the max, right? Right now, all of this capital is locked up. Even in the traditional financial ecosystem, we're only starting to scratch the surface of rehypothecation. Remember, as these things get more and more tightly wound, that is when we're reaching the top of these cycles. But and part of the evidence for that is if you look at last cycle, you saw Three Arrows Capital, FTX, Alameda, this whole conglomerate there, they all started to rehypothecate one another. All of them were invested in one another, and it really tightly wound the flywheel, such to an extent where it started to splinter and fracture. And so what ended up happening is the entire thing collapsed. Well, right now, Bitcoin is spread out so much that we've got such a long way to go. We can really wind this flywheel until we even get close to something like we saw over in the Ethereum world. And so this is continuing to happen. We're going to see this on the Bitcoin side, and Bitcoin L2s are coming in because they realize that the number one way to rehypothecate these cryptocurrencies and especially Bitcoin is through DeFi. These L2s are coming in, they're launching DeFi applications, and they are coming in order to provide leverage and provide functions to rehypothecate the market value of Bitcoin. So we're going to continue to see that more and more. And Bitcoin is in a prime position for that. Let's see what else we have. Let's see what else we have here coming up next. Let's see. We've got G from Athena Labs. Stablecoins are another thing that's coming in through the secular bull market. And so we're continuing to see this more and more. things are occurring in pockets. And some of the most exciting things out here, stablecoins, Bitcoin, obviously AI. I was having a conversation with 𝘗𝘳𝘁 from EigenLayer just a few minutes ago. They announced EigenCloud recently. They're also starting to incubate a project and starting to roll out a project called VibeScore. This is a very, very cool meme coin incentivization mechanism where they'll essentially score your vibes. They're going to assess the sentiment that you put into the community. And if you're talking positively about something and you have, positive commentary, they're going to incentivize you for doing that. They're going to incentivize you for putting those memes out there, putting those vibes out there, and going to end up incentivizing you to continue talking about that. Loud was one that tried to do this. They didn't do as good of a job. I have confidence in 𝘗𝘳𝘁 and the EigenLayer team to execute on this quite well. They also announced redistribution. Redistribution is, I believe, one of the final steps in slashing, where these teams will get slashed, and that recently went live itself. But now, once those teams get slashed, it's like, okay, well, where does that stake go? The stake gets slashed, and now it's possible for them to redistribute those staked assets, those slashed assets, back to the community, back to token holders, back to validators. And this is sort of the completing step of what EigenLayer's staking mechanism was sort of touted to be. I think one of the most exciting mechanisms here at play is that, of course, EigenLayer 12 billion in TVL. It's this massive stockpile of value, and it's earning yields, earning some Eigen tokens, earning some APY there. But what I'm starting to see is like, okay, now that we have all of this capital, let's turn it into productive capital. Let's take this 12 billion in capital and start to measure capital velocity. Again, how quickly can we turn over this capital so that it's moving through the ecosystem and it's being rehypothecated and redistributed on an ever evolving basis. I think this is what's really going to drive revenue, because it's going to make revenue flywheel into the direction of those that are best positioned for capital allocation. And so now, because you see capital just sitting there, it's almost like a rich get richer mechanism. You're not rewarding those that are effectively allocating capital. And so what we're starting to see is that people will get incentivized for picking winners and losers, for properly allocating capital. It's no longer that you can just have capital and earn a lot from that. You're going to have to do something with that capital. Maybe there's some risk-free rate of return and you can still do quite well just at baseline having some capital, but it's going to become increasingly important to position that capital and allocate it effectively so that you're maximizing your earnings as a result. Because of this capital velocity, because it's moving so quickly, it's going to become such a focus in order to retain those earnings. And so this is something that I expect EigenLayer to capitalize on, because they have so many options for allocations throughout all of their AVSs. Polymarket is also doing some very cool things on EigenLayer. UMA and the Optimistic Oracle is doing some very cool things in conjunction with Polymarket and EigenLayer. So that's another ecosystem that I'm particularly excited about, in addition to the Bitcoin ecosystem, the stablecoin ecosystem. These are all things that are doing quite well. And I'm going to continue to bet on these things because these are what's driving the secular bull market. This bull market is occurring in pockets. When we get some eased monetary policy, I think we can all expect things will rise in unison. Once they start cutting rates, you can look at the Fed balance sheet. Once that stops declining and starts to rise again, that's when they're starting to inject liquidity back into the system. And ultimately, that liquidity is what these coins are priced in. And so when we inflate the supply of dollars, everything priced in dollars, including altcoins as well as Bitcoin, is going to rise relative to the inflating supply of dollars. That's a given. But in this in-between state, it's a really, really interesting time, because we're going to continue to see opportunities to separate from the pack. The pack right now is just that baseline. It's like, okay, well, right now we have things that are going up, things that are going down, but on average, everything is sort of fluctuating around equilibrium. We haven't seen a whole lot in the movement of, even take Bitcoin, for example. It's been pretty steady around that 100, 110, 90, between 90 and 110, really. We haven't seen it kind of move out of that range. And so that is sort of a proxy for the rest of the ecosystem. We've seen some new launches do quite well. Those are rising. Those are sectors that are doing quite well. New coin, good coin, shiny thing is good. But we've also seen things that have started to taper off. And so again, on average, this industry and this market has been relatively stagnant. But it provides an opportunity where if you're allocating, if you're really doing your research and you're allocating with a thesis, you can start to rise in this market because there's such a wide dispersion. Things are happening, but they're happening both positive and negative, and they're really evening out, they're averaging out. And so as we continue to move in the direction with new launches, adoption of technology, institutional adoption, and easing monetary policy, the factors and the ingredients are really here for a prime market. It's just going to be about, in the meantime, starting to find the separation and those that distinguish from the pack as dispersion continues to happen. And then ultimately, you're going to start to find, and typically what happens is if you can be well-researched now and find those well-placed opportunities, double down on the winners, because those are the ones that run the most when everything starts to rise in unison. And so I think that is the mindset going forward. This is the investment thesis, at least on Andy and I's fund. We're going to be announcing some interesting things on the fund side very soon. We're going to be announcing some things that are going to start to shake up the corporate structure that we have here at the Rollup. And so I'm very excited about that. It's been a work in progress for sure. It's been a team effort. We've got a team on site here. In addition to Andy and I, Andy should be back here soon. I think he's doing a panel. We're gonna have we have four team members here. Shout out to Broderick. Shout out to Marcelo. Shout out to Kevin and Brendan. These guys are helping us out behind the scenes. And we've also got a team back at home that is helping us out on all of the production, all of the great clips you guys are seeing, all of the copy. These guys are just wizards when it comes to this stuff. Couldn't do it without them. Give them all the credit in the world. And so the team is exceedingly important out here. It's hot, stay hydrated. And so the media company is doing big things. We're seeing more and more happening on the fund side as well. But I like to think about the market in a couple different ways. One of those dimensions and lens that we see it through is this pendulum that swings from return on labor to return on capital. And so capital being the fund, labor being the day-to-day business that you see us working and grinding on. And there's a lot that happens here behind the scenes. We're going to continue to grind on both these directions, but just keep in mind that pendulum swings with the market, and we always try to keep a long-term perspective when it does come to these things. I think we've got Guy from Athena here visiting us very soon. And so as we continue to swing that pendulum, we're going to continue to stay focused, stay directed on our market. Now, the other thing that's important to mention is a shout out to our partners and our sponsors. We see countless projects come through the ecosystem. Some of them come and go. A lot of our partners have been with us for several months, and I think it's important to shout them out. You heard from RouteScan earlier today. We've also got Risk Zero. We've got Starknet. We've got Vertex. We've got Mantle. And of course, last but certainly not least, is our title sponsor for Permissionless, EtherFi. You guys saw the cash card EtherFi launched. We're running a promotion right now. $50 back on your first 1,000. That's a 5% cash back. No other credit card or debit card is offering that at all. And that is a 5% cash back on your first $1,000. Literally, you can just get money back for free, and it's perfect. It does everything that you would want a debit card to do, especially if you have some capital that sits on chain, and you don't want to really be responsible for moving that into a custodian, through an off-ramp, into a fiat account. If you want to just have that entire process handled for you, all you have to do, get your EtherFi Cash card. I think we have a ref link going. It might be somewhere in the show notes. It might be somewhere in the comments. Grab that ref link, get yourself a cash card. You can sign up today. Make sure you get your friend one. You can get your company one. We have all of these exciting offers. That EtherFi. It's an incredible feeling being out here at Permissionless in the mix. We're shaking hands, we're making moves, and you know, it's really an interesting time because the energy in the room these days is a sense of maturity. We're not this young, nascent industry that we once were, full of cypherpunks and anarchists, right? We almost wanted to revolutionize the financial ecosystem. Bitcoin is the next global reserve currency, and that very well may happen, but you've heard from us, this was always going to be a peaceful revolution, one that takes time. This wasn't going to happen overnight. It wasn't going to be an overthrow. Look, the US dollar is being inflated away one money printer at a time. This does not happen overnight. And even in the case of hyperinflation, you don't just blink and then next thing you know, we've got our purchasing power inflated away. Even during COVID, the years 2019, 2020, 2021, you're starting to hear that with the national debt. But in reality, the national debt is where it is because they printed so many dollars. And not only did that increase the national debt, it also inflated away our purchasing power. It's the same reason people are having trouble buying homes. You see many people are starting to have trouble making savings, having things. Everyone is working, everyone's living to paycheck, and this is a very difficult thing to be faced with. And so what we're seeing these days is that in purchasing power is being inflated away. That is where Bitcoin comes in, and you heard it from William, you heard it from Ellie, you're gonna hear it from 𝘱𝑒𝘪𝑔𝑒 later today. These are the guys that are building the Bitcoin ecosystem because they saw the forest through the trees. They saw Bitcoin as the global reserve currency from the very beginning. This is the way the world is moving. This is the direction that we're headed, and we're not slowing down. We're only increasing. It's going to be very interesting. I think we're seeing some things play out in the macro world, and you can't ignore what's happening in macro because ultimately this is the global liquidity landscape, and Bitcoin is becoming more and more ingrained into the global liquidity landscape. And so this is only continuing to proliferate, and it's important that we continue to get a grasp of Bitcoin and the global liquidity landscape, as well as the institutional landscape of stablecoins, payment processors, software companies, every company that's using the cloud, a database, blockchain-based databases, Ethereum, the world computer. You heard from, who did you hear from earlier that was speaking about how, I believe it was Patrick O'Grady from Commonwear. We're seeing the margins, the marginal cost of Web3 versus Web2 become compressed. And as we compress the cost between these services more and more, you'll start to see, well, even if it's a marginal cost increase, the value of a blockchain, of a unified state, something that has everything in one place, and you can make it programmable, and you can make it productive, and it has the capacity to own your assets and custody your assets on your behalf. The value of Web3 far and exceeds the value of Web2. And if you can get all of these benefits, including the verifiability and the productivity of Web3, and you can put that into a mechanism that only has a small, very thin marginal cost beyond the Web2 alternative, you're going to start to see it's a no-brainer to switch and pivot into the Web3 vendor of these services. And I think this is what we're going to continue to see. Again, this does not happen overnight. This takes everyone at this conference is hand-to-hand combat with these institutions, with these providers, and they're going about it, and they're making these deals so that we're bringing more and more of these companies into the fold on chain. And ultimately, this is the work that's happening at Permissionless. I believe our next guest coming up very soon is Guy from Athena. Let's see where he is. We should have him coming in very, very soon. Let's go to standby here for a moment as we wait for our next guest. We're going to be right back. We'll see you guys very, very soon. Don't go anywhere. Remember, EtherFi. Here, one of these is fine.
Should I tell my team to be ready to
clip and repost?
repost?
Yeah. They can repost the live link now. It's pinned on our Twitter, and especially since they should retweet the live stream now, and then we'll send any clips of the segment.
One sec.
Yeah, you guys on?
Yeah. Here's Tarun. What's up?
Yeah,
No, I think we actually have a fourth mic, but you can come in whenever.
Yeah, man. Thanks, Josh.
Sure.
It's just out the Rollup, right?
Yeah.
Yeah.
Or it's at the Rollup Co.
Oh.
Yeah. Are we good? What's that?
Let's have a spicy.
3? Okay. All right, so we'll just keep it somewhat quick.
Yeah.
Are we good? All right, we are back live for Permissionless. We've got our buddy James here, founder of Mode. We're gonna talk about the Mode comeback story. It's all around AI. And so, James, welcome to the show, buddy.
Thank you so much for having me. It's good to be here.
Yeah.
IRL.
Absolutely, man. We're coming at you live. What do you think about this? Besides the heat, what do you think about the conference so far?
Very cool conference, cool people. Yeah, good vibes in general. Love New York, love the city. Yeah, it's great.
No complaints.
Yeah, they always do a good job.
Yeah,
the
they do.
Guys.
They do. Okay, so tell us about the Mode comeback story and everything that's happening with DeFi AI.
Yeah, for sure. So the Mode journey's been it's been fun. It's been interesting. It's been challenging. I think the last few months really helped us kind of refine what we're trying to achieve and what we want AI to do for our users that no one else can do, right? So we launched the Mode Trade perps DEX with Orderly, and we started to see people trade and people use different applications across Mode, and we started to build out all these tools, these AI tools, and we've really started to bring them together. So now you have Mode's AI terminal, just one simple product, and you have Mode Trade.
Okay.
And in the AI terminal, you can do things like go long on ETH, go long on Fartcoin. You can now use Mode terminal to analyze your positions by doing things like taking a screenshot, putting that position into the terminal, getting it to analyze it. And you can also do this with you could take a screenshot of your position on Binance, Bybit. So the Mode terminal is kind of becoming a wider AI product. And the big differentiator is that we have a lot of this predictive data, forecasting data that comes from the synth subnet, and that's all plugged in. So you can do things like take a position, maybe you opened a long position on Bitcoin, and you can start to add that and get analysis on that, and also understand the probability that position will be in profit or loss over the next 24 hours.
Okay.
Using the data from Synth. So it's we've been building all these different tools, and now we're kind of bringing them all together. And Mode is really becoming more of an app chain focused on the perps DEX and all this AI tooling around it.
Yeah. Okay. And so I think the most intuitive thing here is an AI chatbot that allows transactions to be made on a user's behalf.
Yeah, exactly.
And it sounds like something like this is already live. You can go long on ETH and Bitcoin and Fartcoin and do some of these things.
Yeah.
It's kind of the next piece of okay, I want to do more on chain, but I also want to be I want recommendations on what I should not just what I can do, but what I should do.
Yeah, I think we can't say recommendations because we're not giving financial advice, but you can query the synth subnet, which is giving predictive analysis and essentially volatility forecasts. So saying, if you're going long on Bitcoin and you have a low risk tolerance, here's some ideas where you could put a stop loss, right?
Yeah.
Things like that. It's helping people think more probabilistically about how they're trading And it's that like intelligence piece that's kind of key, because people say to us, how are you going to compete with Hyperliquid on the perps decks?
Right.
You're never going to have as much liquidity. You're never going to have like the same like trading engine, right? And we're like, we're not. We're competing on having these like tools, and the synth kind of data layer is extremely powerful. We have like roughly $2 million per year being paid out in rewards to the miners. So the data is crazy high quality. And it's really useful for people to use to try and rethink how they trade.
Okay, awesome. I'm fascinated because I think it makes sense, right? We can use that data. We can't call it recommendation, but we can use that data however we want to use that data. Where this ends up going, we had a guy earlier talking about, can an AI get like a money transmitter license in order to do some of these things? Can an AI become like a certified financial advisor to actually make those recommendations? It's probably smarter than a lot of financial advisors. And so it's going to be really, really cool to see how the regulatory landscape in AI starts to move, but also in crypto, and then these things obviously are going to intersect quite a bit. What are you personally excited about? Maybe it's something on Mode, maybe it's somewhere like else, but when you're coming at this industry, what keeps you coming back? What are you most excited about?
I think like the way I look at crypto evolving is very much through like a series of very specialized agents. Or not crypto, I just mean all of finance, right? And even like how we manage our personal lives. Like you're gonna have a legal agent which does all your legal stuff. You're gonna have maybe like an agent which looks after maybe it's like scheduling certain things. You're going to have like a 𝘗𝘯𝘵 band. I'm going to have a fitness agent, which is giving me much smarter recommendations than I get in the 𝘗𝘯𝘵 app. And we're going to have financial agents. We're going to have crypto agents, which are very specialized. They are custom to how you as a user want them to be. They're custom to your risk tolerance. And they will go and they will manage your assets for you on chain, or even like potentially off chain within your savings accounts. And like you as a human are going to be managing all these different agents, and your ability to grow will be about how good you are at managing all these agents and like directing them in the way you want to direct them, right? If you want to take a lot of risk, you're probably going to get a lot of crypto agents that like run high risk strategies, right? If you don't want a lot of risk, you might have like very simple agents, just do like very basic things like keep your money in like T-bills and a bit of Bitcoin maybe.
We're entering the discoverability era for some of these agents because they're becoming a lot more specialized. Right now, there's a handful of big LLMs, billions of weights, and we're going to slowly dial those in until they become more and more specialized.
Yeah, absolutely.
James, thank you so much for coming on, man. We appreciate you coming on. We'll see you around the conference, and enjoy New York.
Thanks for having me. It's been a pleasure.
Cheers, buddy.
Thank you.
We'll see you again soon.
Amazing, for sure.
Cheers. And I think coming up next, feel free.
Jump off.
Do your thing. Coming up next, we've got Jeff Garzik, but we've also got 𝘗𝘓𝘃𝗔𝗓 in the building. And so we're going to get Andy back in here. We're going to start to go full throttle once again. And so we've got a full afternoon slate coming up very, very soon. And so stay tuned. We've got more Bitcoin content. 𝘗𝘓𝘃, if you haven't seen 𝘗𝘓𝘃 on our show before, 𝘗𝘓𝘃's the man, the colorful personality, to say the least. He's going to be coming in hot with lots of takes. Very, very smart dude. On AI, quantum security. There's so many interesting things that are happening these days. And so I think Jeff is coming in first. There he is. What's up, the man of the hour?
How's it going?
Good, good.
I've got a broken right hand, so I have to shake with my left.
Yeah, did that just happen?
2 months ago, so I just took the cast off.
Okay. I had a buddy that just had rotator cuff on, and sometimes he's got the cast, sometimes he doesn't, so I understand. Well, We're gonna do our best to heal you through the power of conversation and education.
Awesome.
I already gave kudos to Phil. Everyone here looks like they work for Hemi. I'm just gonna hold up your. You guys haven't seen this already. It is incredible.
We're back.
We're back. Welcome
All
back,
right,
brother.
everybody works at Hemi at Permissionless.
Everyone works at Hemi.
It worked out great. We're the lanyard dudes now.
Yeah.
We're gonna be on every lanyard at every conference from now on.
Jeff, how you holding up in the heat today?
I'm a southern redneck. I
Yes,
love
sir.
the heat. You know, my wife and kids not so much, but you know, no biggie for me.
Yeah, man. Well, we had a lot of progress going on the Bitcoin side of things, and one question that I was talking to a couple of these, 𝘠𝘬𝘠𝗏 type of companies in this realm is, in the Bitcoin treasury company world, there's been this rise of these treasury companies, right? And we kind of spoke about this on the last stream. Now that the copycat game has started to play out quite a bit, what these treasury companies are starting to do, instead of kind of harvesting the extra NAV off of retail, that's kind of slowing down. They're actually now trying to come and get yield on their Bitcoin as a way to basically have a differentiated offering and basically earn more.
We're ready. We're
exactly.
ready for it.
So how are you guys positioned for the institutional wave at Hemi?
Yeah, institutional in general is fully aligned with Bitcoin. Just stepping back a bit, as you guys know, sovereign wealth funds adding Bitcoin, corporate treasuries adding Bitcoin, finally catching up to where retail has been for the past 15 years. So the world is ready for Bitcoin now, including Bitcoin treasury companies, regulated ETFs, all that stuff. And fundamentally, the experience of holding Bitcoin in a cold storage, inside a mountain, behind armed guards, guarded by a ring of Bitcoin maxis is just not as exciting as it used to be.
Yeah.
And you want to make your Bitcoin go farther. You want to you want to continually stack sats while you're on the beach.
Yes.
And that's fundamentally what DeFi does. That's fundamentally what Hemi does in Bitcoin DeFi. We're positioning ourselves as kind of the chain for Bitcoin DeFi. We got over 1 billion in TVL right now. A lot of that is, we thought it was going to be 80% Bitcoin, 20% like Ethereum. We're seeing like 90% BTC, 10% other in terms of interest. Everybody wants to, earn not like points juiced yield, but real yield. On your
like Bitcoin yield, denominated in BTC,
that's right?
Yeah.
And so that's fundamentally the search right now, and I think Hemi is kind of that search destination. There are a number of ways to do it, and all of those are kind of emerging. Lending market is the easiest, the most passive, the just kind of drop your BTC here, but that's not as exciting because like 5 bips or 10 bips or something like that. It is, you're not even getting 1%. The BTC collateral USD borrow trade, that is one good way that people are earning yield. And
because they don't want to sell, right?
That's right.
Yeah.
Well, it's essentially MicroStrategy on chain.
It is.
So
it really
staking isn't getting that much interest. It's the actual borrowing against that is getting the interest.
Well, it's both. It's I'm trying to slice it by points or no points.
Correct. Okay, gotcha.
It's like staking is there, but it's like the bodybuilder at the gym. They're juicing.
Yeah. Right.
But artificial. If you're a real Bitcoin hodler, you want real yield, not juice yield. I'll take free sats all day long.
Yeah, but you don't want some shitcoin, basically, is what you're saying.
You got to look past the points to when the points burn off. Is it a real product at the end of the day?
Right.
And that's the key question.
Yeah. And so I think on our show we've talked a lot about your past, you're a legend in the industry, but I'm
absolute fucking a legend.
As Andy said, absolute legend.
I'm a humble monk. I'm a humble Bitcoin monk.
And so
God give me the graces to find a Bitcoin faucet. Just one more.
That's right.
One fucking more, Jeff.
Bitcoin faucets. Those are legendary too from back in the day. So
I don't have another 15,000 Bitcoin to give away.
Oh man! Oh man!
I know y'all were hoping
we
I
were
would come
thinking you'd
to
come
drop
on.
the BTC.
You just turn on the faucet of Bitcoin right in the middle of this table. Okay, so looking forward a little bit, what do you see as some of the next milestones for Bitcoin and the next milestones for Hemi? Maybe those overlap a little bit, but taking a little bit more of a forward-looking approach here.
I'll go controversial first.
Yes, please.
Let's do it.
Which is, I don't know that there are other milestones for Bitcoin. I think it's kind of, it's where it's at. It's in network engineering, we use the word backbone. That's like the core network of the core network that everybody connects to and through. And Bitcoin's the backbone of crypto. Bitcoin, here's a milestone for you, gonna become the backbone for TradFi.
Oh.
So there's that, but Bitcoin, the protocol, I don't see it upgrading. I'm pessimistic on Opcat, on even minor upgrades.
Really?
Because there are plenty of hardcore folks still out there just wanting it to, never get touched.
Yeah.
And importing some of the memory from back in the day, basically the philosophy of Bitcoin is if you touch it, there's a lot of politicking and BS involved in upgrading. And what if we just didn't want all that? We could just not upgrade.
Yeah.
And so that's a choice. That's one governance choice, is ungoverned. Milestones for Bitcoin in the broader world, I think we're hitting those this year, which are just amazing. Like I already mentioned, sovereign wealth funds, corporates, public companies that their purpose is Bitcoin treasury. 15 years ago, I never imagined any of those, and now it's like world acceptance. I thought the world would crush us. I thought it was like, the world would be like Bitcoin's the enemy and it must die. And there's still some of those strains, half of them write for the Financial Times, that are on, the anti-no-coiner, anti-Bitcoin warpath. But it's acceptance. It's huge. So we're friggin' hitting the milestone today. Hemi, we're leaning into it. We got a bunch of tech upgrades like the Pectra upgrade, BitVM Vaults V2 coming, and a number of things that make stuff that's mostly decentralized fully decentralized. At the end of the day, it's about decentralization, payment freedom, self-sovereignty, and how does Hemi lean into those same strengths that Bitcoin does while avoiding the centralization of optimism.
No, Jeff, but I got one pushback for you. I had a dinner with Jeremy Rubin and some of the other kind of OG folks in the Bitcoin space last night, and we did a round of bullish and bearish, and he was bullish on a small amount of covenants getting passed and integrated into Bitcoin Core in the next month, but you say that it's actually not going to happen and that there's not going to be many upgrades. Who's telling the truth here?
Well, you're asking the wrong question.
Okay.
I want to put money on Polymarket to answer this question. I want to put money behind my opinion.
Okay.
Is I want to bet that there is not going to be any covenants in the next 60 days. I'll even be generous. I'll go past 30 days.
Wow.
I'll put money. I'll put...
we should make this market right now.
0.1 Bitcoin behind my words.
Colin, Jeremy, if you're out there, the onus is on you to respond here, man.
Yeah. Call on Shane from Polymarket to put that market up, right? Yeah, let's see, right? Because... ultimately, I think what we're hearing is that a lot of people want these things. It's just unlikely to happen.
Yeah.
It's just the process of change. It's like, I want utopia to happen, but how to get there is the whole, difficulty.
And to your point about, kind of the way that the world has accepted this, it certainly didn't happen overnight, but, you kind of had this feeling that the world was going to crush it and it was no longer going to reach this status. And so, one thing that I'm curious about, maybe on your macro outlook here, is sovereign wealth funds have traditionally used gold, physical gold, in order to sort of solidify their treasury, their wealth fund, right? Now they're turning to Bitcoin. Do you think this is going to just continue? We're just going to continue to move away from gold? And generally, how do you think Bitcoin becomes more and more ingrained into the traditional financial system?
I think gold's the gateway drug.
Yeah.
I think it's not less gold, but it's more gold and more Bitcoin.
Okay.
The entire world is looking at what China's doing with U.S. Treasuries. They're not buying any more. Japan not buying any more U.S. Treasuries. The U.S. is going to have to drink its own piss in terms of buying its own treasuries.
They call that quantitative easing.
And so,
yeah, nobody wants to buy them.
Fundamentally, the hard monies are getting picked up.
They're getting bid, yeah,
already.
man.
I don't have to make a prediction. They're buying gold. Gold's
going to 5K. You heard it here first.
That's right. So we're going to continue to lean into hard money in every country in the world, every sovereign, all of the hedge fundies that are like a all-encompassing hedge fund type of stuff. But I'll make a further point. It's not about crypto, the asset class. Bitcoin is a one of one. I know that's kind of Bitcoin maxi, and I'm famous for being a Bitcoin pragmatist.
Yeah.
But Bitcoin as an economic instrument, Bitcoin, the token, is a one of one. Yeah. Meaning that you can't just create an index fund of crypto and expect to have any kind of performance profile like Bitcoin itself.
Right.
Every single crypto is different. Like Filecoin, which I love storage. I came from a data storage background, Linux kernel, and so I've been following Filecoin. I love the FIL token. I don't hold any, just for the record, but it makes rational sense. This token for this decentralized resource. Very clear. They're not printing tokens just for no purpose. It's clear utility. But it's radically different from BTC. It has a totally different purpose, totally different profile, totally different user set, totally different economics. Why would you put that in an index with BTC? So there's just, so many cryptos, but they're different. You can't just say this thing's a token. It belongs in a fund with this random pile of other tokens. Yeah. And so my favorite anecdote illustrates the point. Recently, the Trump administration, the White House, they were going to do a sovereign crypto fund. Announcement number one, we're going to do XRP, SOL.
But he got fooled on that, actually.
But he got ripped.
He got ripped
down.
Yeah, dude.
And announcement number two, which stuck, was sovereign Bitcoin fund. And so the logic behind that, there was a lot of back and forth, a lot of inside baseball, but Bitcoin's the only one that's made it so far. Everything else, to use TradFi language, is an emerging market.
Yep. And I think to your point, Bitcoin is more like gold than it is like ETH or Filecoin or Cardano or Ripple. Like it's hard money, and then there's everything else.
Yeah, this is a take that stems from 5% interest rates.
Yep.
Give it 2% interest rates, and we're gonna have Jeff on the show talking about how Hemi coin's gonna change the world.
Jeff Hair token, right?
Yeah, Jeff, what's up with that? You have your own meme in the Hemi community or something?
The Hemi community created a hair meme coin based on CTO Max Sanchez's hair.
Max's hair.
Max's hair,
which is like completely amazing.
Yes, it is.
And I created Max Coin just to mock Max.
Nice.
And like test some ERC20 contracts and stuff.
Yeah.
I'm not into the let's create 60,000 meme coins a day Solana circus, but sometimes it's fun to poke the community. I have a sense of humor, and I like to poke.
Yeah,
I'm curious about some of your more exotic takes when it comes to even just things that are outside this purview. For instance, AI. I see you tweeting about it sometimes. I think you bring in a perspective that is one that isn't kind of diluted by a lot of the buzzwordy things that we hear a lot today. And so I'm curious, like, what are some of your more exotic AI takes? What do you think is going to just something that you think is going to happen that people might not be expecting over the next few years?
I'll say that humans are going to be here for a long time. My contrarian take is like everyone else consensus is like AI is going to take over the world. There's going to be no jobs for anybody anymore. That's totally wrong. That's totally wrong. And you guys are going to be the king of the world. Here's why: is AI has no taste. AI is always trained on what came before, and not has that creative spark of what needs to come next. They're always, even when they're trying to predict the next word, which is how LLMs work, they're predicting based on the past. And so what humans can bring to the table is taste and curation and unpredictability, that spark of genius. And so, for example, to give you an example, I love LLMs. I use LLMs a lot. I love Dungeons and Dragons, and I play Dungeons and Dragons games a lot. Well, I had it write a D&D game module for me, but I'm the one at the steering wheel saying, okay, not this monster, but that monster. Okay, make this plot a little bit bigger. You're fundamentally, I think we're all going to become editors, and we have AI as like our junior interns. And so I think that's the future pattern, but humans are going to stay on top.
Yeah.
That's good news.
Have you done much vibe coding?
I have. I vibe coded an entire C compiler and then threw it away.
It wasn't good enough?
I vibe coded an entire C compiler with a broken hand and then throw it away.
Wow.
So that was a lot of fun. My pro tip for any developers listening is get your AI to always comment code. Tell your AI, it's weird that you have to say this, tell your AI produce high quality code.
Yeah,
because if
seriously.
you don't, then it won't.
Yeah, seriously.
And then tell it to organize periodically. So like periodically reorganize all the stuff that you've done to like clean it up and stuff like that, because you don't have hallucinations when you're vibe coding, or AI doesn't. I hope you don't.
Yeah,
but
seriously.
The AI's
psychedelics.
version of hallucinations it'll go off on tangents.
Right.
And like in your like wallet module, it'll drop like a gambling module. And you're like, this is the wallet module. It's not supposed to have gambling in it. But it's trying to please you. And you're like, I want a thing that does wallets and gambling. And it's answering the question. It's doing the thing.
Yep. Jeff, one last one for you. What are you bullish and excited about right now? Probably the answer is going to be Hemi. What are you bearish or cautious about?
Yeah, clearly Hemi. We've got so much going on behind the scenes. It's about to roll out week after week, month after month. We're going to be the #1 side chain today, tomorrow, next century. My grandkids are going to be building on Hemi. Bearish.
Or cautious about, fearful about?
I think I always go for the macro, is that 2017 cost of digital asset creation was 0. Net result, flood of tokens. Lots of supply versus demand. Today, flood of blockchains, lots of L2s, but Darwin's trial by fire is going to melt away all of those, and then the quality gems will remain after that forged fire. So I think it's whatever you see a ton of, you're going to see like 1 or 2 of in 5 years. So I'm bearish on an oversupply.
Yep.
We see a lot of LLMs these days.
Yep. Look for your oversupply.
Just had a really good panel about how to think about monetizing block space, and that power law is happening in real time as fees trend towards 0, but a select few execution environments, chains, they retain a lot of value. They get to charge fees, and they get to have a better flywheel, a real business. So, Jeff, thank you for joining us, man.
Yeah, thanks for having me on.
It's been a pleasure.
Great.
It's always fun.
Left hand.
Yeah, cheers.
Welcome anytime, man.
Yeah. Don't forget your lanyard there.
Yeah, the security's pretty intense.
Yeah,
they'll tackle you.
They asked me if I worked for Hemi. I said, yep, I do, and they let me right in there. So you're doing something right, Jeff.
Well, I got to give you a raise then.
There we go. Appreciate that.
Thank you, gentlemen.
Thank you, Jeff.
See you again soon.
Speak soon. All right, man.
And we got 𝘬𝘓 coming up next.
Yeah.
Jeff is always great. Brings a sense of a patriarchy of
just a funny guy.
Just a funny guy. A little bit a sense of maturity to the scene.
Calling 𝘬𝘓 in the building. Up next, we got 𝘬𝘓.
𝘬𝘓 and Jeff.
I got a question for him straight off.
Similar person.
Yes, same vibe, dude.
Same vibe, yeah. Yeah, you're gonna start this one off.
Yeah, this guy. I'm gonna pull up one of his tweets. He's been going hard.
What's up, man?
𝘬𝘓, what's up, man?
Good to see you.
We are not talking about crypto today.
Great. What are you talking about?
I'm talking about your tweet here that keeps coming up that I'm really enjoying.
Which one?
It is your daily drivers and how they keep changing.
Yes.
So I gotta find the most recent one just to get a.
Yeah, I haven't updated in a couple of weeks.
Yeah, Please update more often because I've slowly switched off of Claude as a result of you seeing your daily drivers.
Well, let's get a live update. If
I'll give you a live update.
Yeah, live update. So wait, hold on. About a month ago, daily driver 03. Is that still the daily driver?
Yeah, for the most part. Although the problem is actually I keep hitting the limit, my usage limit. So I would say it's a daily driver until the usage limit, and then I just go to Gemini.
Okay. Analysis, Gemini 2.5 Pro.
Kind of coming back to in between 03 and Gemini.
Just seeing differences in
so for 03 it's like very good at abstract math stuff and there's like some paper that maybe I read and I'm like I kind of remember the conclusion and I'm like, hey, can you reproduce the argument? And it will be able to do that. But if you ask it to do very precise things like write me code to do X, it will make a lot of errors. And I think the reason it makes a lot of errors is actually a kind of funny reason. So like it uses a lot of like shortcut hand wavy things where it's like, hey, maybe in some piece of code they called some variable like Andy coin.
Yeah.
And it will be like, oh, Andy coin, well the ticker was A coin, so I'm going to call everything A coin.
Yeah.
And then it like forgets that it renamed something and then it'll go back to using Andy coins. And I think Gemini and Claude are much better about this. They're like very consistent. They don't forget that they're so stuff like that. So it's like, yeah, if it's something where I'm the one who's figuring out whether it's supposed to be the same or if it's something where it's like it's a piece of code and the software won't run because they like forgot they renamed the variable. Those are the differences, but probably those two. I think
that happens after like multiple prompts,
exactly.
Like 10 prompts later, it's like it's forgotten what it. Yeah, gotcha.
And Gemini is really good at like you give it something and it runs for a long time. It's the best. Claude is actually very good at tiny tasks. Anything long, it starts messing up, but it's not because it has no memory. It seems like it remembers things well, but it just like has a computation. It's like it's built around small programming tasks. And you ask it some complicated math thing, and it gets lost.
I like Claude though for the way that the human feel is to it as typing to it. It feels
like I remember what her name is. The woman who's like their head of UX is this like philosophy professor.
Yeah, it gives you like this like very like so. All right, research. You've got 03 and 2.5 Pro.
Yeah, same.
Still, that combination.
That combo is like the best.
For any sort of like mathematical research, deep level thinking.
Yeah, for like programming, Claude and Gemini, not really 03, because it makes like all these little dumb mistakes.
Yeah,
it's kind of like the smartass in class, where it's like the person who like never studies for the test and still gets an A, but like the teacher hates them. Whereas like Claude is like the goody two-shoes who's not really that smart, but like memorizes and tries to do every extra credit possible.
Yeah.
And then Gemini is actually the smart one, but then like sometimes loses confidence in itself. That's like if I were to anthropomorphize them.
All right, your search engine 03?
03, yeah.
Yeah.
03 actually
and that's just for like searching for, so rather than using Google, just pop into 03.
Here, let's look at like, the other thing is I think the ChatGPT app is actually good.
Yeah.
Whereas like the Gemini app and DeepSeek app and stuff are kind of shitty, the mobile experience, like they'll get stuck or like they clearly didn't spend time trying to make them like consumer products.
Yeah.
And so like, I end up asking like, for instance, I asked something about like, who are the sets of wholesale lenders in traditional finance, because I've been thinking about like these people who are syndicating RWAs. Are any of these people doing it yet? You know, as like is it really here yet? And so like, I got a good like list of like the top 10 mortgage lenders.
United, PennyMac, News,
None
Plaza
of these
Home,
people
Mortgage.
have RWAs. I'm just saying.
So we're still early.
Yeah, we're still early. Exactly.
But if you search that on Google, it would be hell.
Or the other thing I realized is the Google AI assistant. When you that stuff is like cached results. It's not actually running a live model, and those results are oftentimes stale. So like some news event happens, it will not get it. Whereas I think OpenAI and Google in particular, Claude a little bit, although it messes up the web search, are very good at like going and searching online for like, did something new happen?
Yeah.
And I think that's where they've improved so much. It's like impossible to not use both of them.
Yep. You've got coding for new code 2.5 Pro.
I think
Yeah.
I think that one is actually Claude 4. Claude 4 is a competitor there.
Because you've got Claude 4 for debugging.
I think Claude 4 has gotten better at new code. I actually oftentimes I have some idea, I write some pseudocode, I give it to O3, and I'm like, what's missing? Like, how would you write this? Describe it to another language model.
Yeah.
And then I take what it describes and then give it to Gemini and Claude. Because like oftentimes O3 is good at like planning, but then it like, again, this is what I said, it's like the smartass who doesn't do any of the like homework, but just comes in for the final.
So
like it clearly understands what it's doing, it just like makes no effort to do the basic boring things.
It makes careless mistakes.
Yeah.
So tell us more about that. So do you are you taking one answer from one LLM and then telling it like make this ready for a different one, and doing that a lot to like, I don't know, like double check your work?
So it's sometimes double checking. B, it's actually oftentimes because yes, one of them is better at like being like, one of them is being like, Claude is very good at like finding little tiny errors and like working until the piece of code works. O3 will be like, it's so easy, just do this, and then it doesn't run, and you're like, it doesn't run, and then it's like, okay, I'll change one thing, and you know what I mean? It's like very lazy.
Smart ass.
Yeah, it's like I would call it the.
That's
smart
hilarious.
So I think a lot of it is if you treat these like people, it's like, okay. The other thing, another tweet I wrote about this, which is like, actually, I think all LLMs have made me realize is everyone is just going to learn to become a manager. Because like this is like managing a team of people.
Yeah.
Like I know which tasks one is good at. I know which one I should be like distributing.
Yeah.
I have to like tell them, oh, like you sucked and this other model produced a better thing. Why can't you be better? And then it'll sometimes give me a better answer.
Yeah.
And
it is kind of crazy.
It is like you're just kind of a manager.
If you talk derogatory to the LLM, sometimes they actually perform better.
Yeah. Although some of them, like Claude is the sensitive one, and you say you fucked up and it'll suddenly get all defensive, and I'm like, all right.
And so you're already starting to use another LLM as the manager of one. Well, you're starting to kind of pass work between them, but we don't have the interoperability amongst these models to the extent where they can manage one another.
Yes, although you kind of do. So like if you use Cursor actually basically every time you write a message keeps track of all the context embedded for all the models it supports. So it's like you ask a question and it tries to be able to send it to O3, Claude, whatever, so that you can move between the models more seamlessly. Now, it's not perfect, but it actually gets you like 80% of the way there.
Yeah.
I think that's why you're seeing this like Silicon Valley VC Twitter trend of like everyone talking about who's going to own memory. And when they talk about memory, they mean exactly this problem of like, how do you build this interop? I'm kind of the mindset that the application owns the interop. It's a little bit like DeFi where like the application owns the order flow. I kind of feel like the application owns the order flow in the context that the user is sending.
Yes.
Which, especially if you're using multiple models, it feels like each individual model's individual value is like decreasing over time, but the value of like whoever owns the context that the user is propagating through as you're chatting with them, that is the thing that's most valuable. And like the Cursors of the world own that, not the OpenAIs.
Right. So like, So if there could be a tool, let's say Cursor, that would have access to all of your usage across different LLMs, that tool would be the most would be.
I think in some ways that's more valuable. Now
than the
OpenAI
individual
is a
ones.
weird exception because their consumer app, which is the mobile app in front end, is so much more popular in terms of users than like every other LLM.
Yeah.
That they own a bunch of context, but they own a bunch of context that's actually like retail consumer usage.
Yeah.
Whereas like Anthropic owns like U.S. government usage, and like Google owns actually a lot of programmer usage now.
Yeah.
Right.
Google owns a lot of search, which also could provide a lot of context, but maybe not so much as I don't. Where do you think the Google search versus OpenAI prompt on a consumer basis stacks up?
Yeah, it's a really good question. Gemini, have you guys ever used the interface, the web interface for Gemini that like is...
Oh, yeah.
It's like it's not a thing about like the answer you're getting that's not as nice. It's like the UX sucks, it's slow sometimes, like, or it like, okay, this happens in almost every language model interface where like 1 out of every 50 prompts I give I have to go retry because it got stuck, or like
Right,
it started sampling tokens and then it stopped.
Yeah,
and whatever,
it stops.
right?
Yeah.
And like obviously that is like the biggest UX hurdle I think for a lot of people is that idea that it stopped, it must not be working, I'm not going to keep using it.
Yeah.
Right.
When you jam the stop button and then sometimes it just kind of like shits.
Exactly.
It just doesn't stop
and
or whatever.
Google's is actually the worst UX for that. Like they actually sometimes it has the fastest token production on Gemini Flash. But then, like the number of times it just like doesn't respond is like way higher.
Yeah.
So that's why I prefer the API usage or cursor usage, because all these other apps actually do a lot of like retry logic, or like if you're writing your own code that's using OpenAI API, you can add your own retry logic. So I do think like this is where I'm saying I actually think the apps that own the order flow will like be able to differentiate and like own a lot, which is also I think one of the reasons I'm pretty nebulous on most crypto AI things right now.
Yeah,
like
Steve was extremely bearish at dinner last night. It was like, dude, 2 or 3 years, like this shit is just AI is not good enough.
Yeah, and also just like the security stuff is actually much worse than I think people give it credit for. Like, I think there are really cool examples like 𝘱𝘂, where it's like people who are like trying to build LLM security via these crypto contests, which I think is like that's an awesome way.
Yeah.
But they're nowhere near ready. Like, someone is going to lose money, and hopefully not a lot, but it's like it's going to be non-trivial.
So have you invested in any like crypto AI things?
Yeah. So we invested in Noose and EXO, and basically I think edge usage of AI is going to be really important. So in the EXO case, like I already see this myself. Like I bought a new Mac and I run $14 billion parameter quantized models on my local machine now, and like I could not do that before. Like I think people underrate the Apple silicon for personal use stuff. Has gotten a lot better, and so I think people who are using that for like edge compute, I think there's going to be a market for that, where like they need to run local models, and they're unwilling to outsource, but they own a bunch of computers locally, and they can use this stuff. So that's one place where I actually think crypto is useful. Like the value capture for that is not clear, but at least it's like I can see it myself.
Yeah.
And the other is like I do really think Noose and Prime Intellect. I think a lot of the RL stuff is more conducive to crypto now. Are they going to make? And again, there's no real obvious value capture. Sorry, the reinforcement learning training. So like what DeepSeek does, what all of the
that was the last one that we had for you with the fine tuning.
The modern So for open source models, pretty much DeepSeek Qwen 3. I spent a bunch of time trying to fine tune 5.4, which is the Microsoft model. Did not work. Also, it was just a little too big for my local GPU. So main point is like I kind of think there is a market for these fine-tuned models. I just don't know if like the cost of fine-tuning is ever going to be, the amount you make from making someone a custom model is ever going to be more than how much you paid to fine-tune it. And like that's the part where the economics are not clear. But Noose and Prime Intellect have been kind of focusing on two different directions, with Noose kind of going we're making an RL SDK, so it's easy for you to fine-tune distributed, and then Prime Intellect being like rent an H100 for $1, which is all. I mean, I use that all the time.
Yeah. So that gives you access to a piece of hardware in the cloud for $1, and then
$1 an hour.
$1 an hour, and then you get like this maxed out GPU that you can just
do whatever you want, and that you can run fine tuning, you can run these experiments, and that is I was initially doing this because I was like I want to understand how the algorithms are working, and I also want to understand the open source ecosystem, because like I used to be a GPU programmer in 2015, 2016, so I wrote a lot of CUDA code a long time ago, and I was like, what has happened in the last 10 years? And it's gotten so much easier. It's like insane how much easier it is to go from 0 to 1. So I think there is clearly something in open source AI that will stick. Now, does it need crypto or not? That's like where I'm like, maybe. Like,
I mean, the thing we need is like the lazy man's on-chain assistant, or like the lazy man's portfolio manager. It's like the type me a strategy that's going to make me a fucking 30% with little risk over the next 2 years, and like execute it for me on my behalf, rebalance for me, all that kind of stuff.
I just think like we're not quite there yet, but and this is a tiny shill, but like we launched a rebalancing USDC product across chain. So like,
sweet,
you put in USDC
yeah, I saw.
and it'll deposit on Base, Arbitrum, wherever that different yield is. And I think once the crypto side, especially in the vault side, solidifies security-wise, and like people are really confident in that, then I think the AI side taking advantage of this type of stuff is easy. But I think right now the crypto side is like still not like, it's not there for like the APIs and endpoints, and the security model is not there for AI stuff yet. And so it is definitely early, right? I think there will be a version of the world where crypto and AI interact more, but I'm not like holding my breath thinking it'll happen tomorrow. I think you just have to be in both markets.
Yeah. Yeah.
I'm curious about, I mean, the H100 stuff I find pretty fascinating. So like you would basically rent this thing for an hour. You would run some like super intense fine tuning algorithm while you have this thing live, pull it down to your local machine, and then you're good to go.
Yeah.
I got it.
It's like someone will. So one investment we made in 2022, which is ironically they started as a crypto company and then pivoted.
Yeah.
With Together AI, which is like they host models for you. So you have a custom fine-tuned model. They're like Vercel for model hosting. Okay. So like you have some model where you fine-tuned it. They will host it and generate it and stand up endpoints and geo-distribute it and do all like almost like a node as a service provider. They're like an inference node as a service provider.
Okay.
And there's a ton of people who are doing this, and that market has grown. Like CoreWeave, I guess, is the biggest, but there's like a ton of people who are in this market.
And so in that case, they're hosting it for you, so it's not local, but you can still fine tune it yourself.
Yes. Okay. So you fine tune it, and then they make it so that, like, say you have a website that has a chatbot, and your chatbot is like fine tuned on the Rollup episodes, right? So that like people can ask questions about it.
Yeah.
Well, maybe you every week or every 5 weeks, you have to re-update it with the new episode's data, and you refine tune it. Well, there's this whole workflow. It's almost like machine learning pipelines of like, okay, new data came in. Okay, re-update the model. Okay, redeploy the model so that the website is using the latest one. And that whole continuous pipeline process, you know, in trading and in data science, that has been always come under the umbrella of like machine learning pipelines. In AI, the pipelines are kind of different, mainly because like some of the data as I retrain the model, some of the data is actually all this RL stuff where I'm fine tuning how I ask prompts. I'm saying I ask sequences of prompts. And so there's a whole world of that stuff, and there'll be developer tools and things like that. Now, there was a while, especially in 2022, like pre-Luna, where there were a lot of people working in AI, and they saw crypto go up like crazy, and they're like, oh, you know what? Maybe we can do this stuff decentralized. And a lot of those companies were amazing investments, but because they didn't stay in crypto. The number of people who pivoted at that time, like including CoreWeave actually, was a very large, and like that cohort did really well. So that's sort of like how I've kind of been paying attention. But like I really do think there will be a world in which they're interacting. We're just not there yet.
So last thing for you, what are you bullish on broadly? You know, category, idea, sector in the markets or outside, and then what are you bearish or fearful about?
I think an interesting thing is what I would say is, and I'd say this from the perspective of both an investor at Robot and working at and running Gauntlet, is we're kind of seeing, I would say this, that we're at peak staking yield. Like, I think staking yields have actually been kind of like going down quite a bit. And if you've seen a bunch of the announcements like Near and Celestia,
et cetera,
about reducing inflation, I think we're kind of at the point that actually staking as a business model we may have already passed peak revenue. So I'm actually bearish staking revenue, like businesses built around staking revenue, because I actually, and this also sort of includes LSTs and protocols.
And validators and shit,
I think there will be consolidation in that market because as the rewards go down, like there's just not as much revenue for them. So that's what I'm bearish. But I'm bullish. All that capital has to go somewhere. And the number one place is people want stablecoin yield right now. And every fintech wants to like get on chain right now. I think that's where we're going to see increases, and the main problem there is actually the demand side. Like, where are you getting borrowers? And I think I'm very bullish on people who are bringing stablecoin demand of off-chain companies on-chain. Like taking companies that are borrowing from a bank and they're like, look, we'll lend to you in stablecoin. We'll do all the off-ramp, whatever. We'll act as a company that holds the crypto risk for you. But we act as a sort of centralized lender, but you can see what we're doing. I think you're going to see a lot of these like hybrid things come online because the rate spreads between on-chain stablecoin borrow rates and off-chain is still big enough.
Yeah.
And all of this capital that is leaving staking has to go somewhere. That's my bull and bear. They're very related.
Yeah,
though.
they're very related. yeah. 𝘱𝗏, thanks for your time, man.
Yeah, of course.
I appreciate it. I wanted to go through that daily driver because I've just been tracking it.
no,
and it's just,
it's good. It's good.
Yeah.
You got the live real.
Yeah, seriously. We'll have to update it real time.
Yeah. Always a pleasure, man.
Thanks.
Cheers,
Thank
man.
you.
See ya.
See ya.
Alrighty. We got a couple more going. Jig and Jag, you know what I'm saying? It's the name of the game, dude. All right. We got a couple things coming up next. We're gonna get SY up next.
Okay.
Rob's been here solo on a bender.
Dude, I was ripping here for a little while.
I'm gonna go find Guy. I think actually.
I think I had seen Guy walking around.
I'm gonna leave Rob here for a sec. Be right back with our next guest.
And he pops out here for a minute, gone for another minute. We've got Guy from Athena coming here very, very soon. SY from Story. We just did 𝘱𝗏. 𝘱𝗏's such a smart guy. And we've got 𝘗𝘓 from Infinex. We're gonna see if we can get 𝘗𝘓 up here as well. Fascinating times. Intersection of AI, stablecoins, and Bitcoin is really where we're seeing the market focus. AI, stablecoins, and Bitcoin. So that's where we're gonna focus. Guy from Athena. Maybe up next, he is all right, we're gonna get Bread Guy up here, and he's jigging and jagging.
Couldn't find a Guy. Got someone even better.
Impromptu call with Rollup
look at
boys.
that.
Yo, GM.
Yeah, you just dive into these sometimes. All right.
Just happens to me sometimes. All right, buddy. We're getting Bread Guy set up here today. How you doing, Bread?
Good. You guys just been grinding through some of these?
Rolling.
Yeah?
Keeping
just
it
trying
rolling.
to grab clips?
Yeah, just clip factory out here.
I'm saying Chief KOL at Mega ETH.
Go for it. Did I listen to the pod with you and Yano the other day? Oh, shit, Charm.
What'd you think of it?
It was good. I thought it was really insightful.
Did you think that... So what I'm battling with is like this house of brands strategy versus just going all in on the roll up and just like just trying to make it the thing
like
all the way.
It's hard to push back against because like they're having so much success with the house of brands stuff.
Yeah, I saw your tweet. It was like your podcast list.
Yeah, yeah. They fucking spam me. It's like it's fucking my entire feed was them, pushing to me. But like it's hard to argue with the success that they're seeing. It's just you wonder if it's going to carry to the next leg and like continue to grow. Like what's ultimately the best play? I don't know.
Yeah, it's tough to say.
Yeah.
But I mean, one thing's for sure is like I'm just going to keep grinding, growing my account. You'll probably do the same.
Yeah, right.
I mean, there's so much
You
upside
can't
for
stop.
that. Yeah. Dude, why do you think ICO Beast is crushing it so hard right now? His fucking engagement's ridiculous. Like I'm starting to like reply the guy just to be like, all right, I gotta be with this guy's like loop here.
Yeah, so his thing is that he's smart. Like you can't just like do that stuff, right? He's really insightful. He's got some depth of knowledge. He's terminally online. He's like he's in fucking every conversation, which is impressive. Like and he's got all these like historical references. He's been in the game for a while. Like we talked, he's been here since 2017 and stuff. So he's got a lot of context. He's insightful, and then he plays the speculative game. Like you and I don't talk tickers. Like,
not at all.
Level, right?
Yeah,
so
I know.
If you look at smart followers, smart engagement, like ours is actually probably a little higher than his because it's more like a layer deeper, right?
Yeah.
He's surface level. He's talking about tickers. He's talking about money making opportunities.
Yeah.
And he'll flaunt some of that, and it's like, he just plays that game.
But
really
that's
well.
what gets the people going, though.
Yeah, they love it.
You know,
you got to.
But why don't we? For you, is it like a moral thing? You just don't do it?
No, so I suck at it, and I like it's not It's not intellectually appealing to me, right?
I posted the hype ticker at 45.
Oh boy!
And you don't want to be that,
dude. But the thing is, I limited it out a little bit, like clipped a bit, and like I posted it, and it was just like, dude, that was literally the top.
Yeah.
It's bad.
Yes. I have the rule instituted on myself too. If you're taking pictures, if you're wanting to post, it's like probably clip out 10%. Like this is likely a top.
Yeah.
What's like? Do you have like an exit strategy when it comes to like personal brand, or is it just like continuing to like just share and do the thing?
An exit strategy for personal brand.
Like
I saw 𝘰𝘮𝗎𝗍, like his tweet from wherever ago. He's like, I'm gonna turn myself into an AI agent and then just like let that run at the end of my life whenever I want to just like tap out.
Yeah.
Like maybe that's the end goal. It gets good enough that
he could sell his account too.
Yeah, like he's not.
We
doxed,
can't.
right?
We can't sell our accounts.
Not easily.
Yeah.
Yeah. Like you saw I don't know if you saw the ghostwriting like thing that just popped off on the timeline. Everyone was because like founders ghostwrite like same with like a lot of influencers shit like that, and like it doesn't resonate authentically with a lot of people. So like if you were to be found out to be a ghostwriter and you were previously someone perceived as like a educational resource, probably feel a little cheap, right? Like you're like, man, I thought you were the guy, and like I meet up with you here and I realize that you can't even hold the conversation that I thought we were holding.
Yeah.
It's like, oh, damn. Okay, I was talking to a bot, right? Like that sucks.
Yeah.
So like, yeah, that was a wave that popped off recently. I would advise people against that. I don't have an exit strategy, but maybe like if I'm gonna tap out, maybe that's the way to go. Like entirely.
Yeah. What's the latest with Mega Mafia? I've seen Euphoria demo, which I saw like in November.
Yes.
And like knew about it, and now it's just on the timeline.
That's actually a reminder to me, and I was talking to them about it too, because like even over the last like month and a half, it's that same like clip basically. That's just like
same clip.
Yeah, it's like man, like
it's
you
like
can, you
cute
can just
girl
run
in the
it
background,
yeah,
like with the.
You can just run it back, like because there's different people on different days and different times, and it's just like that's always surprising to me, and I'm sure you guys too. Like I already saw this. Why is everyone excited? It's like it's a different group of people.
Yeah.
Anyways, yeah, it's surprising that thing's been running. But yeah, Mega Mafia 1, they're gearing up for mainnet, which is we're trying to do it in the next few months, right?
Come on, give us a bit more than that.
Yeah, I can't give any dates. And dates have been chosen internally.
Yeah. Public mainnet achieved internally.
Yeah. So I mean, we have that, but we're actually kicking off Mafia 2. We just chose our 15 teams. We're gonna go to Copenhagen, August. So we'll be there for the month of August, learning about them, teaching them about what it means to like build on Omega or be Omega.
Yeah.
And then try to bring them to market as fast as possible. But like,
there was like 7 or 8 in cohort 1.
It was 15.
Oh, 15 as well.
It's about the same, but like people roll in and out. So it's like 15 don't ultimately make it to the finish line, and it's not always the original 15 that finished. So
What were some of your favorites from cohort 1?
Man, there's 2. One is Hop Protocol, which is like a DPIN play. It's a team that's running a decentralized VPN network, and they use like the latency of MegEth is used to switch between nodes to keep it like their actual access anonymous, right? So anyone can spin up a node, but like I have one side of the information on my node, you have the other side, and someone hops twice to get to like the actual internet.
And do you pay to use the node?
You would so like the node runners make money, but yes, the users would pay, and then that would like run to the node runners, and kind of it's DPIN E. So there's that one, and then another one that's kind of consumery is we actually have the #1 Magic the Gathering player and the #1 Hearthstone player working together to create a new card game.
Really?
Cool. Yeah, it's I guess I don't know if you guys play the 𝘁𝘁 is like a poker / like TCG that was created. It's really popular, but it's a 𝘁𝘁 like game that they have spun up. It's pretty fun. A lot of people are liking it. Yeah,
very cool.
I gauge success by other card nerds getting sniped by it. So like they keep getting excited, which is like okay. I assume this is actually like good because the nerds are liking it.
Yeah.
And then as far as actual ecosystem apps, I mean, GTE just raised 15 million, I think.
Yep.
From Paradigm. Cap is finishing. They're almost. I think they're ready to go.
Yep.
Mainnet. I get the sense that a lot of like Euphoria's out there. There's a couple others for sure that are ready to go.
Yeah, those are the more traditional trading ones. Another one is like Avon, which is doing a cloud-based lending. So it's like you can actually start getting like market discovery on or on-chain price discovery on lending rates.
Yeah.
So like it's a little interesting.
That's awesome.
Yeah. But yeah, they're all popping off. They're showing other teams are showing interest in investing in our applications, which is exciting for us because obviously that's sentiment growth. That's bullishness directionally on the chain ecosystem itself.
So what's your take on the club wars, man? So I think the argument is generally like there's 4 ways to kind of do it. Like you can do a club on a really high throughput L1 with shared state with different apps on it.
Yep.
You can do a collab on a really high throughput L1, single app chain L1.
Yep.
Hyperliquid.
Hyperliquid
You could do a specialized L2 app chain collab single sequencer. Or I guess you could just do a collab on a very, very fast, high throughput chain like Mega ETH.
Yep.
You're probably, you might be biased, but which of those four is the answer? Is there an answer?
No,
You know?
No, I mean, as we've seen with everything in this industry, there is no answer, right?
Yeah.
Like it's going to be a spectrum. It's always a spectrum, and we get into a debate about like what part of the spectrum is the best part. So it's like obviously there are properties that are advantageous in high capacity, composable, low latency systems. Obviously, Mega ETH does a lot of that stuff. So like I'm bullish on that. I think that's directionally the right decision. It's just a matter of like what properties can you get, and at what point is the RR on, or what is the return on investment of like building out these additional properties, sacrificing stuff like decentralization, whatever, to like get 20 milliseconds faster on latency. Now, again, I think that like our specific design is going to enable some stuff that is unique to the market and can beat stuff even like a Hyperliquid. I think, Hyperliquids.
There's no way that any app on Mega ETH is going to do 12K TPS, dude.
12K?
Yeah.
Dude, I mean, we're aiming higher than that, man. Like, if you think
I'm a bear,
bro. If you think 12K TPS is like the end state of this stuff, you're bearish. You got to think higher. This industry is going big, and like,
So what kind of TPS are we
not
going to
even
see?
done, right?
No, I know.
Like they're talking about bringing on equities. They're talking about do it like. And so if they think they're going to hit all this scale, right? Like, where's that going to go? If they're going to actually support the global markets as opposed to our degen circles, what's the TPS on something like that? Like, they're going to require tens of thousands.
But if there's like 5 apps on Mega ETH that need high TPS, like, we're just gonna fucking cross our fingers and pray. Like,
IBRL, and then like actually like there's some unique implementations you can do. Like I'm talking to M Team, right? You can start doing base sequencing on top of a high capacity chain. So then you have then you're basically unbound even further, right? Because now you have composability. It's still based, right? So you have like the sequencer itself is still the one that's actually ordering transactions, and then sequences. They get app specific sequencing so they can capture their own fees. It just becomes more appealing, and obviously it comes with costs, but yeah.
The different options always just converge in some capacity.
Yeah.
Like it's slightly like different, but like
yeah. It just depends on the lens. Yeah.
Ethereum based sequencing on top of. Maybe I don't fully wrap my head around. Could you maybe unpack that one more time?
Yeah, I mean, you think about what base sequencing is for Ethereum, right? It's like you pass, like you get guarantees, you pass the transactions on to validators, but like they don't necessarily have to have all the same properties as the Ethereum L1. So they have a sidecar, they have a whatever, but it would be something similar. So like, okay, maybe you co-locate another sequencer or a specific server right next to the actual sequencer, right? So now you have all of these things that can be even used in separate data availability, separate ordering rules, separate whatever. That thing handles that, and then that thing has awareness of everything that is going into the sequencer, like which was a private mempool, but like maybe you expose it to that one sequencer that allows it to be able to say, okay, we can compose with this stuff, we can add to it. So now you have 2 machines technically that are working together to then pack all this stuff into a already high throughput thing, and you have a higher bound, right? And you can use Celestia DA for the base stuff, and then you can use Eigen DA for the main one. Then you use blobs for the other one. Like you get composability options.
So mainnet in September.
no days. People try to squeeze out. We'll do Qs. I'll do Q3. We're trying to get to Q3.
Oh god, he's committed to Q3. Oh boy. All right, Brad. Thanks for coming, man.
Yeah, thanks for having me.
I appreciate you. What do you have on the schedule?
I think I'm missing Lay's. Oh no, 3 minutes. Lay's gonna be giving a talk here about scaling the EVM and beating out the SVM. I know that's the debate everyone tries to get out of us.
Yep.
So we'll be doing that, and then after parties, I'm seeing some people, shaking some hands. You know how it is.
Awesome.
In the arena.
Making
things happen.
Yeah.
Shaking hands.
Espresso martinis.
none of those, but I'll take the offer. Yeah.
You don't drink.
I do. It's just like why? I spent a lot of previously it was that. I spent a lot of time working out. Like I would be 2 hours in the gym doing all this shit. I was like, man, if I'm grinding
why drink
20 hours a week to do this shit, why am I drinking to ruin it for like I can still have a good time. I don't need it.
Yeah.
But I've had my fuck ups. This tattoo was after a night of drinking. So like I've been there. I've charted that course.
Yeah. Do you have a favorite tattoo? It's kind of like
the other one.
I
would say, it's literally
the only other one.
It's this one and then the rest of my body. Yeah, so that one.
Nice.
Yeah.
All right, bro.
Guys,
cheers, man. Yeah, bro. I appreciate it, man. Enjoy the talk. Enjoy the week.
See ya.
Cheers, man. All right, let's do a quick check-in on the market, eh? What do you say?
Let's see.
Let's see. Give the people what they want.
What are you looking at? I mean, just takeaways from so far today have been
Yeah, hit me.
Bitcoin, AI, and stablecoins.
Bitcoin, AI, and stablecoins. Those are your takeaways.
We had Ellie from Starknet, we had William from Botanics, we had Jeff from Hemi. All of these guys are competing for Bitcoin market dominance to generate Bitcoin yield.
Yeah, you had the botanics conversation. I did not have that one.
They're all in that Bitcoin yield world.
BTC at 107. Alt's getting crushed. What's new? Welcome to the future.
If I remember correctly, on our first stream about a month ago, you called the Bitcoin dominance.
And I was right
top.
for a while. I was right for like
You were right
for like a month.
3 or 4 days.
A month there. But yeah, I think it's not top. But who cares? That thing will come back down. Market's looking good. We got SY from Story up next.
Okay.
Let's see where he's at.
Yeah, let's see.
Otherwise, just gonna pull in our next one here
What
from the crowd.
Oh, from the crowd. It's cooled off a little bit.
It has.
These fans are putting in work.
These guys are. He got us wrong.
Yeah.
What's his name again?
That's Leonard from P.
Leonard. Leo, come here. Show the camera what you got. Come on.
Bring the drawing.
Yeah.
What camera do we have up right now?
Here.
The main one.
So this is what you get here at the Rollup.
I've got this. I think that's the most amazing. That's definitely the most amazing painting or drawing of myself. I'll frame it. It's special, guys. That's really special. Honestly, I'll frame it and I'll always remember. Beautiful conversation.
I mean, it helps to be handsome, man. I mean, hey, take it easy, won't you?
Thank you so much.
Thank you, sir,
for having me.
Absolutely.
Cheers, brother.
Cheers, brothers.
Yes, sir. Hey,
We'll
did you get your wristband? Let's get this guy a wristband, can't we?
This wristband gets you into the Rollup happy hour.
Oh yeah.
Yeah.
When is it happening?
On Thursday. We'll send you the link.
Oh yes. Nice. I'm gonna put it here.
Yeah.
Thank you so much,
Keep
guys.
it nice and light. We'll see you there.
That's it, man.
That's
right
it.
There. Part of the fam.
There you go.
Thank you so much.
We'll see you next
Cheers,
time.
Will.
See you tomorrow, guys.
Pleasure,
Yeah.
brother.
Cheers.
Pleasure.
I'll send that to you there. Send him a little invite. See hospitality, man.
Hospitality. Brendan's cooking behind the scenes.
Shout out to Marcelo.
He's the man.
In the background.
Marcelo's the man.
Been cutting all day. Broderick.
Yep.
The boys.
Kevin.
Kevin.
Putting in the work.
I think we got one more, guys. Brendan, that guy was just taken aback by that drawing.
Yeah, he was floored. He said he was going to frame it.
Was that the previous guy there?
3 unclaimed.
Really?
Oh, we're going to have to hand those out.
Oh, we'll have to put out a tweet. Bring it over.
Our resident artist doing self-portraits. You got M-Team? Oh, M-Team was just standing up here.
Who is this one? The British guy, James.
Yeah, James. The shades were a great way to start off. We are rounding out the day, maybe 2 or so more characters. We've got things happening left and right. Friends are reuniting. We're bringing more crypto youth into the mix. 𝘗𝘯𝘵 from Eigenlayer is entering the scene. Yeah. We're live right now.
Oh shit! Okay.
You're on the show.
Oh, great to be on the show.
How do you feel?
Amazing. Wow.
What do you?
Probably sweaty.
Yeah, it is. Yes.
You have hackathon participant?
Oh yeah. This is to get a free ticket.
Don't ask him what he built though. Don't ask him what he built.
Yeah, well, I did build something during that time, not here. Okay. Yeah. How's it going, guys?
It's going great, man.
Great.
It's been a long day for us. I'm just filling you up here. So Shiram was talking about the latest Vibes code. Was it called Vibes code?
Vibe Score.
Yeah, Vibe Score. Yes.
Vibe Score.
Yeah.
Yeah.
Was that your idea? That gives me like very like Zoomer energy.
Oh,
you know,
no,
like that's something that I would think about.
No, it wasn't by me, but it was a Zoomer in our team. So yeah, we have more Zoomers. I'm not the only young guy in the research team. But,
so what,
yeah.
what was the story like? How old are you?
I'm
you don't have to share.
17.
Okay,
Yeah.
so how did you come across and ultimately get poached and wrapped up in all of this? Like, what is?
Yeah, you started with Solana, right?
Oh no,
Or totally something.
It started
Because people know you as kind of the young guy on the block, but
Yeah.
maybe you could tell this story.
Okay, yeah, sure. Awesome. Yeah, so I started coding when I was 7. I really loved building games, and like I started with Scratch, and then like I kept learning new languages. So I was picking up on I started with then C, then C++. I tried to get a grasp of like how to build websites, apps, like just get like a broad variety of like what's possible and see. But I never stuck to anything, and then finally during COVID I had like all the freedom in the world, so I started spending it in like every different possible thing I could do. So I started making videos, like I made like bunch of videos, and like I had I think about 1 million views, luckily, because everyone was
Really?
on YouTube.
On
And
YouTube?
you're like 12 or 13 at this
Yeah.
time.
Just doing like coding tutorials.
Yeah, coding tutorials, and
Wow.
yeah, actually, yeah, just coding tutorials, and yeah, later that year, then I started like doing freelancing and like getting like trying to build apps which can actually generate like money, but most of the platforms like didn't allow me to actually monetize my things because I'm underage. Like, there's no way they are giving me access to like Stripe right now. So, and then like around the same time, I got like introduced to this like webinar which was happening on basics of Bitcoin and blockchain, and there I earned like $20 of Bitcoin, and I didn't know identity verification. I just got $20, and I was like, wow, this is amazing technology. And I went in the rabbit hole more, and then finally I found Ethereum, and then I was mind blown by like how you can just build like these decentralized applications. Like, I was 13 and like I could build all these things, and like no one like looked into my previous history of like, okay, do I have like experience in building these apps? No.
It's permissionless.
It's permissionless, exactly.
Yeah,
like
nobody
exactly.
cares.
Like the name is
Wait, what's the word? It starts with an M. Meritocracy?
Meritocracy.
Yeah, it's completely meritocratic.
Yeah.
So I got into that. I started off like doing freelancing for like bunch of projects back then, and then finally I was like, well, I'm doing all this, but I'm not actually. Let's try to bundle all the knowledge together and build something. And I built like a yield aggregator on Polygon, and like DeFi Summer was a big thing during that. So like I built a yield aggregator, and I had like $7 million of TVL for that, which was like again crazy for me because I was 13 and I didn't dude, who's going to give money to a 13-year-old to manage? Right?
Yeah, I know, right?
Like
right.
the smart
But
contracts.
but you have a
immutable.
smart.
Yeah,
right.
exactly.
Right.
So everything was immutable. Like you can just see this should work. Yes.
Yeah.
Trust the code. Later in December, like once the DeFi yield started to drop and like the protocol wasn't making any money, I closed it down. Then I worked on building like another project which was somewhere around the same idea of yield aggregator, but I saw that there is a huge all the money is being it's all the yield used to move from chain to chain, and a user can't keep up with I have to bridge all that stuff, and it was really hard. So I built a project which could transfer all the money around different chains. So raised $1 million for that, and then around 2022 I ended up selling it, and
wow.
it was a whole it was going to a bear market, so I didn't really want to deal with it more. But during that time I spent a lot of time on Solana. I built about 50, 60 smart contracts in Solana, basically, and I was really engaged there. I really loved the Solana community. Then around, let me recollect, I also interned at Solana for some time,
It must have been 2023 then.
Yeah. Oh, no, this is 2022.
Yeah.
Early 2022, I did internship with Solana.
And so by then you had raised $1 million for a project and then sold it not long after and exited that project.
Yeah. Almost, yeah. And that's right. And after that, I joined FTX Ventures for some time, and then FTX collapsed.
FTX Ventures.
Yeah. Like
That's
very
fucking
small
hilarious,
time.
dude.
Like I used to.
This is an incredible resume.
Oh, thank
Just
you.
an entertaining and vibrant.
Yeah. Then after FTX collapsed, I worked on the Ton ecosystem for some time, and
Ton.
Yeah. Telegram ecosystem. But I didn't really I didn't really learn something. Like I really wanted to get into like academics and like more like spend more time in like the roots of the things. So then at the same time, I actually saw like EigenLayer had raised like the series A or seed, if I'm not wrong, it's 2023. And I was like, well, I messaged Sriram like, hey, can I invest? And he's like, yeah, sure, like you should. And then we started talking more, and like there's a position open, and I joined EigenLayer.
Wow.
Smart contract engineer. Been here for like last 2 years, like building apps, just hacking around things.
Insane.
Yeah.
So recently, EigenLayer's put out the Eigen Cloud.
Yeah.
And just kind of pushing this verifiable cloud.
Yes.
What are some of the best builders and applications being built on the Eigen Cloud right now? That you're excited about? Yeah.
Yeah. So I think we started with WipeScore. So WipeScore is like what it is. End of the day is verifiable incentives. It's a platform where like you don't. You just have this one algorithm, this one AI judge, which is going to like judge your tweet and reward you based on that. It's like that damn simple. Like you don't have to trust a human of like, hey, like we trust like a neutral AI judge to make all these decisions right now, and where all these, and it allocates other people points. So yeah, we have put like a 50K prize pot on this, and people will be the winner is going to like be a contractor with us and also get like I don't know about like 10K.
Yeah. And I think you guys are pretty excited about Opacity as well.
Yeah.
What other apps are or like AVSs are kind of like coming out that are top of the line?
Sure thing. Yeah. So Opacity, Opacity is like ZKTL is like an amazing product. Like, dude, you can prove like any private data right now, and like just how it unlocks so much capabilities to do. Like you have platforms like Tada who can just like disrupt Uber. Like there's like a DoorDash service which is like coming up, and like they're just using this data to like get all these like users into the platform. I think it's just mind blowing how much it can bring. Then we also have like all the services like Witness who have like proof of location services. Like it's like there's like so much, like you can actually build a Fortnite in person and like maybe have like some like meme corner fun element to like have like incentivize that moment. But I'm not sure if you guys have seen I think I wasn't even born during this time, but I think someone did this experiment where they like you had to put a balloon up in the air and like everyone has to gather. I think those are some like fun things which can be built on EigenLayer with Witness. Let me actually think. And with like EigenCompute and like EigenVerify coming in, like you can build like we're making crypto more expressive. Like previously you had to like. Right now, if you want to do any complex, like for example, a fund strategy, or like you want to build like a complex yield aggregator, you can't do it without having like trusting like one party. But here with EigenLayer, you can just have you can just write code, upload it to our like just write a Docker container, upload it to our platform. We'll run it, and like if the operators will run it, and if anything is bad, you're slashed. And like just take my example. Anyone from maybe like India or any part of the world where they don't have enough resources to like build these things, they can just build these apps and build this fund strategies, and like it's completely meritocratic. Like they don't have to like they have like 10 years of experience in like banking or something. You just need like a strategy which makes money. Yeah.
Last thing for you, how excited are you for Mega ETH mainnet and the other chains building on EigenDA?
Oh,
I know you guys are shipping throughput there to a whole nother level. How's that going?
Oh, it's going amazing. I think I'm so excited about Mega ETH. Like the bunch of apps which are like are going to be launched is crazy. Like GD, Euphoric, like all these apps are going to build, like just unlock a new category of like builders at this point. So I'm very excited. Yes.
Awesome.
Gajesh, thank you for your time, man.
Yeah, sure thing.
That was fun.
Thanks for having me.
Incredible story.
Pulling me in, yes.
Incredible story.
See you next time.
I think when I was 7, I was playing. I don't know what I was doing. I was probably playing soccer.
You weren't vibe coding?
Well, it's not vibe coding. All right.
Yeah,
come on, bud.
Okay, yeah, it's fun.
Come on.
Nice socks.
I should bring story socks here, huh?
Here we go.
Yeah.
I don't have story socks, so I don't want to be doing a product placement for another company.
No. Just hide those. We'll give you the wristband too.
Cool.
This will get you into the.
Great.
That'll get you into it.
Shit.
That's the way.
Oh, no. Okay, this is great.
That'll get you into the Rollup happy hour tomorrow.
Wow.
All right, SY.
Is
What's
it
going
is
on,
it working?
man? Yes, sir.
Is it working? Awesome.
Big news, huh? OKX Ventures story.
Yes.
Tell us about that. What's the actually just kind of walk us through how that happened. What was your thought process when you had the idea? You wanted to build this out, build this $10 million fund with them. What's going on?
Yeah. So I think really important thing about the success of a chain is having successful protocols being built on top of it, ecosystem applications. And we wanted to find a partner who had a really good liquidity distribution that kind of is aligned in the vision and can help us list the projects that are coming on top of Story and are becoming very successful, more in an accelerated path. Obviously, there's no guarantee and there's no promise here, but you know, because the OKX Ventures team is very, very closely working, collaborating together to handpick these protocols and ecosystems and investing together, they will have a more direct line with the team there. They have a massive wallet, they have a massive exchange, and having that close relationship between the two teams and being able to fund these companies together is very exciting. And we'll be soon, I think, within a month, announcing the first investment from that fund. But not, so it's going to take time, like 3-4 weeks. But already there's a kind of a winner. Yeah.
Maybe you can shout some of your most favorite and exciting projects coming out of the Story ecosystem. Who are you most excited by? We've had conversations with quite a few.
Yes.
Is there any that stick out to you that are doing things a little bit different, a little bit more unique?
So I think there are two things that I'm very excited by. First, several, but I just want to pick out a few. First is we've been already talking about it a lot. A company called Aria Protocol. It's an IP tokenization protocol. So IP is a massive asset class, like a $70 trillion asset class. But it's actually everyone from Blackstone, KKR, PIMCO, this massive private equity or asset manager, they all have a massive music catalog funds. The reason is it gives you stable yields like treasury, T-bills, or real estate.
From royalties.
For royalties. So set 5 to 15% depending on the music asset. And it's going to be a steadily increasing asset because there are more streamers coming in from India to developing countries. It's always going to increase. So it's a very, very investable asset class that where you have a stable yield spitting out the yields, but there's a really good capital gain path or an exit path by these music catalog companies from private equity funds to huge labels like UMG. They want to actually buy out these assets. So that they gave that access to crypto users with stablecoin investment from Justin Bieber Peaches to Blackpink music and all these other types of music pieces that are really, really top. So we have Taylor Swift songs, we've had Madonna songs, right? We're going to expand that, right? They're going to be kind of announcing further 50 to 100, $150 million TVL with exciting labels, exciting funds coming in. So that's, I think, one very, very exciting protocol that's on Story. And a second is there are companies, a category of companies that actually has authorized IPs and be able to make derivatives on top of this IP with AI remixing. So there's a company called Ablo. It's they have Crocs, Balmain, they have Dvance, and these IPs are registered on the blockchain.
Yeah.
And you, with almost like you vibe code, you actually with remixing tools, you can create derivative 𝘗𝘁𝗦𝘬𝘗𝘓. You can make a derivative shoes or derivative whatever, very, very easily. Now kind of the belief here is that if you have an IP Lego piece with programmable IP rights attached, with AI tools, you can make very exciting creation very easily. Back in the days, the best you can do when you have these IPs, make a fan fiction or fan art. But now you can create not only just this kind of derivative merch, we're going to have actually vibe-coded games. So we're talking to we're onboarding a Korean game developer called 𝘱𝘭𝘐𝘳𝘵. Actually, it allows you to create, games on top of someone else's IP, vibe-coded within an hour, very high fidelity, almost semi-Pokemon Go level.
Yeah.
Very, very quickly. Right. So we're going to be showing those games, how they can be created very easily, very soon. Second. Third is we are, this is kind of an alpha, it's something that's going to come soon. But we think there's a very exciting space in data. Data meets AI meets kind of IP registration licensing. So all these AI model companies have insatiable demand for data. So all the model architecture is commoditized, DeepSeek to OpenAI. And compute is monopolized by NVIDIA, and it's just commodity, right? You just, if you have more money, you just can't get it. But everyone is looking, especially for the physical AI model, robotics models, or kind of the models that are building on the world of atoms and bits, because the data that you want for your robotics companies, you cannot just get from crawling on the web. Like you holding this cup for like different angles for like 10 hours, or you're just typing on the keyboard for 12 hours with different lighting, different kind of angles. This is really hard to get. Right?
This is why Facebook bought Scale AI.
So, but also at the same time, these are all private data. They want a safe IP license.
Yeah.
Like, imagine you are trying to put your iPhone videos and someone's going to use it. Like, there's a massive IP risk.
Yeah.
Right. All these things, right?
Yeah.
So they want like a explicit declared IP rights of this data that's being trained upon for these new frontier AI models beyond LLMs. And so story serving as an IP layer, but also building exciting ecosystem, having an exciting ecosystem application that incentivizes and coordinates collection to labeling and all these things on crypto rails.
Yep.
Is something that we're very excited by, and hopefully we can share.
And what is that one called?
I can't. You're good.
Oh.
So the other thing that I think that's why that you're getting really interested in and pushing forward on is on like outside of OKX, but within this institutional realm of coming on and bringing their assets on chain.
Yes.
Onto Story.
Yes.
What can you tell us about that? What's the latest update there that you're willing to share?
Yeah. So
how those conversations been going?
I think there is a huge appetite on, especially kind of the creative IP owners, because the funding is getting more and more difficult for these IPs, but they want to utilize the crypto rails for this global financial liquidity bootstrapping. Also, so even memes are IPs. Right? I think the reason why Trump meme coin is so successful is a verified it's like Trump IP verified coin. Right? Because it's Trump himself launching. It's my IP.
Right.
Being put on crypto.
But how does that so that's Trump, but tie us into the institutions here a bit more.
So it's because of that I think we're talking to very exciting funds which hold big music catalog or record labels.
I see.
Have a music catalog, or actually Hollywood studios that holds mega IP, but they want to actually create a spin-off. And can you actually launch this spin-off in a meme coin style, raising money, actually launching a coin, but there's a revenue burning, like if actually that IP revenue IP revenue gets created, that actually comes into buying back the token in a buy back burn style, like Hyperliquid does. So then you're using this IP. You have not just meme coin; it's an IP coin. IP coin, where I'm launching as an IP owner, and actually there's some revenue tie into that IP.
That's why I'm curious. You've been in the restaurant business, the education business. Now you're entering the crypto foray. Like, what is the next? Like, when you set your sights and your motivation approach to the industry, what do you set your sights on? What is your next? What is the inspiration, the motivation that keeps you going and pushes you forward?
So right before this company, I've been working on a company at the intersection of storytelling, mobile, for 8 years, and I sold that company to a big Asian tech company called 𝘗𝘁 4 years ago. That was capitalizing on this shift to mobile, right? Basically, everyone is going to read and consume content on mobile. That content is going to be episodic, bite-sized, and that's going to actually utilize mobile native business model like Candy Crush, where you pay micropayment per chapter per episode. If you wait, it's free. If you don't want to wait, you pay 30 cents per chapter with in-app currency. So that was the model. But now I think there are two big angles here at the intersection. That was an IP company, IP and new technology. I think the new technology is crypto and AI, right? IP and crypto. I think crypto is best at financial rails, like global financial rails, investing, trading, right, and speculating. So that bet within the IP space that made most sense is IP RWA. So that's why we have Aria. We're trying to bring more and more more stuff at the intersection of IP and finance. The other very interesting thing within the IP vertical that intersects with AI, the biggest growing subcategory of IP is, I think, data sets that are needed for AI models. And so I call it like real world data IP, real world data, right? That data. The first generation of data that was sucked in by AI model companies are web content. To be honest, they're not very respective of IP rights. No. They just gobbled up the internet. They're just completely fucked over IP rights, ownership rights around this IP, and they just gobbled it up and they just spit out a bunch of IP infringing content. Even like a Studio Ghibli owner should get some attribution or get some revenue off of all the Studio Ghibli, created, inspired content, right? Remixes. Yeah, remixes that are coming out. I don't think they got it anything right. No. Yeah, but okay, that train we want to fix as much as we can. But I think the most also interesting field that we can capture right away is now all these companies from Tesla, Optimus to 11 Labs. They're yearning for real world data to train their model. Point of view, egocentric video footage of yourself,
your voice, everything,
your voice, all these things, and they need like 12 dialects, 20 dialects for 11 Labs. All their things, they are looking for those data. They want it to be IP safe, explicit consent that can be put on blockchain. So those things, I think, if someone who brings what Scale AI has done on chain, especially now that Scale AI is getting rescinded all the contracts by other competitive AI companies, but also using almost like Axie Infinity style crypto incentives to bootstrap all the data collection from different parts of the world, including the developing world. I think it's going to be a massive opportunity and make it IP safe and IP verified. So that one is super exciting for me and the company and the story team, because that is an opportunity coming out of the new AI trend. So the crypto trend, AI trend, and what crypto and AI can do well. What is that intersection between crypto, AI, and IP? So that's keeping us up at night, and that's what we're focused on. That's our IP RWA. That's actually data layer for AI companies using crypto incentives and immutable blockchain that's actually declaring IP rights on that.
Yeah. That's why, man. Really appreciate you joining us and having this conversation.
Yeah.
Looking forward to the next couple months with what you guys do.
Yeah, we'll have more announcements coming from probably like mid to late July, and then maybe we can catch up.
Yeah.
Yeah, man. I'll be around at the Korean conference in September.
Yeah, well.
I hope that you're there.
Of course, we'll be doing some exciting things there.
Awesome.
Yeah, awesome.
All right, that's why. Thank you, sir.
More to share. Thank you.
Thank you so much. See you soon.
See you, sir. Alrighty, guys. I think that about does it for the day.
Closes us out. Yeah, that was a
What
good
time
one
is
too.
it? 4:30. I need a beer.
I think we call it. That was great. SY's a legend. We had several legends. Where SY's getting his
6.5 hour stream.
SY's getting his portrait right now.
We got our money's worth from Marcelo and the boys.
SY's taking a picture of his portrait.
Thank
They
you,
love
guys.
it. Brendan's wide-eyed from absolutely drawing his hands off.
Guys, thank you for tuning in today. It's been an absolute pleasure. Day one. We'll be back day two. Final thoughts. Don't really have any. I'm just mentally ready for tomorrow. So thank you, guys.
Yeah. Thank you so much tuning in. The longest stream of all time.